Hi guys, so this is part 2 of CA Inter Audit Marathon for May 23 examinations. Please listen to this introduction without skipping for a few minutes. Before you watch this part 2, I sincerely request you to watch part 1 Audit Marathon first. Because part 1 and part 2 put together, we have covered approximately 24 hours of marathon for CA Inter Audit. And believe me, you have to watch these marathon classes in a structure. So, I'll just show you right now the part 1 marathon. If you just go through the YouTube channel, okay, CA Harsha. So, inside that, if you open playlist, you will find a playlist with audit revision May 2023. Getting it? You open this, you will find a video here. Just I will show you here. Just I will show you here. The orders. If you see that we have given timestamps for part 1. First, I have given brief overview where I clearly explain how to download the material for which we have used in this marathon. What are few precautions you should take so that you get the maximum benefit from this marathon. Then fundamentals, nature, objective and scope, company audit, audit report, and some standards, CARO, 143 checklist, society's audit, and documentation standard. So these were covered in part 1. Now in part 2, we are going to cover, in the part 1 introduction 0, introduction timestamp, I have clearly mentioned what chapters we are covering. Whatever chapters that we already covered in part 1, apart from that, remaining chapters, whatever I told in the marathon that which I will cover, so is covered in part 2. So whatever pending things which I told that I will give as part of marathon, all that were covered in part 2. Getting it? So believe me, you are going to enjoy the subject like anything, the audit, like never before. You will never have this much clarity after listening to this marathon. I bet even if you're a regular student of some other institute or some other, coaching center, this marathon will give you a superb clarity and command on the subject. By the way, please watch this video at standard playback speed. Don't try to fast forward. This is already a revision class, which is already fast. Your thought process should be productive. Your thought process should be perfect. You should connect to the subject, connect to the lecture, pace everything. Only then you digest the subject faster. If you watch the class at higher speed, you need to revise multiple times. If you watch the class at standard playback speed, you will require less number of times revision. That's a basic principle. Now, so one important instruction before you watch part 2, please cover part 1 correctly, thoroughly. Getting it? And this part 2 is going to be around 12 hours. Timestamps will also be provided below the description. This material can be downloaded from, you can see here on the top of mine, there is a logo called Srestha for CA and CMA, white color app. So just download in that application. There is a Play Store application in that. You just download in that application this material. Okay, you just download and take a print of this. This is colored notes. This notes I will be making it available from February 2023, second or third week onwards. Whereas that's it. Main material is also at some places we have used the main material. This colored notes you can download PDF at free of cost. So I just want to give a bare introduction. And by the way, this revision class you can absolutely follow for May 23 and November 2023. So I have already uploaded part 1 in January, somewhere around 24 or 25. This is part 2 video, which I'm uploading on 29 or 30th of the January, which is applicable for May and November. And further, for May 2023, if any amendments comes newly from the RTP, we will provide a new video. That's it. And I will guide gradually what strategy that we should follow in audit so that you get maximum benefit. Okay, so please continue watching from Audit Evidence. Like you in this video, 12 hours, whatever is there, watch in the same order. Don't try to deviate from the order. Directly open the timestamps, select some choice of your chapter. No, don't do that. That is very unstructured, unorganized learning. We have given timestamps for convenience sake. First time when you watch the revision class of mine, how do you watch others classes? I don't bother. My class of audit, if you want to get superb command, watch in the same order in which the video plays exactly or the timestamps were given. Okay, I hope you will obey this instruction and watch and get maximum benefit. And after you listen to this or while you listen to this, wherever you felt like impressed or whatever, please put it as a comment here so that this video will be recommended to multiple students who want to get absolute clarity in audit. Okay, take care, have a nice time. And by the way, one more thing, Most of the students, again, they prefer revision classes as a substitute for regular. Believe me, this is revision class. This is not good for first time learners. If you're a first timer, better come and take our auditing regular course of CA intern. Getting it? So below the description, we have given the phone numbers. You can even find here, this phone number. Here you can reach on WhatsApp or Telegram for getting regular course. Regular in marathon, you get 50% clarity, which you don't even get anywhere. In a regular class, you get not only clarity, you get command on the terminology, you get very huge grip on the subject. That's completely different regular classes. If at all you are a repeater already, I think this marathon will serve you. While listening to this, if at all you are thinking about, okay, I want little more command, little more clarity, then you can think about our regular class. Okay, so the material resource I told, and above all this is part 2 video, by the way. Part 1 is already there in the playlist. I showed, this is the playlist. This is
covering in this classroom. This will give you that enough.
This is the playlist in the YouTube channel of Harsha. So in this playlist, part 1 you will find. So please watch that part 1, then continue watching this video. Okay, so continue watching. Bye bye. Take care.
So we have completed the documentation part. Only documentation topic we have completed. We still have to discuss regarding evidence topic and further audit procedures topic. Nothing but that is a topic covered as part of SEA 330. Getting it? Now, so let's first go through evidence topic. See, like first we started this chapter with a discussion of audit procedure. What is an audit procedure? So first of all, what is an audit procedure? It's nothing but verification procedure. Why we do that? Why we are applying some procedure? Why we are applying some verification procedure? In order to get evidence. In order to get evidence. Now, whatever the evidence that we are gathering, we need to save it right. We need to store it, and that is called documentation. So documentation is the storing of evidence, recording of audit evidence obtained, conclusions reached. Yes or no? That's it. Now, evidence is nothing but this is the information that we want. Whether the balance sheet P&L, are they showing true and fair or not? Are they reflecting the true picture of the company or not? We want to verify. So, whether they are reflecting true and fair or not, we need background data. Is this balance sheet item, is it correct? P&L item, is it correct? Income, expenditure, asset, liability, are they right or wrong? We want evidences for that. So that evidence is nothing but information. Information which auditor wants is broadly classified into 2 types. Information which auditor requires in audit is broadly classified into 2 parts. One, accounting records. One, accounting records and other records. That's it. One is accounting records. The other one is, you can say, other information. Broadly, auditor, whatever he want, it will be classified either of these 2. Suppose I want purchase voucher. Company recorded in books of accounts, some purchase transaction. I want background proof. That's an accounting record. Purchase voucher, purchase invoice, all, supporting documents for accounting is accounting record. I want to see what are the decisions taken by the company during board meetings. And I want to see the board meeting minutes. That will be treated as other records or other information. Getting it? You see, definition of audit evidence. So audit evidence may be defined as information used by auditor for getting some conclusion so that he can base his opinion. It includes both information contained in accounting records as well as other information. What do you mean by information contained in accounting records, like journal entries, supporting records, ledgers, journal entries, adjustments to financials which are not reflected in the journal entries, worksheets, spreadsheets, cost records, computations, whatever management is maintaining to show that they have done this accounting. For every journal entry, they would have some background calculations, background workings. Everything will form part of books of accounts. And what are other information? This is something which authenticates accounting records. For accounting records, who is signing, who is having the authority to pass journal entry. You will find that in policy manuals. So other records is something which will contain information about authorizations, policies and procedures of the company, all that. Minutes, written confirmations, internal control policies and procedures, all these constitute other information. Audit evidence consists of both. Able to understand? Next. Now, what information auditor can use as audit evidence? Information that is used by auditor, right? This information who will provide? Information can be provided by the company or the company's expert. Information can be provided by the company or company's expert. Apart from this, we will get information from third parties, external confirmation. See, we are discussing here SA 500 topic. 505 is a separate topic. Audit evidence means it's 500. Now, so when using the information produced by the entity, auditor shall verify whether information is reliable for auditor purpose. So regarding accuracy and completeness of the information, whether the information whatever he is getting from the organization, is it accurate, is it complete, you need to verify them. Whether the information is sufficiently precise and detailed for the purpose of audit, whatever information necessary, whatever the clarity in the information is necessary, is it fully existing or not. Suppose some journal entry has been passed. Below, narration is required. Why narration? That explains the transaction. What we think is, narration is something just for namesake. No, narration is explanation for the transaction. Narration is what? An explanation for the transaction. So the transaction will be explained little bit detailed. That is called narration. Able to understand? Same way, sometimes we will get valuation reports. Suppose company has valued closing stock. That stock valuation has been performed by some expert. Some valuationer has performed that work. So he is employed. He is employed by management. So we call him as management expert. Okay. Now, whenever, whatever information we want to use as audit evidence, suppose, if at all it is prepared by management expert, before you believe that evidence, before you use that information, look at the competence, capability, independence of the expert. How far this expert is reliable, and what is his work, what is his scope of work in this organization, for what purpose he was employed, and see the appropriateness of the work of the expert. Like how this expert is working. Suppose some valuation has been performed. We will see, is it performed by a registered valuer who has been registered with NISM, stock exchanges. We will check. Is he having a regulatory authority? We will check all that. Getting the point? If at all he is governed by some rules and regulations, law and regulations, we naturally believe that he would have done the work with utmost care. Next. Suppose, if at all, when you are collecting the audit evidence, you are getting some doubts over the reliability of the information. You got some information and you are feeling that information, how far it is reliable, you are getting some doubts. You are unable to trust that information. What auditors shall do? If information obtained, evidence obtained from one source is inconsistent, nothing but not consistent with evidence obtained from another, or if the auditor has doubts over reliability, you need to perform additional procedures so that you can resolve the matter. Getting the point? Suppose scrap records, they have not maintained properly. But what management is telling me is that entire scrap generated is sold. The sale value of the scrap is this much. Some 10 crores they are shown. But when I apply my analytical procedure, I discovered estimated scrap value is 15 crore. Getting it? Whereas the books of accounts shows how much? 10 crore. Whereas another source of information for me, what it says? 15. Now when there is a difference, what should I do? I need to work additionally. Which is right, which is wrong? Or are these both wrong? Something else is there which is right? So I need to work additionally. That's what additional procedure. Getting it? Now, why audit evidence has to be obtained sufficiently? First of all, because it is necessary. Only then your opinion and report can be supported. Getting it? Tomorrow, if someone someone approached and asked you, how come you said everything is true and fair? You need to prove, right? You need to have some background documentation, supporting evidences you require. That's why auditors should obtain sufficient and appropriate evidence. So this includes information obtained from other sources like previous audits, external confirmation, whatever. Accounting records of the entity are very important source for audit evidence. All these are important for correct or incorrect questions, true or false questions. Evidence comprises what? Information that supports and corroborates management's assertions. What is management's assertion? Assertion means what? Below we have a topic on assertion, there I will discuss. Assertion means, see, there are something called negative assertion, getting it? Assertion means, right now I'm speaking something, I'm asserting something, getting it? I'm highlighting something, that is also an assertion. I am not highlighting something, that is also an assertion, that is called negative assertion. Able to understand? Assert means what? State something, express something. It may be oral or written. Yes or no? Financial statements are there. Management is giving so many disclosures inside them. Management is, keeping so many amounts, classifications, presentations, disclosures. They are giving so many things. They are writing so many transactions in the books of accounts. All these are what? Assertions made by the management. But remember, financial statement is not treated as assertion. But inside financial statements, there are so many amounts, transactions, balances, ledgers, right? They are treated as assertions. They are treated as what? Assertions. Next. Sometimes absence of information may also constitute audit evidence. Example, suppose I want to get a confirmation from third party. Management is denying me. They are objecting me. Now management is objecting me to get some evidence. This itself is an evidence that management is doing some fraud. This itself is an evidence that management don't want me to do audit properly. I will give disclaimer of opinion. You gave disclaimer of opinion, right? What is the proof? Management is not letting me to do the audit. That itself is the proof. And how you can get evidences? I may inquire people, or I may look at the record. I observe what management is doing in the physical verification, counting, observation. I will get confirmation from third party. I recalculate the invoice totals, ledger totals, books of accounts, all that. I reperformance the controls, or I do analytical procedure. All this we have little bit in-depth explanation later. Getting it? That's it. Can you switch on the fan? Yeah, perfect. Next. Now what do you mean by sufficiency and appropriateness of audit evidence? So sufficiency and appropriateness of audit evidence. Why auditor has to obtain sufficient evidence? So that he can reduce the audit risk. So what is audit risk, first of all? Have you seen the definition of audit risk? What is audit risk? Everyone? Risk of expressing an inappropriate. That's it. You are missing the most important part of the definition. When the financial statements are materially misstated, this is most important part. What is audit? Risk. It is a risk of expressing an inappropriate opinion when the financial statements are materially misstated. First of all, logically tell me, what is risk in audit? Suppose financial statements are completely misleading. Company position is worst, but they are showing as best performance. Okay. So I discovered and I gave adverse opinion because some financial statements are completely worst. The management is doing so many frauds. So I straight away told every shareholder, do not believe financial statements. After I gave the audit report, later, so many frauds were discovered. So many frauds. Will anybody come and question me? Hey auditor, what you did when you are doing audit? Will anybody come and question me? Hey, that's what I told, no? Don't believe the financials, they are not true and fair. Is there any risk in this kind of opinion? When I am giving adverse opinion and later every fraud has been discovered, will anybody question me? If nothing discovered, no problem for me. If everything discovered, also no problem. Are you getting the point? But when the people will ask me the questions, when do people question me? Suppose I gave unqualified opinion or I gave qualified opinion, maybe. Actually they use the word unmodified, but it's okay, even if it is qualified. But the financial statements are completely, misleading. I am supposed to give a negative opinion, adverse, but I gave positive. I gave a positive opinion. And later some frauds were discovered. People will start questioning me, hey auditor, you gave everything is true and fair, but see, so many frauds are happening, what are you doing? Now tell me how difficult for me in this case. So when do we have audit risk? When the financial statements are materially misstated and you are not giving appropriate opinion, but you are giving inappropriate opinion. Tell me, when financial statements are materially misstated, what is appropriate opinion? But I am giving inappropriately which opinion? Exactly. So this definition is expressed in another way. When the auditor expresses an unmodified opinion, when the financial statements are materially misstated, so that is audit risk. Why this arises? This definition itself says why this arises. So why do we give, sir, inappropriate? When financials are completely wrong, why we give unmodified? First of all, you may get a doubt. When you are saying financials are misstated, why do we give in that case unmodified opinion? Financials are misstated, but is there a guarantee that you discover them? Is there any assurance that you will discover all the mistakes? The financials are, I agree, there are many material misstatements in the financial statements. There is a risk of mistakes. But is there any guarantee that you discover them? Detection risk. What is it called as? Detection risk. Financials might contain material mistakes, but you are unable to detect them. And you are unable to detect them because of which what you are doing? You are giving unmodified opinion. When the financial statements are materially misstated. So that's called audit risk. Audit risk is a function of risk of material misstatement and detection risk. So logically framed the definition. Understood? Everyone? So why we want evidence? We want to reduce this audit risk. Reducing audit risk means what? Audit risk means what? It is a risk that my opinion will go wrong. Correct? Huh? Audit risk means what? It's a possibility that my opinion may go wrong. Correct? Huh? I want to reduce this audit risk. What do you mean by that? I don't want my opinion to be wrong. I want my opinion, whatever I'm giving is as much as possible accurate. I may not give 100%, but I want reasonable assurance. I want sufficient appropriate evidence that tomorrow if somebody come and question me about my audit integrity, I will prove with the supporting evidences. For which I need sufficient evidence, right? That's it. Okay. So sufficiency is a measure of quantity. Now, quality of such evidence, getting it higher the quality, generally less quantity is required. And how many evidences we want, it depends upon the assessment of risk. Suppose when I'm doing risk assessment, I found so many risks in the organization. I naturally perform more works. I naturally get more number of evidences. Correct? Huh? The following factors influence about sufficiency, materiality of the transaction, balances, presentation, disclosure. If the item is very material, we get for sure evidence. If the item is less material, we don't get that much evidence. Risk. If the risk of MMS is very high, then naturally we get more evidences. If the risk of MMS is low, we naturally get less evidences. Here they have given risk of parts, that is not required in this chapter. Now population, size of the population. If the quantum of transactions are too many, generally evidence collection will increase. If the quantum of transaction is very less, evidence collection will decrease. But remember, will evidence collection increases in the same proportion of increase in quantum of transactions? Example, suppose I did audit of one company where they are having 10,000 vouchers total. There I selected a sample of 200 vouchers. There I selected a sample of 200 vouchers, which I verified for audit, which means I verified 2% of the population. Later I was appointed as auditor for DMart. They are having 3 crore vouchers, invoices. Will I verify 2%? 6 lakh vouchers will I verify? Is it possible? So, the evidence collection will not increase in the same proportion of increase in quantum of transactions, nothing but population. But evidence collection will increase. But it will not be increasing in the same proportion. Are you getting the point? Now, not only sufficient, you must also get appropriate evidence. You must also get appropriate. Appropriate evidence means what? Relevant. Relevant evidence. And not only relevant, it should be reliable. Are you getting the point? Suppose whether credit sales are accounted properly or not, whether sales made on credit properly accounted or not, I verified sales audit. I did sales audit. Almost so many transactions I took sample and I saw whether they were accounted properly or not. Getting it? But will this be a relevant audit procedure? Will the evidence which I am getting here, will it be a relevant audit evidence to confirm outstanding balance with a particular debtor? I am verifying sales transactions, sales vouchers, GST bills relating to sales, all that I am verifying. Is this relevant evidence to confirm debtor's outstanding balance? When I verify sales, will I get clarity about debtors? No, right? Understood. When I verify sales, I get clarity only on, but not on the, from debtor's point of view, sales verification may not be a relevant audit. From debtor's point of view, I need to directly contact the debtor. I need to verify the entire transactions made with such debtor. Remaining sales is unnecessary for me. Correct? So, whenever, what is your purpose of audit, first you should identify. What is so the moment you decided to do some work, when you are verifying something, what is the objective of this work, first you should ascertain. Accordingly, how you should work on this, you should decide. So that is called appropriateness of audit evidence. Now, whether an evidence is reliable or not, it is influenced by source, it is influenced by nature. And the source and nature varies in different circumstances. The source and nature reliability will be different in different circumstances. Suppose if I am getting from external source, it is more reliable generally. Nature, if it is in documentary format, it is more reliable. If it is original bill, it is even more reliable. Able to understand? Now, from where I can obtain the evidences? Evidences can be obtained from outside, external, or from inside. That point only here. No much, explanation in that. Now, what are various audit procedures to obtain audit evidence? What are various audit procedures to obtain evidence? Getting it? Now you see here they have seen inspection, observation, confirmation, recalculation, analytical, inquiry. Tell me, these items, these all subparts, do we apply them separately or cumulatively? Cumulatively we apply. Suppose I want to verify physical inventory. Will I only go and physically see the inventory by, will I only go and observe it? No. I will inspect stock record there. If I have doubt in understanding, I will inquire management about how to understand this inventory counting. Am I doing inspection in inventory? Am I doing inquiry there? Am I observing the premises? Am I physically counting it? If possible, some inventory is lying with third party, I will get confirmation from third party. I will cross check with last year records and I will see whether what is the significant changes happened. Why last year only 10 lakhs is there, now only why 30 lakhs inventory? What happened exactly? Analytical procedure. Are you getting it? Now management is counting already. I will ask them to stop and I will once again count. That's re-performance. Are you getting the point? All these are cumulatively done by the auditor. These are not individual. But whatever we do, we are giving names to it. Are you getting it? Now I am teaching class, right? You are all observing me. Yes or no? You are inspecting this material simultaneously with what I am teaching. You are getting it out, you are inquiring me. Correct? And you are analytically thinking whether whatever I told is, matching with your understanding earlier. Analytical procedure. Are you getting it? Whatever you are doing, I am giving names. That's what it is here also. Getting it? So, what is it? Enquiry. First we look at. Enquiry means what? Enquiry means asking information. To whom you will ask information? To whom you will ask information? You will ask information according to you according to you with whom the information is available. Yes or no? Where are the accounting records? Will I go and ask the security guard? Yes or no? Hey, can you explain me how accounting entries are passed? Can I go and ask marketing head? So whom you should ask information according to you, that information is with whom? That knowledge. So enquiry means seeking information from knowledgeable person. He may be financially dealing or non-financially dealing. Suppose you want to know how production happens. Here knowledgeable person means production, non-financial person. You want to know how company sales strategies are. You will talk with marketing person. He is a non-financial. You want to know how books of accounts are maintained. You will talk with accountant, who is financial person. Able to understand. In exam, one of the question has been asked on this. Exam or empty page or somewhere. Which of the following is true? Option A. Which of the following is false? Option A. Enquiry is used extensively throughout the audit. Option B. Enquiry may range from written inquiry to informal oral inquiry. Option C. Through enquiry, we may get information not previously possessed. Option D. Enquiry consists of seeking information from unknown persons. Last option. When you can observe that enquiry means asking information from unknown, only when you observe all these sentences thoroughly. Only if you understand the sentence thoroughly, you can answer that kind of MCQ. Correct? So, enquiry is used extensively throughout the audit. Correct? Obviously, without talking, how can audit do audit? Obviously, auditor will be talking and auditor will be asking so many questions. You don't know anything about the organization. So, what is the only way? I will inquire. I'll ask questions. Enquiry means nothing but asking questions. Understood? So, enquiry, how I may inquire? If I have some requirement, I will do a WhatsApp message. It's a written inquiry. Correct? Or it may be oral. I will ask him orally. Now, response to inquiry is an integral process, evaluating. Why do you ask question? To listen to the answer or to listen to the answer and react on that? So, whatever the response you are getting, that is not the objective of inquiry. You get some response, right? You need to check whether what is that response. Suppose I asked accountant which software he will use for accounting. He said some SAP. To listen to that word, I am asking this question. No. Okay, what is SAP? That is my next question. He'll again reply. I'll ask him, show me how it works. He showed me 2 examples. Again, I'll ask him, show me few more examples. So this is a continuous process. Now, after he replied, I'm evaluating it in my thought process and again asking another question. Relevant question, correct? So that's what. Evaluating response to inquiry is an integral process. So what we get in inquiry? We get information which is not available with us, or we may get information which is different from the information we have, or we may get information, or it will give information, response to inquiry provide basis to perform additional work. Based on the answers that we are getting, we may do additional work. Getting it? All of you. That's it. Now, this question has been asked in one of the exam. I think recent only, May attempt only. When you are inquiring about management intention, Again, I'm telling you, since it is asked in the last attempt, this time it will not be asked. No, don't have that assumption. Getting it? I don't know who told you this. Nothing such. Getting it? There is no such kind of thing. Like when examiner is setting the paper, there is no instruction for him that, hey, last attempt, whatever questions come, don't ask. No, nothing such. Getting it? It may be asked in the last attempt. It may be asked 10 times. It will be asked now also, if at all. If it is important according to the paper setter. Paper setter, whoever is there, whatever he feels important according to him in the real life, he will ask that kind of questions. Getting it? Just because in the last exam it was asked, he will not skip it. First of all, he will not see the last exam 3 papers and then set the paper. Understood? So, generally, no. Suppose company is using this projector example for 5 years. The company has purchased a projector for 5 years. They put a estimated useful life of how much? 5 years. First we will check. No, I asked them why useful, why it is for 5 years. They said management intention is also to use it for 5 years. It will come for 7 or 8 years. Actually, it will come for 7 or 8 years actually. I asked management why you are not showing for 7 or 8 years. Management strictly told, no sir, we will use it only for 5 years and thereafter we'll discard. We will not use it beyond 5 years. It may come 10 years or 11 years. But after 5th year, performance will come down. So better we will write it off within 5 years. Then if at all after we sold it any scrap value, we will account it. That's a management intention. Now, do we get any evidence for this intention? Generally, can we get any evidence for this intention? No. We will generally not get any evidence for this intention. How do you get evidence for intention of the management? Maybe for this particular intention, I may not have evidence. But in the past, they have applied their intention and chosen some actions, right? How far they stood on those actions? How far they how far they achieved those intentions? I will check the past history. Management's past history of carrying out a stated intention. Why management is choosing only 5 years? Why not 7 years? Do they have the ability to purchase specific course of action? Like they want to say after 5 years they will discard. Check, will they really discard it or not? Able to understand. See, although corroboration of evidence through inquiry is of particular importance in case of inquiries about management intention, information available may be limited. So no, management intention, if I ask, the information, the evidences supporting data which I get is very limited. In these cases, auditor shall understand how in the past, whatever intentions they have chosen, how far they carried. Now they are choosing some intentions, how far they will have the ability to fulfill. Getting it? And why? What is the reason? Why specifically they choose 5 years? Everywhere, whenever the management says some estimate, or whenever management says its intention of the company, ask them clearly why. Able to understand? All of you. Suppose if a land is there, management said the intention of the purchasing the land is for value appreciation. Getting it? Who knows? Now the land has been purchased February month. As on March 31st, they classified it as investment. But who knows? Management may have an internal thought. Hey, let us not reveal the auditor. Next month we will use it for constructing factory. If a land is purchased for business purpose, what is it? Fixed asset. But they are saying what? We have intention of value appreciation. So we will keep it under investment. Now for this intention, is there any proof? As on 31st March, no work has been started on land. But maybe the intention is for fixed asset. But they are showing it as investment and telling us the intention is investment. Able to understand? So how do you know? So that's why in audit, whatever we give is what? Reasonable assurance, not absolute assurance. Next. And for whatever management is taking intentions, we will get representations. And wherever auditor feels, whenever he is inquiring, he is getting some response, right? he will get representation for that. That's it. Next, inspection. Inspection means what? Looking at the records. Getting it? Inspection of records provides different levels of reliability depending upon the nature and source. If it is original record, we get more reliability. If it is external record, we get more reliability. Observation means what? Looking at a process. In observation, no, we get evidence, right? But it is limited to the point of time at which observation takes place. Only when observing, that work is going on. So evidence is very limited here. Next, when I am not observing, what is happening? Who knows? External confirmation, will discuss separate standard. Getting it? Analytical procedure, we have a separate chapter. There we will discuss. Next, recalculation means what? Checking mathematical accuracy of records. Reperformance means what? Execution of procedure or control that originally performed. Management did physical verification of inventory. I will once again go into physical verification. That's called reperformance. That's it. Next. First, fan switch off. Yeah. So observations to be kept in mind. You can read this later. Various types of audit evidences. Nature, visual, oral, documentary. Source, internal, external. And remember, internal, external evidences are the substitutes or complementary. So you need to read this matter. Getting it? Now, appropriateness means what? Relevance. And it is talking about reliability. Relevance means what? Logical connection. Okay. For, a given set of procedure may provide evidence that is relevant to certain assertions but not for others. This example I even mentioned in previous thing. Suppose when I ask for external confirmation from debtor, he confirmed me that he has to pay 10 lakhs. Now the confirmation gives me evidence for existence assertion. That confirmation is not giving me with regard to valuation. How far I can recover. That I am not having evidence. So a set of audit procedure may provide evidence that is relevant for certain assertion but not for others. Getting it? And remember, test of controls, no, we do in order to understand operating effectiveness of controls. So we design test of controls in order to identify conditions which indicate performance of a control, deviation in a condition which indicate departure, like nothing but we try to perform test of controls in order to identify deviations, in order to identify where the controls are not working properly. Substantive procedures are performed to detect ultimately the misstatement. Only when I actually verify the voucher, I discover whether there is a mistake or not. Next, reliability. Reliability. These are general standards of reliability. Evidence obtained from external sources, independent sources is more reliable. If internal controls are very strong, evidence generated internally is also reliable. Evidence obtained directly by auditor from the third party is more reliable than it is obtained through client. Evidence obtained in documentary form is more reliable. Evidence obtained in original document is more reliable. Now, how nature, timing of audit procedures will affect, especially when accounting records are available in electronic form. See, in electronic, of course, nowadays entire recordings are in electronic. Now you see, you're purchasing in DMart, right? DMart or Reliance Digital Store. They give you invoice. Invoice will be very lengthy, long, big document. Yes or no? Like electricity bill, it looks like. Bit wider. Correct? After 1 or 2 months, you go and tell them, ask them to print the invoice once again. They can't. Getting the point? Invoice will not be retained by the organization. Organization will not retain. They will only have invoice summary. They will not have which item sold to, on which date it was sold. That information they will not be having. In the background, they will delete. Same way, entire store is being recorded by CCTV cameras, right? Every action is recorded. Do you think it is retained permanently? They will delete it after 3 months. It is nothing but data retention policy. So, for Reliance Industries, whatever balance sheet revenue from operations, P&L, revenue from operations shows, that breakup is actually sales of various goods. Now that sale invoice you can't find. Able to understand? This is one difficulty, especially in large entities, getting it, where the source document may not be available at a later point of time. So that is what. See, some electronic information, accounting data and information may be available only in sometimes electronic form, or may be available only at certain period of time. So sometimes information may not be retrievable after some period of time. So because of this, auditor may find it necessary to perform audit procedures at the time when the data is available. If you want to verify sale invoices, come for audit very early. Yes or no? Don't come up to after 31st March. Come little early. You will find all the sales invoices. After 2 months, we will delete after the transaction. If you want to verify any sale invoice, you have to come within 2 months before it was deleted. Or what auditor can do? Auditor can request management to retain for more information, to retain for more period for auditor's review. Like this, a question can be asked. Are you getting it? Next, what are audit procedures? So I told you already, audit procedures are broadly risk assessment procedure and further audit procedure. Yes or no? So further audit procedures means what? Test of controls and test of details. Test of controls means what? Why test of controls are performed? When I think substantive procedures alone cannot provide evidence. Substantive procedure alone cannot provide evidence. See, there are thousands of purchase transactions. How many I'll verify? I'll verify 100 hardly. How do I know that every purchase is processed correctly? So that's why first what we should do? We should observe the controls for purchases. First we should observe the controls, how purchases are processed. I will look at the system. If the system is disciplined, I will randomly check some items. Everything is matching with the system. I'll get more assurance. I'll get more assurance. A higher level of assurance may be sought regarding effectiveness of control when the approach adopted consists primarily test of control, in particular where it is not possible to obtain sufficient only from substantive procedure. Only by verifying transactions, vouchers, bills, documents, I will not get assurance. In such a case, by combining it with the test of controls, I'll get more level of assurance. Now, to what extent I will test controls? All direct controls I will test. How the controls were applied, consistency, by whom and by what means they were applied. Generally, if it is applied through, by what means? If it is applied through computer, no, it is generally consistent. If a control is applied through computer, it is generally consistent. Very simple. One of the example of control is, you go to Reliance Trends again. Trends or whatever, any store, Puma, Nike, whatever, any showroom, getting it. They have electronic billing, no? You ask them to give discount. Sorry sir, system will not accept. Have you heard of this? Why system will not accept? It's a control in the system. System will not accept means what? You can't edit that rate also. You can't edit discount also. That's inbuilt in the system. Getting it? Who created this? Is it a control or not? Control means that only. Are you getting it? Control means not bone, chain. Getting it? Next. Sometimes one control operation is affected by another control. In such a case, you should also check the effectiveness of other controls. Example, this system I can log in with my employee ID. And only if I log in, I will correctly process the data. If somebody else will also log in my ID, they may process wrong data. Correct or not? In such a case, I need to look at login, logout controls. Who are logging in, who are logging out? This is called general IT control. What is this called as? General IT controls. A specific application controls are generally influenced by general IT controls. So you need to get how environment is, how the general IT environment is. Able to understand? So how do we get evidence regarding test of controls? I will inquire, along with it I will inspect. Inquiry combined with inspection gives me more assurance than inquiry and observation. Rather than I inquire and observe what he is doing, I'll inquire and I'll look at what exactly he did in past. That gives me more assurance. Now, if you want more assurance, then more testing is required. Increase the testing of controls. Yes or no? So to what extent I will test controls? This itself can be asked as a question. To what extent the auditor? What is the extent of test of controls? What are the factors that influence? So this answer you need to write. Getting the point? See, since it is revision, we cannot cover all these points. Understand? Now, what is the timing of test of controls? You may test at a particular point, or you may test them over a period of time. Or you may want an evidence about how control is operating effectively on a particular point, or you may want an evidence about how control was operated in the past 3 months. Getting the point? Based upon this, to what extent you have to test the control also will influence. Next. Can I use the evidence obtained in previous audit? This question has been asked many times. Suppose last year also I am the auditor. Last year I tested controls in the organization. They were effective. I got evidence last year itself regarding operating effectiveness. Now this year once again I am doing audit. Should I once again test all the controls? It depends upon the length of time that may lapse before retesting a control. Last year when I tested, now when I am testing. Now there is a time gap, no? Is this enough? Check it out. Suppose if the time gap is too much, which means I may have to retest again. So between the last time testing and now retesting, what is the length of time? Is it lapsed or not? Check it out. In addition to this, how far other internal control elements are effective? What are elements of internal control? What are elements of internal control? 5 elements are there. Control environment, information systems, control activities, monitoring activities. No? Haven't you? This is there in risk assessment internal control chapter. Getting it? That's why. Getting it? That's why you need to read, understand everything. You read 10 times, 15 times, you don't remember. You need to understand the things. See, this sentence, the moment you read, you need to get back to that. Are you clear? Next. How far general IT controls are effective? If general IT controls are very effective, normal specific controls will be generally effective. If any staff changed, then I will have to test the control. Because last time the control was effective because so and so person was there. Now that person was not there. Getting it? Or lack of change in a particular control, that's not required. Risk of MMS and reliance you want. If the risk is high in this year, you may test control. You want greater reliance, you will test the control. Getting it? Finally, how do you evaluate the controls? Finally, after you test the controls, how do you evaluate the result? Tell me, if at all you verified the controls and you verified the balances as well, test of details also you perform, you did not find any single mistake. Does it mean controls are highly effective? If I did not discover a single mistake, does it mean controls are effective? Not necessarily. Maybe employees are honest. Suppose if there is a material misstatement, can I say control is weak? Yes. Obviously, because of some control check failed, mistake happened. Mistake doesn't happen, doesn't mean control is super. Able to understand? So, misstatements detected is a strong indicator existence of deficiency in the internal control. So, whenever auditor identified deviation from the control, whenever Auditor identified deviation. What are the specific inquiries? All these questions were asked in past 4-5 attempts. May 2019 or November 2019, this question was asked. What are the specific inquiries to be performed if auditor detected deviations from the controls? Evaluating the operating effectiveness and conclusions of the controls. This question has been asked. Automated electronic form. Some records may be available only in the electronic form at a period of time like that. That question has been asked. Getting it? Then, what is substantive procedure? Now here it is there. Substantive procedure means what? Test of details. Substantive analytical procedure. Details means what? Actual transaction and balances. Now tell me, generally, irrespective of assessed risk, whatever the risk you assessed already, it doesn't matter. You shall design and perform substantive procedures. For sure you have to perform substantive procedure. Because assessment of risk is judgmental. First of all, understand. You may think it is low risk, but in reality it may be high risk and so many mistakes might happen in actual transaction. So actual transaction testing is compulsory. That's what I told. Test of controls, test of compliance procedure, substantive procedure, they both are complementary. Again, they are not substitute. Able to understand? And there are many inherent limitations to the controls. Getting it? Now, what is substantive analytical? Should I perform substantive analytical procedure again? See, like here you see compliance procedure, substantive procedure. Here inside you see test of details, substantive analytical procedure. Now, test of details is compulsory irrespective of effectiveness of the control. Getting it? Now should I also perform analytical procedure? I am doing test of details, no? Should I perform analytical, or can I only do analytical in the substantive procedure without doing test of details? Yes, in some cases you can do where assessment of risk is supported by test of controls. Nothing but you predicted risk, but the control is effective. In such a case, auditor may only perform analytical procedure. Suppose in some cases only test of details are appropriate, or in some cases combination of substantive analytical and the test of details will be best, most responsive, best response for assessed risk. Scrap value, how much it is sold, how much it is generated, I will inspect every record. That is test of detail. And I will logically calculate how much entity can generate. Estimations, that is analytical. Both if I do, it will give me more powerful evidence, more greater assurance. Suppose if the organization controls are excellent. Organization controls are excellent. There is no scope for even 1 rupee fraud. I will just see whatever the amounts. Analytical, I will see are they logically right or not, I will check. And I may not actually verify the transaction. It's okay. Your choice. Whether you want to do test of details and analytical procedure both, or you only want to do analytical procedure, or you only want to do test of detail, is your choice. Getting that? That's it. Now we have few more questions. Financial statements, closing process, what details you will test? I will test especially adjustments made. I will test especially material journal entries that were made during the closing process. Now, what substantive procedures you will perform in order to respond to a significant risk? Now, what is a term assertion and what are various classes of assertion? Assertions means what? Assertion is something in representing that the financial statements are in accordance with financial statements. Applicable framework. Assertions are something which are represented by management. They may represent implicitly or explicitly. They may imply regarding recognition, measurement, presentation, disclosure. Now, what is assertion from auditor point of view? These are used by auditor to consider different potential misstatements. Suppose when I am checking at a transaction, I will look at when the transaction was occurred. Did all the transactions accounted? Are they recorded at right amounts? Are they recorded in the right accounting period cutoff? How are they classified? Is it revenue from operation or other income? And when I'm looking at balance sheet items, is it really existing? Look, asset is right of an organization. liability is obligation. And I want to check whether all the assets and liabilities are accounted. And I want to see how the value of the asset, how the value of liability was arrived. Whether provisions were allocated rightly. So when I'm checking balance sheet item, I not only see whether the asset is available or not, I see its value. I see how it is classified. I see whether everything is correctly accounted. I will look at its rights and obligations. Ownership documents I will see. Getting it? Presentation and disclosure. Same. Suppose we are presenting or disclosing some contingent liability when it occurred. Are we disclosing all contingent liabilities? If it is a provision or contingent, how are they classifying? And are they understandable? Are they accurate? And the valuation has been correctly done or not? Now remember, these assertions were there, right? They have given assertions for transactions. They have given assertions for balances. They have given assertions for presentations and disclosure separately. But you may use combination also. You may use combination also. Able to understand? You see, the auditor may use assertions as described above, or for example, you see, the auditor may choose to combine assertions about transactions and account balances. You may combine and verify. Assertions may be explicit or implied. Assertions may be explicit or implied. For this, no, I'll show you my main book. Yeah, you observe this regarding assertions. Yeah, suppose you see in the balance sheet, no, in the balance sheet under current asset, there is a cash in hand rupees 8,000. Some amount we found 8,000. You know what is it asserting? What management is asserting here, you know? The management is saying the firm means the company, society, whatever. Firm means business. Had 8,000 in hand in valid notes and coins on balance sheet date. The cash was free. This is available for expenditure. The books of accounts also shows a cash balance of identical amount. In the balance sheet, cash in hand 8,000 rupees means these are all the assertions they are making indirectly, impliedly. Understood or not? Example 2. Machinery 2 lakhs less accumulated depreciation. Totally net ability in 1,17,000. You know what management is asserting? This is balance sheet. In balance sheet, this portion we took and showing you here. Now, balance sheet, this is containing, now what indirectly it says? It says it is our own plant and machinery. The original cost is 2 lakhs and the machinery physically is existing. It is used for the business of the company. Total depreciation charge is this much. Amount of depreciation is, correct. It is based on periodicity, whatever concept. These many things they are asserting indirectly. Understood or not? Now, assertions may be implied or explicit. If I say simply loan 4 lakhs, is it secured or unsecured? We will get it out. If I say secured loan, it's an explicit assertion that the loan is secured. Negative assertion. Suppose no. In the balance sheet, there is no contingent liability mentioned. It's indirectly negative assertion. It is what management indirectly saying impliedly. There are no contingent. Suppose, explicit negative assertion, implied negative assertion. Again, explicit negative assertion, implied negative assertion. Suppose I don't have contingent liability. In the notes to accounts, we clearly mentioned, company do not have any contingent liability. It's a negative assertion. We don't have. It's a negative assertion. Explicitly we are saying. Suppose I don't have contingent liability. I didn't even talk about that in financials. That is implied negative assertion. Here they have given example. Suppose company do not have any building at all. And in the plan, in the fixed asset case, you did not find the word building also. Indirectly, what does it mean? Company don't have. It's an implied negative assertion. Able to understand? All of you. That's it. With this audit evidence documentation, entire this chapter is completed. You see, true or false questions were also given. This is the main material. This is the main material. All of you confident? That's it. Okay. So this topic is now regarding fraud and responsibilities of auditor. This is nothing but we are discussing SA 240 standard. SA 240 standard. You know, the standard heading is auditor responsibilities relating to fraud in an audit of financial statements. What are all the auditor's responsibilities relating to fraud? They are not saying auditor is responsible for fraud. The statement is what the standard heading, if you look at the responsibilities of auditor relating to fraud in an audit of financial statements. What are his responsibilities is what covering under this standard. First of all, tell me everyone, what is the responsibility of the auditor primarily? The auditor is only responsible to give opinion whether the financial statements are true and fair view. Yes or no? Whether the financial statements are free from material misstatements. Getting it? The responsibility for auditor is whether the financials as a whole are free from MMS. First of all, primary responsibility for prevention of fraud is with management, those charged with the governance. What the standard says, SA 240? SA 240 says, auditor shall maintain skepticism throughout the audit. It says, don't believe straight away everything given by company records, everything. We question it. Question it. Critically evaluate it. Critical assessment, we call it as. There is a concept called skepticism, no? What is professional skepticism? Professional skepticism is an attitude of questioning mind and critical assessment of audit evidence. Yes or no? Being alert for situations of possible fraud, being alert in case evidence conflicts with another evidence. So professional skepticism is required to reduce the risk of overlooking or risk of overgeneralizing. Have you seen these words? So risk of overlooking means what? Suppose I visited a factory and I found so many employees wearing different color uniforms. If I don't look at them carefully, will I figure out? If I don't observe that and just moved on, that's called overlooking. Overgeneralizing. Overgeneralizing means don't apply one principle to other principles. At one control, company is operating well. Don't apply that everywhere else is also they're doing the same. Production department is working very proper. They're following all the rules and regulations, controls. Don't generalize that to sales. Don't generalize that to so and so place. Alert everywhere. Able to understand? Maintain that skepticism everywhere. Don't overgeneralize. That's what the meaning. Able to understand? Now remember, you need to keep in mind the risk of not detecting a fraud is higher than risk of not detecting an error. Further, fraud, no, it may be sophisticatedly carried out. Getting it? And they were concealing it so cleverly, it is more difficult for you to detect, if at all it was involved by collusion. And identifying management fraud is greater than identifying employee fraud. Not identifying management fraud is greater risk than employee fraud, because management is generally in a better position to manipulate records. They stole some inventory, and in the books of accounts also they passed as dummy sale entry. Book balance of inventory, physical balance of inventory, both will match. You will not get a doubt. When do we get a doubt on inventory? When we counted physically and when we find a shortage. When will you say it is shortage? In the records it shows 1000 units. Here it shows 950. So there is a shortage, so I got a doubt. But records and physical both are matching. Will I get a query? Will I get a doubt? No. Now, whether auditor will detect a fraud How far an auditor detect a fraud? So you see, is auditor responsible for detection of fraud means this standard is not saying anything like that. What are they saying? Auditor is responsible for giving opinion. He is responsible to maintain skepticism. Management fraud is difficult to identify than employee fraud. Fraud itself is difficult to identify compared to error, especially when it involves collusion, all that. Management is primarily responsible for preventing, detecting frauds. Finally, whether auditor can detect or not, it depends upon the perpetrator's skillfulness. Who committed the fraud? How far he is skillful? How much collusion involved? What is the size of the amount? Experience of the person? Frequency. If the fraud is committed more frequently, it can be easily discovered. Tell me, if out of 10,000 transactions, 100 transactions fraud, 1%, the probability to discover them is 1%. Suppose if out of 10,000 transactions, only 10 transactions were fraud, the probability to discover is 0.1%. Simple probability, mathematical equation. Getting it? So, especially in judgmental areas, wherever management judgments, especially accounting estimates, in that whether any fraud happened or not, it is extremely difficult for auditor. Getting it? Suppose if a mission useful life actually is 7 years, but management intentionally used it, recognized as 5 years. Who knows? Especially frauds relating to management judgments, estimates. Who knows? We can't even identify evidence for that. So, auditor has to be careful in evaluating every aspect. Now, is auditor liable if at all any fraud was discovered later? He gave unqualified opinion, he went off. Later some big fraud was discovered. Is auditor accountable? It will exist. He is accountable only when that failure is clearly due to not exercising reasonable skill and care. Only when auditor is not properly exercising skill and care, then only he is responsible. So after completion, if a fraud was detected, that itself cannot mean that auditor did not perform the duty properly. If auditor can prove with the help of working papers, then he cannot be held responsible, like he has conducted audit in proper manner. I did my due diligence. I applied sampling properly, scientifically, everything I followed correctly. Still I could not discover. What can I do? Able to understand, if I am able to prove, that's why documentation is important. So this is what the standard actually starts with, SA 240. Now we need to understand what is fraud, what is various types of frauds that are discussed in this chapter. What are various types of frauds? What is a fraud? First of all, it's an intentional act. Yes or no? Committed by individuals. Maybe management, top management, employees, or third parties. Getting it? To get some unjust or illegal advantage. To get some advantage they do. Yes or no? Now, remember, the word fraud is a very big concept. Criminal Code procedure, Indian Penal Code, the word fraud has a different meaning. Companies Act section 447, the fraud has a different meaning. But in the audit, what is fraud meaning as per SA 240? Because of that activity, because of the fraud, there is a material misstatement in the financial statement. We are only concerned about which types of frauds? Those types of frauds which causes a material misstatement in financial statements. Suppose management gave a fraudulent report while they are going to start one big company at one forest area. Now there they need to give a environmental some report, some certification they need to give. There they manipulated the certificate, figures, everything. That this particular company establishing there, do not danger, do not damage that environment. Like that we got fraudulently some certificate from the authorities and submitted to the government and got the license. Is this type of fraud auditor concerned with? Will it affect any material misstatement in the financial statements? These are civil frauds. These are purely administrative frauds, operations related frauds. We are not concerned about that kind of fraud. But look, if you come across that kind of fraud, if you came across that kind of fraud, you have to report. When if you have came across. But is there any responsibility for you to discover such a kind of fraud? We are concerned only with those types of frauds which causes material misstatements in the financial statements. Understood or not? Next. Now, the standard divides the frauds into two types. Financial reporting fraud, misappropriation of assets. Because of these two, a material misstatement will arise in the balance sheet or P&L. Suppose some goods were theft, stolen, inventory. When goods were stolen by some third party from the warehouse, physical goods balance will show lesser balance. But in the records, we have not recorded the theft. So, book balance will show higher value. The same balance will go to the balance sheet, right? In the balance sheet, it is showing inventory value 10 crore, but in go down, it is only 9.5 crore physically there. Now, is balance sheet overstated or not? So, because somebody misappropriated, balance sheet got overstated. Able to understand? Or fraud may be fraudulent financial reporting. It is also called as manipulation of accounting records. It is also called as manipulation of accounts or manipulation of records. Company intentionally manipulated the records. Sometimes both together might happen. The company CEO himself, arranged some thieves and stole so much of inventory. And later, the companies which are having big, higher position, they need not do all this. Higher people management. Suppose CEO, I am a CEO in a company. I approved one vendor. I approved one, customer. I told my marketing people and my sales team that they are very good people. You can sell the goods on credit. Our company built the goods on credit for 1 crore. Getting it? And goods were sold to him. Later he is not paying. I only treat it as bad debt. I'm just a CEO, not a shareholder of the company, not a director of the company. I'm not having an ownership in the company. I'm getting salary from this company and I can do these kinds of frauds, yes or no? Are you getting the point? Suppose this company want to purchase so much of raw material every month, every year. So much of raw material. From whom we have to purchase? I will finalize the vendor. I will finalize the vendor. Actually, this vendor is ready to sell the goods at 100 rupees per unit. But I will tell him, don't sell at 100, charge 150. Okay, I am the one who will approve the contract here. I will approve. And you will get 150 per unit. During the year, 150 crore worth of purchases we made. And the entire 150 crore was paid by the company. I am the CEO. I am the one who approved the vendor. I'll ask him, pay me 20 crore commission, you keep 30 crore commission. He'll pay me 20 crore in the back end. These are called kickbacks. Able to understand? These kinds of frauds happen. So these are all misappropriation of assets. Unauthorized usage of entities' assets. Unauthorized approvals. Are you getting it? Overriding the controls. This is actually what? Overriding the control. The control which I have. Shareholders out of trust gave me a control that I should authorize every vendor. But I am misusing it. I am abusing my control. Able to understand? Remember, fraud is intentional. Fraud is intentional. That's it. Now, why people do fraud? Why? Why management or employee or third party? Why they do fraud? There are three factors. It's not even factors. There are three cumulative reasons. People do fraud because they're having some pressure. Suppose a person is stealing goods. He's having some financial obligation. He's having some personal financial obligation. And that created a pressure in his mind. Okay, dude, it's okay. Everyone are doing today. So his attitude is being rationalized. Since everyone are doing, he's also doing. Rationalization of the attitude. Because of the pressure and because of the attitude, only these two are not sufficient. We need an opportunity. Yes or no? We need an opportunity. For a bank cashier, if at all he's under severe financial pressure, if at all his attitude supports, he's having large amount of cash access every day. Because he's the one who is accessing cash. He's having opportunity. Yes or no? Can he easily do the fraud or not? Only if these three present, there must be a need for you, obviously. Your attitude should support, and you must have an opportunity to commit a fraud. Opportunity means what? Way. You need to find a way to do a fraud. All these three met, fraud will happen. Are you getting the point? Now what auditor has to identify here? I need to check in the company whether any of the top management, are they under pressures? Now these pressures, no. For doing manipulation of records, the pressures are different. For manipulating assets, the pressures are different. Suppose I have personal need. In my family I have some financial trouble. I'll steal cash. I'll try to get some benefit from the company. But here I don't have such kind of problem. I'm having competition issue. My company performance is shown very poor. But outside public are scolding like anything. Shareholders are like, pressurizing me like anything. That the company is not performing well. And moreover, I want to go for public issue next year. What I'll do here? Fraud. Which type of fraud I'll do here? Will I steal cash and all? What I'll do? I'll manipulate records. I will manipulate accounting records. So, the risk factors that create pressure to commit fraudulent financial reporting, the risk factors are different when compared with misappropriation of assets. So the opportunities for misappropriation of asset, the opportunity for fraudulent financial reporting, pressures for misappropriation and fraudulent financial reporting, rationalization or attitude for fraudulent financial reporting or misappropriation, all these three factors are different. Able to understand? All of you. So pressures, what are they? Fraudulent financial reporting occurs because when the management is under pressure to achieve earnings target. Opportunity, when an individual believes internal control can be overridden. I'm a CEO and I was given the control, I can override. Some individuals may be rationalized committing a fraudulent act. They possess an attitude, they possess a character, they possess some kind of values that allow them knowingly, intentionally to commit dishonest act. Next, how fraudulent financial reporting is committed? Why it is committed and how it is committed? Why it is committed, we have seen general reasons. Now, why fraudulent financial reporting is committed? Why? This type of fraud is generally committed for various reasons. Like avoiding payment of taxes. They have given some, silly reasons, but we need to write the same reason in exam also. Because suggested answer contains the same reason. The person valuing the paper will not have this much idea. If you write your own answer, he will not have an idea that it is your own answer. Getting it? Declaring dividend when there are no profits. Company want to declare dividend, but there are no profits. So company will show higher profits and declare dividend. That's the interpretation. Next, withholding dividend even there are enough profits. I have so much of profits, but I don't want to declare dividend. That time also I'll do fraud. And for receiving higher remuneration, especially when the remuneration is as a percentage of profit. I'm a director, I was promised to pay remuneration as a percentage of profit. So naturally, I assume I want profits to be higher. So I'll get more remuneration. How they do fraud? In what way they do fraud? I will inflate purchases expenses. I will inflate purchases expenses to show reduced profit. Or I will suppress purchases and expenses to show higher profits. I will omit outstanding liabilities, prepaid expenses depending upon the need. I will charge capital expenditure to revenue or revenue to capital. Intentionally I do all this. Misrepresentation. I will intentionally omit important transactions and events. Or I do apply wrong accounting principles, wrong accounting policies. I take wrong accounting estimates. Able to understand? Now, this fourth point can be asked as a straight question. Fraudulent financial reporting often involves management's override of controls and can be committed by using various techniques. What are they? They'll ask you this question. You need to write the below points. Fictitious entries they'll record, especially at the end of the year. And they are changing judgments, accounting estimates and all they will change. How fraudulent financial reporting will be performed by management. Accounting estimates they'll do frauds. Journal entries fictitious they'll pass. or they omit recording some transaction, they will postpone recording. I mean, they will record now itself. Some transaction of next year, they will record now, advancing. Delaying current year transaction, they'll record in next year. Conceal, not disclosing facts. Okay, they'll conceal some information. Contingent liabilities, they'll conceal. Contingent liabilities, they'll not disclose. Complex transactions, they will enter into to misrepresent the position. Like, suppose I don't have sales in this year, but if I go with that kind of profit and loss account with lesser sales, people, may not invest in my company properly, or I will not get loans. What I will do? I'll create 2 subsidiary companies. Getting it? I'll sell to one subsidiary company. They will sell to another subsidiary company, and that company will sell me after 31st March. Before 31st March, I will sell to one subsidiary. They will sell to another subsidiary. They will sell me back again after 31st March. But as on 31st March, I have sales, no. Are you getting the point? Huge volume of sales. Next year again, I purchased back. Or they will return me the goods after 31st March. I will sell them goods on 30th March. Lorry will go. Goods will be dispatched. Goods will be delivered. I'll have 15 to 20 days credit period, or 1 month credit period, or 3 months credit period, some condition I'll put. After 2-3 months, they'll return me the goods. Able to understand? So for this year, my objective is fulfilled. Last year, my income was high. Profits was high. I'll go for a bank loan, get huge amount of loan. Later, sales were returned. Business was no more. I will abscond from India. Getting the point? No, this is not happening only in India. Across everywhere else, this is how it happens. Getting it? People think in India, the crime rate is high. No, India's crime rate is very low compared to many other developed countries. Many developed countries, the crime rate is extremely high. You can see crime rate, you can just Google it. Having highest crime rate countries. India will not be there in the top 5 or top 6 also. Somewhere later. Getting it? So across many other countries, the crime rate is higher, and that too in the developed countries. Getting it? There is a saying, in United States and all, people are worried to travel after 8 o'clock. Because everyone carries gun there. Getting it? The petrol bunk and all, a person will come and show gun and take cash and go. This is very common in US. Many countries it is, developed countries it is common. Too much of freedom is also danger. What induces management employees to commit fraud? What makes people commit fraud? Financial obligations. Management's unrealistic goals. Management is pressurizing me that I am not achieving sales target. So what I did? I created a dummy sale. Next, dissatisfied employee. Employee was not satisfied. He may do a fraud in the company because he is having grudge over the company. Name game, like management using power by asking employees to do something illegal. Opportunity to commit a fraud. Because of all these reasons why we do fraud. Sometimes I may not have pressure, I may not have intention, but that opportunity creates me a pressure. That creates me an incentive. Getting it? Next, what is misappropriation? It's nothing but theft. Yes or no? Generally it happens in small amounts. Theft of assets and all happens in small amounts. Almost all IT company employees and all will be doing this kinds of frauds every day. All IT employees. They go to TCS, Wipro, Infosys, they'll give pencils, notebooks free of cost. They'll bring home and his children are using it for homework. You know that? Next. So misappropriation of assets, no. They can be in many ways. What are they? Receipts. I can do a fraud in receipts. Or I will steal physical assets. Or some intangible assets. Or I will make the entity to pay for goods and services not received by the organization, dummy sales. Or I will use entity asset for personal use. And remember, misappropriation of asset accompanied by misleading records is even more difficult. If inventory was shortage, I can easily discover by comparing with records. But if records are also simultaneously manipulated, how can I discuss? How can I discover? Are you getting the point? You see, this is what happened in scam 1992. Have you seen scam 1992? In that, he will do 500 crore bank fraud. The person who assisted him, the person, temporarily in order to hide, he will go and manipulate the record also. In the back end, he will go and manipulate the number also. Getting it? So, it is very difficult for them to discover. Getting it? Now misappropriation of goods is more or less same. Getting this you read, you will understand very easily. Now defalcation of cash. In cash, what kind of fraud we can do? I can do cash fraud through payments like fictitious vouchers or inflated vouchers. I can do fraud in wages. I can do teaming and ladding fraud. Teaming and ladding, I think you might have understood already. Getting it? I receive from one customer. I use it for my personal purpose. When company is asking me, have you collected Mr. Recovery Agent? I will say, yes sir, I am collecting tomorrow. Tomorrow I will collect from another and I will say from person 1 I collected and then give it to the company. From person 3, whatever I collected, I will allocate to person 2. Person 4, I will allocate to person 3. This is called teaming and ladding. So, unauthorized or fictitious rebates or discounts. Unauthorized, fictitious rebates or discounts. Like I'm giving fictitious rebates, nothing but like, suppose customer paid me. These are all happens in olden days when the transactions are dealt in cash. When the owners are actually away. I am the manager of the company and I am the one who managing the entire company. We will do these, the people do these kinds of frauds. They're like what? Suppose we sold goods on credit to one customer for 1 lakh. The customer came and paid 1 lakh cash. But I will record in books of accounts as customer paid only 98,000. He asked for 2,000 discount. I gave 2,000 discount. My owner also says, okay, it's okay. He recovered no at least. But 2,000 fraud I did. Able to understand. Writing off as bad debt in respect of cash which is already received. Some small amount is there from one customer, 10,000 we have to receive. He is not responding. He is not responding. That's what I'll tell to owner. But actually he responded, paid also. But I will write it off as bad debt. So all these are various frauds. Remember, in big companies and all, shareholders are not in the company. First of all, understand. 50% ownership in a company is not by shareholders. See how important audit, how important this audit function should work, how honestly auditors should work. I'll tell you a simple example. Reliance Industries Limited is having how many crores turnover? Approximately 5 lakh crore turnover. They are having a profit of 30,000 crore plus. 30,000 crore plus. Getting it? In this entire company, approximately 50% ownership is by you and me, general public. Getting the point? Which means 50% of the company assets are owned by not Ambani and his family. But see, it is not discovered anything, but what kind of authority they have, you can check it out. Suppose company has to purchase oil from outside the country, crude. They need to purchase and refine it. Now, they can enter into a transaction with the other person. Every year, let us assume company is purchasing approximately some gallons of oil. Getting it? Barrels. So many barrels there. One barrel is equal to 100 liters. Getting it? Suppose company is purchasing every year approximately 1 crore barrels oil. In respect of each barrel, please increase the price by 100 rupees. Enough. Suppose the company had entered into a contract with a person who is there from somewhere, Russia or some other person. Yes or no? Just increase by 100 and send that oil to the company. We will approve it. So, we paid 100 rupees extra per barrel. 1 crore into 100. 100 crore profit I got there. Just because I am a director in a company. Able to understand? You think corruption is high in the government? No. That's very small compared to this kind of activity. In big listed companies, all this happens. Auditors, that's why we have to be very careful. Of course, even you try to discover all this, it's impossible because you are given 1 crore audit fee in a very big company. Getting it? It's impossible for you. So, now what this person will get? Sir, now how he will receive this 100 crores? Sir, he will not receive, man. He will tell the other party from Russia, buy that property in Russia. Buy that property in other country. Binami. He'll create binamis everywhere. Able to understand? So this is how it happens. I'm just giving you a small example of fraud they can do. 100 crore is a very small fraud in big companies. It's a very small fraud, petty fraud. Imagine what kind of big level frauds will happen in companies. Are you getting it? Now, why auditors has to be very careful? Now you understand. You are doing It's not an ordinary job. See, in private companies and all, it's okay because people are owners only managing the business. But in public companies, listed companies, owners are not managing the business. Getting it? Owners are away from the business. Shareholders are away. Able to understand? There are somebody who is managing the business, and see what kind of, you need to look at their intention. You need to look at their, transparency. Now, companies, they adopt tenders. They adopt a tender mechanism. We see tenders, whether company have fixed vendor by using tenders or not. We will see that control. Only lowest tender company has to select. But with every other supplier, they'll have a contract. Whoever is quoting tender, please quote for 100 rupees a year. That's it. With everybody, they'll have a issue. So many frauds they can do. Understood? Not only in government, in every enterprise, these frauds happens, especially wherever others' money is involved. Getting it? They will also have their point of defense here. Why are you doing fraud? You are getting decent money, no? They'll have an argument. I am the one who is bringing the business here. They'll have an argument. Honestly speaking, directors are the one who are doing the business, correct? They are the one who are doing the business and distributing profits to all the shareholders, creating wealth. So, when we are creating lakhs of crores of wealth, it's okay to eat hundreds of crores. That's what their defense. Getting it? Next. When you are going for public issue, when the company is listed, when you have access to large amounts of public funds, you are not only having authority, you are having so many opportunities. Think of it. It's how many ways the people can do fraud. Next. So, these are all risk factors, right? These are all risk factors. So, what are fraud risk factors? The fraud risk factors are pressures, opportunities, and attitudes. It may be a pressure or it may be an incentive, motivation to commit a fraud. Next. Now, for misappropriation of asset, what kind of opportunities I have? What kind of opportunities? I am dealing with large amount of cash. It's an opportunity to commit fraud easily. Or I am dealing with inventory which are small in size, high value, high demand. I am working in jewelry shop. Able to understand? I am having easily convertible assets. I am a stamp vendor. Fixed assets which are small in size, marketable, lacking observable identification of ownership. This water bottle you take. Is there any ownership mark on this? By looking at this, this bottle is owned by Harsha sir. Can you say that? This is one which is lacking observable identification of ownership. So, on almost the assets that we see, they will not have any title deeds. They will not have any title recognition criteria. Suppose if there is a land, there is a title number. Title deed is there. Mobile's IMEI number is there. Some items we will have some ownership recognition criteria. But many assets will not have. Able to understand. Employee attitude. The person who is committing misappropriation of asset will have these kinds of attitude. He is having no commitment for monitoring. Misappropriation. The person do not have that commitment to monitor this. He disregard. Means, disobeyed the controls. He is having dissatisfaction with the entity. I am a purchase manager working from so long years. Company is not giving me increment. Let them not give. I will approve one vendor. I'll get lifetime money in one contract. Able to understand? Sudden changes in behavior or lifestyle. If an employee has suddenly changed in lifestyle, if a person has sudden change in lifestyle, either he might have won lottery or he might have done fraud. Getting it? Next. Tolerance for petty theft. In an organization, small thefts are happening and the management is also tolerating it. This attitude shows me a risk. It's a risk that in this company there is a possibility of frauds. Able to understand. All this I do in risk assessment. We have to check all these points in risk assessment. Are you getting it? Next. Personal financial obligation for an employee, which is creating pressures. Why employees again they do fraud, no pressure. What creates pressure on them is future layoff. Yesterday in Wipro, 300 employees were fired because of moonlighting. Moonlighting means nothing but like working in more than one company without employer consent. Generally, the companies, whenever they are giving you employment opportunity, there is an implied condition, express condition as well in the employee terms and conditions that he should not work anywhere. But after this work from home, since I'm working from home, who knows where I'm working? So I applied for another job. Wipro also appointed me, Infosys appointed me, TCS. There are some people who work for 3 companies simultaneously. They'll have 3 laptops. Getting 2 laptops they'll have. Or they'll have only 1 laptop, 3 windows they'll open, 3 companies they'll be logging in. Able to understand? Now, when the Infosys manager called me, are you working? Sir, I'm on the laptop only. Can I switch on the camera? Yeah, you see. Yeah, I'm working, sir. Same he'll respond to TCS, same he'll respond to Wipro. And he's getting salary from all the 3 and not working for any of the 3. Honestly, correct? Huh? So, these kinds of employees were recently discovered by Wipro and then fired off. So, changes to employee compensation and benefit plans. Suddenly, employees were given no increments. In fact, whatever salary they are getting, they decreased it. Compensation, promotions are not expected, not as per the expectation. You might have seen in movies, no? Hero, suddenly his friend will be their best friend or his PA. Yes or no? Somewhere out of accidentally, this hero would have missed him. And this fellow is the ultimate villain in the company. You might have seen these kinds of situations. Next. So these are the opportunities, pressures and attitudes for committing theft, misappropriation of asset. Now, for fraudulent financial reporting, the pressures, opportunities and attitude is again different. In exam, you will get an MCQ. Which of the following is not a pressure for conducting fraudulent financial reporting? They'll give you 3 pressure points relating to misappropriation of asset, or 3 points relating to this. They'll give 1 misappropriation of asset related point they'll give you. You need to pick that one. So you need to have clarity. Is this a pressure which makes employee to commit manipulation of records, or is it a pressure that makes him to steal the company goods, steal the company property? So you need to figure out clearly. When you're reading it, understand in that way. Are you getting the point? Now, companies facing huge competition, high vulnerability to changes, decline in customer demand, operating losses, negative cash flows, new regulatory norms. Because of all this, I felt very pressurized and I will manipulate accounting records. Are you getting it? Huge competition. My company is not being recognized. My efforts are not being recognized. I'll do frauds. Next, opportunity. How can I manipulate records? Through related party transactions. Through accounting estimates. Through complex transactions. Or by operating in tax haven jurisdiction in order to save taxation, tax payments. Getting the point? Attitude. How do you find management is having an attitude of manipulation of records? See in the past history. Did they violated with any of these norms? Check it out. Management is showing too much interest. That profit should be higher. That itself is a risk factor. That itself is an indicator that management want to do a fraud. Management, they know some deficiency in internal control, but they fail to put a remedy. So management is intentionally, taking it easy. The internal controls and weaknesses. They are employing inappropriate means for reducing earnings for tax motivated reasons. Here, this point has been asked for 4 marks in past. The relationship between management and the predecessor auditor is strained as exhibited. What factors exhibit that the relationship between management and the auditor may be current auditor or predecessor auditor, the relationship is strained, means affected? What factors? How do you find? Frequent disputes with the auditor. Unreasonable demand on the auditor, like unrealistic time. Sir, last year auditor completed audit in 15 days. Why are you taking 25-30 days? Restrictions on auditor that inappropriate limit access to people. Sir, don't disturb them, they're working. If you want to come audit after 1 week. Management, whatever I'm trying to do, they're continuously finding fault with my work. Management domineering behavior, domination. So all these points reflect that there is a dispute or the relationship between management and auditor has been strained. Are you getting the point? Next. Now, Sometimes no, inadequate internal control over the assets. On the assets, controls were not adequate. This increases the susceptibility, means possibility of misappropriation. Can you explain? Can you please explain what are that kind of inadequate internal control examples? Inadequate segregation of duties. What is inadequate segregation of duties? You go Saravana stores. The person who is billing, the person who is taking money, the person who is packing the goods are different. Correct? The first, as soon as you took articles and go to the billing counter, first one person will check all the articles and scan it. Then that entire basket will move to the another person. He will once again check the bill inside entire items and will go to the another person. He'll give you token, you have to pay money, and the another person will put it in the cover and then close that cover and then give you. Only at the exit gate, security guard will cut that cover. Yes or no? Have you seen that? The tag will be there so that you can't open the bag inside the store. Why you should not open inside the store? So that you will not put another article. Are you getting the point? So, why this kind of segregation of duty was there? Why this kind of segregation of duty? If at all 3-4 persons together separately employed, fraud will happen only if all 4 of them collude. Now you may say, sir, all 4 of them can easily collude. No. These 4 of them were meeting today only. How can they do fraud? Why? Because they are rotated. They are rotated frequently. Rotation of duties. So inadequate segregation of duties. Getting it? Inadequate oversight of the top management expenditure, especially senior management expenditure. No proper, nobody will question them. That itself is a risk factor. Records are not adequately keeping. Physical safeguards over assets. Security systems were not there. Cameras were not there. And lack of timely and proper documentation of transactions. On time, we are not recording every transaction properly. We are just recording sales, but we are not reconciling. We are not physically verifying the stock. These are all various inadequate controls over assets, due to which the possibility of misappropriation of assets will increase. Able to understand? This question also asked in the last 3 exams. Some 4 marks it was asked. Able to understand? This is a very simple chapter. 5 marks question is guaranteed. 4 to 6 marks question is guaranteed. See how easy the chapter is? Yes or no? Now, under what circumstances you feel that there is a fraud? What circumstances indicate that there might be a fraud? See, before we have seen risk factors for fraudulent financial reporting, risk factors for misappropriation. That is before you start the audit. That they are the indicators, risk factors. You started the audit, you're doing the audit, suddenly you discover the following situations. That is an indication that some fraud might have happened. When you find this kind of circumstance, what do? You investigate further. You do additional audit procedure to resolve the matter. Suppose if you discover a fraud, it's a fraud. Discrepancies in accounting records. One of the indicator is what? Accounting records are not matching. Management is having pressure, but there is no guarantee that they will manipulate accounting records. Correct? Suppose management is having pressure, it's a risk factor. Definitely there is a possibility of fraud. But do you think they will definitely do a fraud? But when I find ultimately accounting records are not matching, can I say there is a fraud possibility? Yes or no? I will be more alert on this. Like transactions are not recorded in complete, unauthorized transactions, last minute adjustments, auditor received some tips, complaints. Able to understand? He got some clue from employee that some fraud might have happened. Evidences are missing. Evidences are conflicting. Ledger account shows 10 lakhs. Debtor confirmed me 8 lakhs. Both are not matching. Possibility of fraud. Maybe fraud, maybe there, may not be there. But there is a possibility of fraud. So they'll give you a question on this itself. What are the circumstances which indicate possibility of fraud in case of missing evidences or conflicting evidences? 4 marks. You have to write any 4 points on this. Able to understand? Missing documents. Documents were altered. Unexplained items. Discrepancies between records and confirmation replies. Large number of credit entries in trade receivable. Debtor's account, only one credit entry, payment or bad debt. There is no other entry in the debtor's account. Yes or no? missing inventory, physical assets of huge amount. Now, problematic, unusual relationship between auditor and management is also a possibility, is also an indicator of possibility of fraud. We have seen in the previous topic also. Management and auditor relationship is strained. That's a risk factor. Same way, if there is a problematic and unusual relationship between the auditor, this is also a fraud. Same points were given in a different meaning. Like denial of access to records, vendors, people, pressure on the auditor to complete the audit, delay in providing requested information. We are not willing to facilitate for electronic access. We are not willing we are not willing to permit the auditor to talk to IT people. All these factors are indicators that there might be a possibility of fraud. Understood? And there are other reasons as well. Just you can see that later. Now, what is the duty of the auditor to report about fraud in CARO? In CARO we have totally 3 parts. What are the 3 parts that we have to report? First part, whether any frauds on the company, whether any frauds by the company were noticed or reported during the year. These are the frauds which are identified already by the company. Take a list of it, report it. Second point, have you filed ADT 4 form with the government? If so, just comment here. Third point, company received whistleblower complaints, right? What is whistleblower complaint? Many are asking me this stuff. What is whistleblower complaint? See, every company will create a whistle mechanism. What is whistle mechanism? Suppose in the class I announced specifically, if you have any issues, please, there is a box there, write your complaint and then put it in the box. That's called whistle mechanism. In company, they'll not create box, they'll have some other way. Okay. Now, whatever complaints you filed, I need to take that complaints, read and then design my audit accordingly. Able to understand? This is called whistleblower mechanism. This procedure is called whistleblower policy. Able to understand? Whether the company has implemented proper whistleblower mechanism and policy. If so, whatever complaints received, have you considered when you are planning your nature, timing, extent of audit procedures? That is what CARO is asking. So what auditor has to do here? How auditor will do here regarding while reporting under CARO? First, auditor will tell the team, my audit team members, that we need to report about frauds and all. Then I need to ask management, is there any frauds noticed? I will check internal audit report. I will check minutes of audit committee. I will take a representation from management regarding what are all the frauds happened. They gave a list. Other than this, there are no frauds. Management said no. Give a declaration. Getting it? And remember, management is responsible for correcting misstatements. Yes or no? Whenever there is a misstatement, they need to correct. Suppose if they have not corrected something. When I asked him, why are you not correcting these mistakes? They said they're immaterial, sir. Not required. I am also convinced. But I will take a representation that uncorrected misstatements are immaterial. Give me a declaration. Uncorrected means what? I discovered the mistake. But that was not yet corrected. That's uncorrected misstatement. Understood or not? That is uncorrected misstatement. Next, manner of reporting. Same point, CARO point is reported here. Remember, you will only report in CARO or everything only identified frauds. Even when you're reporting to central government also, only identified frauds you will report, not suspected frauds. Now, suppose if you came across a situation that you are unable to continue with the audit. Exceptionally, you came across a situation where you felt you cannot continue with the audit anymore. There are so many manipulations. Companies not at all willing me to do audit. They are putting undue time pressure on me to complete the audit. In an exceptional circumstances, auditor came to a conclusion that I am unable to continue. First, look at your professional legal responsibilities, including is there any requirement to report to a person who made appointment regarding your withdrawal. Suppose if withdrawal is possible, withdraw. If auditor withdraws, communicate with top management. And if there is any legal requirement, communicate with the C&AG, government, ROC also. Then in case of company, examples they have given, report to company officers, file with ROC, C&AG in case of government company, and RPA in case of banks. Understood? So when auditor is, this question itself they can ask you. The auditor came across a situation where he is unable to continue the engagement. What should be the course of action? 4 marks question. You need to write the below answer. Able to understand, all of you? That's it. Fraud chapter is completed. Understood thoroughly? All the topics we have covered. All the topics we have covered. Getting it? Now you have to read thoroughly this topic. Getting it? That's it. Next we'll start with sampling. Okay. So the next topic is audit sampling. I told that I'm not covering risk assessment chapter because that is again a lengthy chapter. That's again a very lengthy chapter. But mainly we are covering main topics. But risk assessment brief idea I'll give you maybe at the end. Getting it? Now let's focus on sampling. See, instead of risk assessment, what I'll tell is you can study 3 chapters easily. Sampling, analytical, strategy. All these 3 together, minimum 15 to 20 marks. Minimum. Only risk assessment, if you study, it will have maximum 8 marks. Is it better to study these 3 and secure 20 or 8 studying that? But if both take same time. Risk assessment, internal control, how much amount time it takes. These 3 chapters together takes the same time. Getting it? So be strategical in your preparation. So fine. So sampling, here nothing but we are going to discuss about SA 530. We are actually discussing about SA 530. So what is this audit sampling exactly? Now what is this audit sample exactly? Just 1 minute. Now let's look at how in reality practically the sample works. First, if you understand this, like how exactly the sampling works, you might have seen in the sampling there are various topics called stratification, value weighted selection. You have seen all that, yes or no? And haphazard sampling, random sampling, simple random. What exactly the difference between them? All that we will see this with this practical illustration. This is a sales report given by the MS Excel itself. In the MS Excel itself, the sales report is there. The Excel itself, its own sales report. Now you see here, this is the total which I have calculated. Getting it? Now I'll just, this is the product which the company is actually dealing. And these are the customers who actually purchased. And this is the total value for which customer has bought the goods. Getting it? So in this Excel sheet, we will apply the sampling technique. Getting it? Now I'll copy this entire data. This is the raw data. This is the raw data. I'll copy this entire data onto another one. Another sheet I'll copy. And you see, this is the data and which I'm copying to another sheet. I'll zoom it. And in the column, I'll just remove it. So this is the total sale value and the customer and product. Getting it? Now what is the population value? 1,54,491. Getting it? The dollar or rupiah vitrunga. Just understand the concept. So serial number. How many transactions we have? Not 78. 277 transactions we have. So how many we have here? The transactions 277. Getting it? So what is the total transaction value? 1,54,491. So this is the status. This is a population. Correct? Now here my objective is to select 20 samples. Have you heard of random number tables? All of you? Now, how do I apply random number tables? This is population, filtered population, correct? This is population. I hope here it is visible to everybody. Here also, right? Yes. Now, from this, I apply simple random sampling. Getting it? Now I want to select invoices. Totally how many invoices I want? 20. What is the invoice number? 1 to 277. 1 to 277 totally. And how many samples I want? 20. So random between, okay, 1 to 277. Correct? So 81. That sample we are selecting. Totally how many we want? 20 samples we want. So yes. So these are the samples which I am going to select for audit. These are the samples which I am going to select for the audit. 141 voucher, 211 voucher, 136 voucher, 163 voucher. Likewise up to 37. Understood or not? Now, so this voucher value, how much I will apply? This voucher value, how much I will check? So 141 voucher value is how much? 42. Getting it? Likewise I'll apply. So this is the total vouchers which I have selected. What is the total voucher value which I have selected for sample? 11,614. Have you understood? 211 voucher value 60 rupees they said. We'll see 211 voucher value 60 rupees or not. Yeah, exactly. Correct now. And here 163 voucher value they have selected. We'll see 163 voucher value. How much it is? 68. Here also it is 68. Correctly arrived or not? Now you tell me, these vouchers I have selected. No, these are the vouchers which I have selected. Numbers. Did I apply any my personal bias? They were randomly selected by using random number tables. What is random number table? Did I use any table book? Earlier we have table book. Now we have Excel sheet. So is there any number that came out of my choice? This is simple random sampling. Able to understand all of you. Now you see. Now let us apply. So what is the total value? Now what is the percentage of the total value to the total value of the population divided by what is the population total? So approximately it is 8%. Correct? Approximately 7.518%. So this is the sample value which I have selected in simple random selection. Correct? Now I will apply haphazard sampling. I'll apply haphazard sampling. Haphazard sampling means I am selecting randomly, but I am not using random number tables. Now haphazard selection. Have you heard of haphazard selection? Now I want how many samples? 20. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So some last one, okay, 20. This is haphazard selection. Haphazard means what? I don't follow any technique. In haphazard selection, the auditor will not follow any structure technique. On the other hand, he will avoid personal bias. Have you seen this sentence? Is there any personal bias I used here? But randomly I selected. What's the difference between simple random sampling and haphazard? Both are random. But in simple random sampling, numbers also I will not use. I will use random number tables or computer scientific I'll select. Haphazard I will manually select. Both are random. Which is more scientific? Simple random sampling. Have you heard? Saw no simple random sampling. Now we'll see what are the samples that we filtered. What are the samples that we filtered in haphazard? I will filter to next, So these are the haphazard selections, right? Which I did. This is the sample which I selected in haphazard sampling. Correct? What is the sample which I have selected? 10,265. Now I'll apply. What is this total to population? Now what is the population here? So this is the population. Yes or no? So this divided by population. Now it is approximately 6.65%. Correct? Now this is simple random sampling, haphazard sampling. Correct? Everyone? Now, if I go to the again population, I'll apply block sampling. I'll apply block sampling. Block sampling means what? Selecting items of contiguous, like continuous items. Getting it? First number. In simple random sampling, first number is what? 141. This is randomly selected, right? I will take 141 as starting point. I will select next 20 items continuously. I will select 141 as starting point. Next 20 items. 141, 142, 143, 144, 145, 146 up to 20 items. I will select all 20 items at a stretch. This is what? Block sampling. Or I may have multiple starting items. Let me select block of 5 samples. Suppose 141 is one block. 141, 142, 143, 144, 145. These invoices I will select. Then what is my next random number? 211. From there again 5 samples I'll select. What is my next number? 136. From there again 5 samples I'll select. What is the next invoice? 210. From there again 5 samples. Like that totally 20 I'll select. This is block sampling. Able to understand. Next, what is systematic sampling? Have you heard of systematic sampling? Interval sampling. Systematic interval. Now what is the total sampling units in the population? 277. There are totally 277 sampling units were there. From these 277 sampling units, I have to select 20 samples. I have to select how many? 20 samples. 277 divided by 20 is equal to how much? 14. Approximately it will come to 14. So, first item I will select. From there again 14th item I will select. From there 28th item I will select. From there again 42nd item I will select. Next 15th, 6th item I will select. Simply 14th table. So I will select, I will apply that. Those invoice numbers are my sample. This is systematic sampling or interval sampling, where between two invoices the interval is 14. Now if I apply 14 interval and select no entire population, how many samples I'll end up with? 20. Understood? So this is systematic sampling. Now the most another thing is stratified random sampling. What is the leftover method? Stratified random sampling. Now you see here, let me apply stratified. Stratified will be selected here, okay? Stratified random sampling. Now you see, if you observe the population, is filter value you've seen? Filter. The value inside the table is visible slightly here. Here it is visible. What is the first number? 12.5. What is the first number? What is the last number? What is the last number? 4,700 approximately. The last number is 4,700 approximately. Correct? Huh? Are these both values similar values or extreme values? Very good. Are they homogeneous or heterogeneous? Heterogeneous means completely different. Now you see, when I see the population, now tell me, now I applied simple random, right? Random number tables I used, right? Can I say in this 4,700 rupees value has been damn sure selected? Can I say that? May or may not. Who knows? It's 277th invoice value. That is some invoice value 4,700. Can I say in the simple random sampling for sure 4,700 is selected? Can I say in haphazard 4,700 is for sure selected? I don't know. I just selected randomly. It may come, may not come. Correct? Huh? It may come or it may not come. Now tell me, when I study this population, when I observe this population, when I interpret this population, I discovered that there is an item which is 12 rupee. There is a sale value which is 100 rupee. There is a sale value which is 300. There is sale value which is 1000, 1500, 2000, 3000, 4000, 4700. Now the company is selling goods at various levels. Correct? To various customers. Now tell me, generally in any company, for selling small quantity and for selling high quantity, the process is same or slightly different? Differs. Correct? Now tell me, if I do not pay attention, if I do not observe this point and simply select 20, I may be ignoring high value items. Or I may be selecting mostly low value items. Can I treat high value items, low value items equally? See, in simple random sampling, I applied random number formula and I selected 20 samples. Any number might come, correct? Which means all invoices were given equal chance or not. In haphazard also all invoices were having chance or not. Correct? But when I studied this population, I discovered high value items. According to me, anything more than 2,500 rupees is high value in this company. In this company, sales more than 2,500 rupees is high value for me. 1,000 to 2,500 is medium value. Less than 1,000, low value. Can I select sample randomly from low value and randomly from medium value and also high value? If I select sample from all the three, can I cover all the parts of the population? Is my sample more representative? In population there are extreme values, in my sample also extremes are there. My sample is more representative. Able to understand? Now let me apply that technique. So I will filter samples having greater than 2,500. How many were there? Sorry. 2,500. How many came? Only 6 items were there. Big items are only 6. Why should I apply sample? I will select all the 6. Can I? I will select. What happens? What's wrong in this? So I will select all these items. Yes or no? All high value items. Getting it? I will select. You might have seen this. In value weighted selection, auditors focus mainly goes towards high value items. Have you seen that? Getting it? Now, then I will select medium value. Greater than 1,000 but less than 2,500. Sir, no. Oh my God. Here approximately 37 invoices were there. Between 1,000 to 2,500 only 37 were there. More than 2,500 6 only were there. Totally 43. Small value items are approximately 230. Small value items are approximately 234 items were there. But as a whole, how many samples I want to test? 20 only. Already how many selected? I will select from this another 8. Yes or no? 1, 2. Here I apply again haphazard technique. Yes or no? So how many it is coming like here? How many? 7 I selected. So another number I will select. Randomly. Randomly I selected. What is stratified sampling? Dividing the population into subgroups and selecting sample from each group. That's what I am doing. Yes or no? First I divided the population into 3 parts. Items value more than 2,500. Items between 1,000 and 2,500. Items less than 1,000. From each part I am selecting sample. Randomly. That is called stratification random. Stratified random. Correct? Now, next, what is left over? Small value items we should select, no? So, less than 1,000. So, less than 1,000, I will select randomly how many? Already 8 plus 6, 14 were selected. Just another 6 items I will select. Yes or no? Just another 6 items I will select. Vandarcha? Yes. So, these 3 I will hide. So, what I have selected ultimately is this. These are the samples which I have selected. Hey, what happened? Did I select it in wrong column? Oh, sorry. Now, totally how many I have selected? 20. Correct? Now, I will filter these 20 into another place. This is what? Stratified. Yes or no? This is what? Stratified. Now I will see the total. Now you see in this my stratified sampling, small value items are selected, medium value items are selected, large value items are selected. Yes or no? Now you see the total. 34,000. Now you see the formula with the population. With the population if I check. With population if I check. Approximately how much value it gained? 23%. You see, here also I have selected 20 samples only. Haphazard I selected 20 only. Simple random I selected 20 only. But I am selecting with the same 20. I am verifying more value. In which method? Stratified sampling. And I can say confidently, if someone asks me, have you verified material items? I verified. Have you verified medium items? I verified. If I focus only on these two, management may do frauds in low value items. I verified them as well, sampling. My sample is more representative. Through this methods, we understood now what is haphazard, what is simple random, what is stratified random, what is interval sampling, what is block sampling. Understood or not? This is called statistical approach. What is non-statistical approach? Non-statistical approach means where I don't use all these scientific methods, probability methods, random methods. I don't apply. My favorite number, let us assume 1. I will select all the vouchers which will have 1 number. Able to understand? This is personal bias. What is this called as? Personal bias. Bias cannot be avoided. But tell me, whatever method of sample I am using, tell me what is the purpose of sample? What is the purpose of sample? I'll give 2 options. In order to draw conclusion on the sample, or in order to draw conclusion on the population. Exactly. The objective of sampling is not to select the sample, not to form an opinion on the sample, but to form an opinion on the. Yes, very good. That's it. So now we apply the sampling technique in test of controls. We apply the sampling technique in test of details. Now in the sample selection, is there a risk again? Sampling risk, we call it as. What is it called as? Sampling risk. What is sampling risk? What kind of wrong conclusions that we may end up because of the sampling risk? How to use the sampling technique? How to project the mistakes? All that we have in our syllabus. Are you getting it? So with this we understood scientifically how we apply sampling. Now we just have to look at the book. Just a minute. Yes. So now let's look at how, what are the concepts that we need to discuss. So in the previous exam, they gave a question, something related to this introduction. At the last there is another para which you will find in main book. Getting it? So non-routine checking, routine checking, that is the wordings which they used. So they indirectly asked you about the sampling. What is audit sampling? First of all, we apply our audit procedure. We verify. What do we verify? In a sampling method, we verify entire population or sample. Sample means less than 100% data. That's it. Audit sampling refers to application of verification procedures to less than 100% items within a. So that is called auditor sampling, based on which auditor draws conclusion about the static. Getting it? All of you. Now, just a minute. Now, what is the objective of auditor? The objective of auditor in sampling is to provide a reasonable basis to draw conclusion about the population from which the sample is selected. See, in the population in our example, 277 bills were there totally. Each item is called as sampling unit. Whatever is selected is called as sample. Are you getting the point? Next. This standard applies when the auditor decided to use either statistical or non-statistical sampling. Getting it? And when designing a testing sample, when performing test of controls and test of details, and how to evaluate the results based on sample. The moment you decided to adopt sampling technique, this standard SA 530 applies. SA 530 heading is audit sampling. The chapter heading is also audit sampling. Now, what do you mean by population? Population is nothing but entire set of data from where sample is selected, based upon which auditor will draw conclusions on the population. First, a population must be appropriate. Getting it? Appropriate population it should be. Appropriate means what? Relevant. What is the, from wherever, see what samples you want to select. See what you want to verify. Purchases I want to verify. What is, in order to verify purchases, what is appropriate population? Purchase register, DRN register, purchase order register. These are the appropriate population. Yes or no? Not only that, before you select the sample, you must ensure that the population is complete. If the population is incomplete, your conclusion on that incomplete population from where you drawn the sample will also be wrong. If you want to audit purchases, make sure entire purchases were populated first. From that you have to select. Suppose tell me in our example, out of 277, if 30 bills I removed and then selected sample, the result, will it be reliable? Exactly. And population from where you're drawing sample should be reliable. It should be generated independently. It should be generated by right person. Getting it? What is sampling unit? It is nothing but individual item in each and every individual item in the population. Total of sampling units is equal to population. Are you getting it? Now, audit procedures are applied on these units which are selected, and conclusions will be drawn on the populations by using a projection, by using a technique called projection. By using a technique called projection, which is also called as extrapolation. Able to understand? Whatever conclusions we are drawing on sample, that conclusion becomes on the population. You see example of rice cooking. This we say, this quotation also we say. Getting it? So whether the rice has been cooked properly or not, cooked up. We don't check the entire each and every grain. We only check sample. Correct? If the sample is too wet, we say that the rice was not yet cooked up properly. Yes or no? It's not boiled properly. Now, what is the approach to sampling? We have two approaches. One is non-statistical approach, another one statistical. What is statistical approach? Where selection will happen on a random basis, where we use probability theory to evaluate the sample results. What is probability theory to evaluate sample results? Suppose out of 20 samples I have selected, out of 277, if I discover one mistake, it's 5%. It's 5%. 1 by 20 means 5. I naturally feel that in 277 also 5% mistakes were there. This is called probability application. But it is not as straight or as simple as what I told. First, whenever you discover a mistake in sample, first you should assess the nature and characteristics of the mistake. Is it anomaly or is it non-anomaly? You need to first understand that and accordingly apply. Able to understand. Now, sample is chosen by applying some mathematical and statistical methods. I use random tables, no? Yes. What is non-statistical? Which do not have the above features. Ultimately, what is the objective of sample? Selecting representative sample. Tell me, when the sample is representing the population correctly, only then my decision on the sample I can apply on population. Correct? Only if I select a sample correctly, which will have all the characteristics of the population. Getting it? Then only my sample is representative. So whatever approach you follow, ultimately the sample selection objective should be representative sample. Correct? And so the sample characteristics must be close, similar to whole population. Although not exactly same, but similarity should be there. Able to understand? Now, sampling process is performed on test of controls to identify deviation from the control. Whereas in details to identify misstatement. The word deviation is used in the context of control. Misstatement is used in the context of details. Remember. Able to understand, all of you. Next. So balance, we will discuss in the next session. The balance continuation and all, we will discuss in the next session. Clear? Hardly another 30 to 40 minutes, we'll close up this chapter. I'll give you a clear-cut idea of how to understand this chapter, then you can go and understand later easily. So, let's continue. So, we are discussing the difference between statistical and non-statistical sampling. The difference is, in statistical sampling, we use the probability theories. We apply mathematical calculations. Especially the statistical sampling is useful where large number of transactions were there in a given volume of data. So in that time, the statistical sampling is useful. And in statistical sampling, we don't have any personal bias in selecting the sample. And the evaluation will be absolutely scientific based on the result of the sample. And in case of larger organization, statistical sampling is something which is always recommended. Whereas non-statistical sampling, the sample is selected based on personal bias. See, when I am selecting sample unbiased, unbiased means what? I am not looking at the item in the population when I am selecting. That's called unbiased selection. Biased selection means what? Where I will be looking at the item in the population and selecting that specifically for some reason. Able to understand? So that is called personal bias. So the degree of objectivity cannot be assured. How far you are independent in selection, that cannot be assured in case of non-statistical sampling. Moreover, in non-statistical sampling, we usually check it, large items, especially which are recorded at close, year end. At the closing time, whatever major transactions were there, that is what we generally check in non-statistical. See, first of all, we don't apply any non-statistical technique. By default, we select samples on random, right? The moment you select it on random basis, it is statistical sampling, simple. Next. And here, the results cannot be measured because they are not scientific. And moreover, in case of non-statistical sampling, the sample selected is not representative. Now they have given one MCQ, one correct or incorrect question in one of the exam. Sample size is not a valid criteria. Sample size is not a valid criteria to distinguish between statistical sampling and non-statistical sampling. This is the statement. The answer is correct. Sample size is not the criteria to differentiate between. Do we see any criteria regarding sample size here? What is the difference between statistical, non-statistical? Is there any discussion on sample size? Whether I select 20 samples out of 277, 25 I select, 30 I select, is there any link with the approach that we follow? Forget about approach. Even within statistical, simple random, stratified random, even there also we are not following based on sample size. Suppose have we seen in simple random 20, in stratified random 15 enough, like that have we seen? Sample size is not at all a criteria to distinguish between methods of sampling, approaches to sampling. Getting it? Sample size is a level. See, you need how much level of assurance? I need more level of assurance. Naturally, I select more number of transactions. Are you getting the point? So sample size will be that much where sampling risk is low. Nothing but where audit risk is low. Whatever sample size you feel sufficient, that's it. In audit evidence, we see sufficient appropriate evidence. Nothing but sample size. That is mainly dictating, that is mainly, directed towards sample size. Able to understand? Next. Now, how sampling is different from traditional methods of checking, which is something you can read on your own and understand. Easily you can understand. Getting it? Now, factors to be considered, this I'll come back again. Now, let's look at various methods of sampling. Sample selection and methods of testing under sampling. First of all, you shall select items in such a way that each sampling unit has a chance of selection. So every sampling unit should be given a chance. Every unit in the population should get some chance that it will be selected. This can be achieved only in statistical sampling. The purpose of sampling is to provide a basis for the auditor to draw conclusion about population from where it is selected. And it is important that auditor selects representative sample so that bias is avoided. Now selection methods, we have so many selection methods. Getting it? We have so many selection methods. Simple random sampling means what? Simple random sampling means it's a method where each unit, every item in the population has equal chance of selection. Yes or no? We have seen formula 1 to 271, any 20 items we want. We selected in Excel. Any number can be picked, right? So item number 1, what chances it has? Item number 279, what chances it has? Both are same. Equal chance. Random number tables are simple and easy to use and also provide assurance that bias does not affect. Now we use Excel sheet random number table technique. So is there any bias? Is there any my personal judgment in that number selection? No. This method is considered appropriate where population has a reasonably similar units. Now in our example, there is 12 rupee item, there is 4700 rupee item. Simple random sampling, though it is fine, but when the variation is too heavy, is it right method? When simple random sampling can be applied when suppose entire population, all the amounts are more or less similar. They were in a particular range bound, not extreme variation. Then I can apply simple random sampling happily. But when the population comes having extreme variations, it is always better to divide the population into subparts and select sample from each subpart. Correct? Huh? So what is stratified? It means dividing heterogeneous, diversified into homogeneous populations. Yes or no? Now in our example, 12 rupees to 4,700 is the total population. We divided that into three categories: high value, middle value, low value. Now within low value, all items are similar. Within medium value, all items are similar. High value, all items are similar. That's what. So splitting heterogeneous population into homogeneous population. Now how can we stratify? In our example, we stratified it based on monetary unit. It is called as monetary unit sampling. We stratified it based on monetary unit. So we call it as monetary unit sampling. Able to understand? Stratified sampling, another name is monetary. Suppose I am doing audit of expenditure. I am doing audit of expenses. Expenses are so many. I will now classify them as three types: factory related expenses, admin related expenses, and sales related expenses. Can I classify like these three? This is also stratification only. But is this monetary unit sampling? Now here I am dividing the population into multiple parts based on the nature of expenditure, not the amount involved. Correct? Huh? So the method dividing whole population to be tested into few separate groups is called as strata. Each stratum is treated as if it is a separate population. Items will be selected from each of the stratum. Number of groups into which you have to divide is your professional judgment. We divided it into three parts. I may divide them into 5 parts. I may divide them into 7 parts. That's your choice. It's a matter of professional judgment. Generally, for the top group, 100% items we will verify. Correct? Huh? Why? Big items are generally less in items. So even though if you verify 100%, it is okay. Whereas from the lowest group, we verify 2%. Example. In our example also, 234 items were there. 6 items only we verified. Hardly 3% sample we verified from the lowest group. Yes or no? Able to understand? That's about stratified sampling. Now immediately we need to see the techniques of stratification and value weighted selection. So what is stratification? Stratification means what? Dividing population into discrete, means independent subpopulation which have identifying characteristics. We divided the population into 3 parts. Value more than 25. Value between 1000 to 25. Values less than 1000. Each subcategory has an identification. No. What is the identification? More than 25, 1000 to 25, less than 25. That's a side heading. Yes or no? That is called identifying characteristic. And that process of subdividing is called as what? Stratification. Each subpopulation is called as stratum. Units under those are called as strata. That's why it's called stratified random sampling. Now, audit efficiency can be improved if auditors stratifies population by dividing it into subpopulation. Efficiency we can increase. How? When we selected simple random sampling, 20 samples we selected, but the value came only 10,000. But we apply stratified random sampling, same 20 number, but 34,000 rupees worth we verify. Efficiency of audit increased or not? Same 20 we are verifying, but output is coming so much. Able to understand? The objective of stratification is what? To select sample from all parts of the population having different characteristics. Yes or no, it is proved or not? Next. When performing test of details means what? Actual transactions, sales, purchases, expenses. Often stratification is based on monetary value. How we stratified the sales data now morning? How we stratified in the previous class? Based on monetary value. Able to understand? Now, how projection will apply here? Suppose you divided into subparts, right? From each subpart you selected sample, right? Suppose small items 234 were there. Out of which 6 we have selected. Out of 6 we found one mistake. 1 by 6 mistake. 1 by 6 we will apply in total 277 population, or we apply total 234. We need to project to that stratum. Suppose generally sampling, how we apply sampling is, Suppose out of 100, one mistake is there. Out of 10,000, how many? This is what projection means. But when we divide this 10,000 into subparts, projection should be made to the total gross population or subpopulations. Subpopulations. So projection should be made for each subpart and the total projection we should make to population. Understood or not? So the results of audit procedures applied to sample within a stratum can only be projected to the items that makes up that stratum. Able to understand? Every sentence you see how you can correlate. Now, the results of sample from the units drawn from subpopulation are projected to the respective stratum. And finally, in order to draw opinion on the population, auditor need to combine the result of all the stratums to check possible deviation, to check risk of MMS in the whole population. Are you getting it? That's it. So, projected misstatement of each stratum will be combined to consider possible effect of misstatement in the actual account balance or the transaction. Nothing but that is the population. Clear? Now, what is value weighted selection? Value weighted selection is the sample size, selection process, evaluation, everything is in monetary amount. Now, you see, stratification means it's a technical term. Now, in our example, sales data, how is stratified based on monetary amount, based on value? Yes or no? Now, when we divide the strata, when we divide the population based on value, that's actually called as monetary unit sampling, or the technique is called as value weighted selection. We are giving high weight to which items? Large items or small items? Large items. You see, that's why large items only 6 were there, all the 6 were selected. Yes or no? You see, when performing test of details, it is better to identify sampling unit as monetary unit. The auditor will be more focused for large value items because they can result in smaller sample size. The approach can be used in combination with systematic method as well as random selection. Generally, we apply stratified selection. Generally, we apply stratified random. Value weighted selection, we apply with random selection. We don't go with systematic selection, which is most popular. That's what most efficient when using with which method? Random method. That's it. Getting it? Next. Now there is a discussion on sampling risk. Now, by the way, still we have some other methods. What is systematic selection or interval sampling? We divided 277 divided by 20 sample size is equal to 14 is the interval. What is systematic selection? It's a selection method where sampling units in the population is divided by sample size. Total in our sales report, how many sampling units were there? 277 divided by 20. What is the interval? 14. The starting point may be haphazard. The starting number may be haphazard, but it is more likely random. Okay, if at all we select that number by computerized random number. When using systematic selection, the auditor would need to determine sampling units within the population are not structured in a way that sampling interval corresponds with a particular pattern of the population. So what is the sentence? These kinds of sentences, if at all asked for true or false statements, that's it. You're gone. Now, in interval sampling, I am deciding to select every 14th item. Suppose in the company, every 14th expenditure is, let us assume, repairs and maintenance. And when your interval is also 14, you selected 20 samples in expenses. All the 20, what you will get? So your interval should not match with any pattern. Able to understand? The pattern of transaction and the interval should not match. You should take that kind of precaution. Otherwise, see why the reason why you're following systematic selection because you want to select all the expenditures, all the types. But every 14th transaction is always this one. So automatically what happens? It will become one pattern. Only one set of transactions you are selecting. Are you getting the point? Every 10th sale in this company is to so and so vendor or so and so customer. So you are selecting 10 as interval for sales verification. All invoices that you select for sample will belong to only one customer. Again problem. So that's what. Now you see the sentence. So in systematic selection, auditor would need to determine the sampling units within the population are not structured in a way that sampling interval corresponds with a particular pattern of the population. Understood? Therefore, systematic sampling when chosen as a method would be carefully applied, and you can have more than one starting point. Suppose point number 1, 14, 28, 42, 56. Likewise, I'm going again, there again I'll put a random number. From there again 14 I'll count. Are you getting the point? Next, monetary. It is nothing but value-weighted selection, where the sampling results, everything is in monetary amounts. Haphazard sampling. This has asked for many times, 4 marks question. Getting a stratified random sampling is also asked many times. Haphazard. Haphazard means what? Auditor select the sample without following any technique. The auditor will avoid bias and predictability. We did haphazard selection. Do we have any bias? No. But we don't use random number tables. Getting it? This method is not superior when compared with other sampling methods. In this method also, every sampling unit will have a chance of selection, but may not be equal. Because I am selecting manually. So how do I know? How do I run computer button correctly, equally? I can't. But if it is given to computer, it naturally selects equally. Able to understand. That's it. Then we have block sampling. Block sampling, I hope you'll read and understand. Getting it? This is easy method. Next, sampling risk. So what is a sampling risk? So what is sampling risk? So sampling risk means what? Risk of not detecting a material misstatement. This is audit risk actually. Risk of not detecting a material misstatement is in fact not audit risk, in fact detection risk. More clear. All these three are interrelated. Risk of not detecting a material misstatement, that is actually detection risk, because of which audit risk will increase. And why detection risk arises? One of the reasons why detection risk arises is sampling risk. So what do you mean by sampling risk? Risk of selecting an inappropriate sample. What is inappropriate sample? What you are verifying in the sample, the characteristics of the sample are completely different from the characteristics of the population. The characteristics of the sample is completely different from the characteristics of population. When you verify the sample, you get one kind of conclusion. But if at all you verify the population, you will get completely different conclusion. Which means, whatever conclusion I am forming on sample is not matching with population if I verify the population. Example, what are the wrong conclusions that you might get? Getting it? In case of test of controls, what kind of conclusions you will get? In case of test of details, what kind of wrong conclusions you will get? In case of test of controls, risk of over reliance. Another one is risk of under reliance. Risk of over reliance, risk of under reliance. In case of test of details, risk of incorrect acceptance, risk of incorrect rejection. What are they? Risk of over reliance, risk of under reliance in case of controls. In case of details, risk of incorrect acceptance, risk of incorrect rejection. Look, we do verified controls also on sampling basis only. Controls we verify on what basis? Sampling basis. Example of one control is, suppose in this company where I am doing audit, the purchases value more than 5 lakhs. Whenever company want to place a purchase order, where the order value is more than 5 lakhs, this order shall be approved by finance manager and CFO. This order shall be approved by both of them. Only then the order will be entered into the system. Getting the point? Only when this order is entered into the system, we can accept the goods when they are delivered. Suppose if a supplier sent goods to us, in a company, when a supplier sent goods, storekeeper may not have any idea. So when goods came, The other party will tell, sir, your company ordered goods. Storekeeper, what he will do? Ah, okay, sir, accepts and he will give acknowledgement. Naturally, it became purchase, liability. But whether our organization placed order or not, how do we know? How do we know? So we should tell storekeeper immediately, first, whenever somebody is sending the goods, first receive the goods only when there is an order from our company. Now he need to give acknowledgement of receipt, no? That acknowledgement will not generate without PO, without purchase order. And who is ordering? Not that store person, purchase people, somebody else is ordering. They will order, the data will be entered into the system, and this fellow, when goods received, no, he need to give acknowledgement for goods received, right? When he is entering the goods received, it will ask first question, against which PO, which purchase order these goods are received. First you need to map that. Only if we map that, suppose purchase order contain 1000 units, and whereas this fellow sent 1200 units, he cannot accept beyond 1000. He can only give acknowledgement for 1000. Even though he deliver all the 1200, he can give acknowledgement only for 1000. Liability can be booked only for 1000. And this fellow is only giving GRN. Now like this, in the computer, restrictions will be given. This is called control. Now I need to test these controls. How purchases related controls are, I need to test. How do I test the controls? I will take few samples, only check this control. I'll take all the purchases where the order value is more than 5 lakhs. I'll take some 10 purchase bills. Purchase orders more than 10 lakhs or 5 lakhs. I'll cross verify what is the policy. FM, CFO, both should approve. Both are they approved or not, I'll check. This is called test of control. What is this called as? Test of control. Sir, you are actually selecting the invoice and checking. No. Is it not test of transaction? Is it not test of detail? No. This is control checking. I'm only checking that control. Now I felt, yeah, everywhere authorization is perfect. GRN I saw. Yeah, GRN every time whenever they are accepting, PO mapping is done. I saw every controls like this. I tested controls are effective. Then I will take some 100 purchase transactions. Then I will check when the PO was raised, how much quantity, when the GRN was issued, how much quantity, payment slips, and when the voucher was prepared, when the entry was passed in the books, at what value it was passed. This is substantive procedure. What is this? Substantive procedure, test of detail, nothing but the actual transaction testing. Able to understand. In test of detail, the transaction will be tested right from its origin till the end. Whereas in test of control, I will only check that control element. In both the cases, I will check with voucher only. But the objective of verifying is different. Are you getting the point? All of you. Now, in test of controls, when I see the control is working fine, I saw some 10 samples. All the 10 samples purchase, finance manager, CFO, everyone is signing. I felt control is effective, excellent. But actually in reality, whatever samples I selected only, they followed control. In the remaining samples, they didn't follow the rules. In many cases, they didn't follow the rules. Almost 1 in every 3 invoices, they don't follow the rule. 33% deviation is there. But bad luck. Based on the sample I have selected, I felt controls are working very well. Am I believing them or not? Over reliance. Tell me what will happen because of trusting the control too much. I will select lesser sample size for test of details. If controls are effective, I will do less substantive procedure. When I do less substantive procedure, what will happen? The possibility of discovering mistakes will reduce. Now tell me, when the discovery of mistakes reduces, I will not discover mistakes. I will say everything is true and fair, when in fact, so many mistakes are there. Am I giving wrong opinion or not? Audit risk. Understood or not? So that is called risk of over-reliance. Risk of under-reliance. Company transactions are everything perfect. The controls are working absolutely fine. But I randomly selected some 10 vouchers and saw the control. Everywhere it failed. And the fact is, only these 10 vouchers failure is there. Remaining 9,990, they are absolutely fine. But the sample which I selected, based on that only I will go right. The moment I saw out of 10, 5 mistakes, I felt immediately in the population, so many mistakes were there. I felt control is not at all working properly. What will I do because of this? I will take bigger sample and I will try to prove so many mistakes, but I will fail ultimately. But because of underliance, my audit efficiency is affecting, no? Okay, I may not give wrong opinion, I will do more careful audit, but my efficiency is affecting, no? But because of over reliance, what will happen? Audit risk will increase. Whereas under reliance, is there any impact on audit risk? Next, risk of incorrect acceptance. Test of details means what? I will take 100 samples. I verify these 100 samples. I did not find a single mistake in them. Entire GR and PO, everything, 100% vouching I did. Getting it? I verified 100% transaction. Whatever vouchers I selected, I selected in depth. And I did not find a single mistake. Getting the point? I did not find a single mistake. I felt entire population is true and fair. I accepted entire population as true and fair. But in reality, the population is having so many mistakes, which are not discovered in the sample. So, am I accepting the entire population of true and fair or not? But which is incorrect. Now, because of this, what happens? Treating that population is free from material misstatements when in fact they exist. Because of this, what happens? Audit risk increases. My opinion may go wrong. Risk of incorrect rejection means what? I am rejecting population saying they are not true and fair. But this rejection is not correct. What will happen because of this? See, the sample I selected found mistakes. I felt entire population is materially misstated. So I said everything is not true and fair. Now because of this, is there an impact on audit risk? No. So, this is sampling risk and wrong conclusions that you might take up. You see, what is sampling risk? The auditor conclusion based on sample is different from population if at all entire population you verified. Selecting inappropriate sample is also called as sampling risk. Like risk of over reliance, risk of under reliance, risk of incorrect acceptance, risk of incorrect rejection. Are you clear? Now, detection risk, I told you, the risk of not identifying mistakes. Will this arise only because of the sampling risk? I may even have non-sampling risk. What non-sampling risk? Sample is correct. The way you interpret only wrong. Yes or no? That is called human mistakes. Or you are misinterpreting sample results. Or you are taking wrong information. These kinds of risk, no. Because of this also you are giving wrong opinion. But this risk is coming from not sampling, other than sampling. That is called non-sampling risk. So non-sampling risk is the risk that auditor reaches a wrong conclusion for any reason other than sampling risk. Non-sampling risk can never be measured. Are you getting it? Next. Finally, whatever sample you have selected, whatever sample you have ultimately selected, you need to apply verification procedures. The auditor shall perform audit procedure, whatever is relevant for the purpose. Audit procedure is not applicable to selected item, then he need to perform on a replacement item. What is meant by this? They do ask all these kinds of questions. For this, no, what I suggest is better read main material here. My main material is there, better read that. We have given examples also clearly. What is replacement item? What is, if replacement is possible, alternative procedure, unable to apply suitable alternative procedure. All this is little bit bigger discussion, cannot be covered in revision. Verify from the main book, you will understand better after all this. Then we have few more important topics. Now, what are the requirements? Fan on, fan. Yeah. So what SA 530 is requiring? What SA 530 is requiring? First, sample design. How you should have sample design? Which method you should follow? First, understand the purpose of audit procedure and characteristics of the population, and then select the design accordingly. If the characteristics of the population are wide variation, I'll go for stratified sampling. Otherwise, I'll go for simple random sampling. Sample selection. It should happen in an unbiased way. Every item will have a chance of selection. Now, how much sample size you will select? It is that much sufficient to reduce sampling risk to an acceptable low level. The sample size must be such that the the sampling risk will be reduced to low level. Sampling risk means the possibility that I may take up wrong conclusions based on sample. That possibility should reduce. If that possibility should reduce means I should check more number of samples. If I take less number of samples, if I discover mistake, I will think in major items of population also there is a mistake. Very simple. 100 samples I verified. One mistake I found. 5% is the mistake. That's what I conclude on population. I took another 100. Nothing I found. Zero mistake. Now out of 200 till now how many I found? Only one. Now what will I interpret? Only 2.5% error. Able to understand in the population. So as the sample size increases, my prediction over the population will also changes. Able to understand. Now, what factors in examination you may get this question also. What are the factors that you have to consider for sample design? So if they may ask you, this also please read from main material. Don't miss this. Please read from main material. Wherever I told you to read from main material or icai material, please go through that. Now, first of all, can I consider a sampling plan? Can I consider a sampling plan or not? Can I go with sampling or not? It depends upon size of the organization. It depends upon internal control, reliability of books, tolerable error range. In this company, what is the error range possibility? If it is within my toleration level, okay, I can go with the sampling. Suppose if the errors are beyond tolerable limit, better I will not go for sampling. And how much confidence you want? The greater confidence you require, the greater must be the sample size. Same way, we're having another question. What are the factors? What are the factors that affect sample size in case of test of controls? What are the factors that affect sample size in case of test of details? Now here in exam, they'll ask you this question. This kind of question. Very tricky question. Only if you understand entire sampling chapter, you can write this. Otherwise you can't. Which of the following is not a factor? Which of the following is not a factor for determining sample size in case of test of details? Option A, risk of material misstatement. Option B, projected misstatement. Option C, expected misstatement. Option D, tolerable misstatement. Which of the following is not a factor for determining sample size in case of test of details? First, you must know meaning for all the four before answering. Getting the point? The answer is projected mistake. And if at all any of you guessed it correctly, don't do festival. Okay, because it can be accidental. Getting it? It can be accidental. What is expected misstatement? What is tolerable misstatement? What is projected misstatement? First you must understand these three. Consciously we should select right answer. Then only you can answer well even for some other question. Getting it? What is tolerable misstatement? It's nothing but performance materiality. Tolerable misstatement means what? It's nothing but performance materiality. Have you seen performance materiality SA 320 definition? Performance materiality means a materiality level set by the auditor at less than overall materiality for financial statements as a whole in order to reduce the probability of undetected misstatements, uncorrected misstatements exceeding the overall materiality. If applicable, performance materiality also means a specific materiality level set for a particular class of transaction or account balance. This is the definition. Not understood, right? So tough the definition was. Getting it? Performance materiality definition is not easy. That is nothing but tolerable misstatement. See, like, I'll give you here glimpse of SA 320. I'll give you here a glimpse of SA 320. Materiality standard. There are two materialities. One is called as planning materiality. Another one is called as performance materiality. This performance materiality in sampling chapter can be correlated as tolerable misstatement. Tolerable misstatement. Planning materiality is also called as overall materiality. Overall materiality. Once you discover a mistake, first you need to interpret the mistake. What mistake it is? What is the mistake nature? You need to interpret the mistake nature. The mistake is of two kinds: anomaly or non-anomaly. Anomaly, non-anomaly. Anomaly means, there's again a definition. It's a rate of deviation or misstatement that is demonstrably non-representative of population. This is what the definition is. A rate of deviation or a misstatement that is demonstrably non-representative of population. Nothing but anomaly means non-repetitive mistake. What is it called as? Non-repetitive mistake. This is a mistake which is not representative of population. What do you mean by that? This mistake is there only in the sample I have selected. It will not be there in population. Like how? What is that mistake? Example. Suppose an accountant, while entering a transaction of 10 lakhs, by mistake typed 11 lakhs. Sorry, by mistake typed, one extra. Out of hurry, he typed one twice and he entered 5 zeros correctly. Getting the point? Will this mistake happen every time? Will this mistake happen? Suppose a 10 lakhs value is recorded as 1 crore 10 lakhs. 10 lakhs worth of transaction is recorded as 1 crore 10 lakhs. I discovered this mistake. Now can I say every 10 lakh entry in the books of accounts is misstated by 1 crore? This mistake is there only in that sample. This is called anomaly. By the way, have you discovered the mistake? What is the mistake value here? 1 crore. What is the mistake value here? 1 crore. 10 lakhs to be accounted as 10 lakhs, but they accounted as 1 crore 10 lakhs. So how much is the mistake value? 1 crore. Exactly. Now this mistake not yet corrected by the company. This is called uncorrected misstatement. This is called as uncorrected misstatement. Now this is the 1 crore mistake. Now this is anomaly. Now based on this, can I project mistakes in the population? No. Are you clear? Now next, non-anomaly. In the control, the company's software, there is a small error. What error is? Whenever goods received note, see, like what error they wrote, what program they wrote is, the program what they wrote is, like if purchase order contains 1000 units, maximum GRN can be generated for how much? Maximum you can receive for how much against that order? 1000 only. You ordered 1000 means how many you can receive against that order? Maximum 1000. Now here in GRN, while writing the program, they should write less than or equal to 1000. Able to understand? They ignored that word less than. They used the word equal to. Whenever they are mapping GRN, by default system accept 1000. Suppose if PO contain 1000, system also accept 1000. If PO contain 2000, system also accept 2000. But in reality, how many I am receiving? That system is ignoring. Even if I try to enter 900, system is not accepting. If this kind of error is there in the software, every transaction wherever I am receiving less than ordered quantity, every transaction will be misstated, yes or no? Are you getting the point? Now, can I project this? Yes, I can project. I can use this for projection. Depending upon some mathematical calculations, we can use this for projection because it's a repetitive mistake. What is it called as? Non-anomaly. Non-anomalous projection. We call it as what? Non-anomalous projection. Now tell me, when I say 100 crore might be the mistake in the population, is it corrected or undetected? Is it uncorrected or undetected? Suppose I discovered 1 crore mistake. Based on that, I am estimating 10 crore is the total mistake in the population. Now, 1 crore I discovered, 10 crore I am estimating. This 10 crore is uncorrected or undetected. I have not detected, it's estimated. Are you getting the point? Suppose tell me, when I project the mistake plus when I discover the actual mistake, undetected plus uncorrected, Getting it? I take performance materiality, actual materiality 1 crore. If total mistake crosses 1 crore, it's material misstatement. You have to give modified opinion. If it is 10 times of this, it is pervasive. We have to give adverse opinion. Getting it? Now here, 1 crore is the total materiality level, right? And I see here below, I will set some 60 lakhs as performance materiality. 60 lakhs I will set for performance materiality. And triviality materiality, we call it as trivial level. I will keep something called 10,000 rupees. I will tell my team members, if any mistake is less than 10,000, ignore. If it is more than 10,000, reporting differences. What is it called as? Reporting differences. Means we will accumulate all that mistakes whose value is more than 10,000. These are all mistakes we are finding in audit. Now we total it and we take projection. If the projected value exceeds this, no. PM level, if at all it exceeds PM level, no. Definitely there is a chance that actual mistake is more than overall materiality. Able to understand? That's how the concept has been developed. That's how the concept. You can watch my marathon, previous marathon, which I uploaded. In that I clearly spoke about SA 320. Around some half an hour, 40 minutes I uploaded. You can watch that. You'll understand. So tolerable misstatement means how much mistake I can tolerate. If the tolerable misstatement which I discovered is less than performance materiality, it's fine. If at all that uncorrected, undetected misstatement exceed tolerable level, the moment my misstatement which I calculated exceeds a tolerable level, I will have to be very, very careful. I will have to select more samples. Once again, I have to redo the working. Again, it is exceeding tolerable level. I will conclude the entire population is materially misstated. Able to understand? That's it. That's tolerable level. Now, what is risk of MMS? What is expected MMS? What is projected MMS? Very simple. How much samples I should select in purchases? I first verify controls, right? Controls are working fine. When controls are working fine, do I expect any material misstatement? When controls are working fine, will I expect any material misstatement? When controls are not working fine, I expect naturally more mistakes. When I expect more mistakes, I want to discover them. I will increase my sample size. When the risk is high, sample size is high. When my tolerable misstatement is very low, my toleration is very low, I can't tolerate mistakes. Then when I cannot tolerate a single mistake also, my sample size will be high. Okay, so many mistakes, up to this much level I can tolerate, no problem. The tolerance level, if it is very high, sample size will be low. Now, once I selected sample, I applied audit procedure. See, there are so many factors, risk of MMS, expected MMS and tolerable MMS. By considering all these factors, I selected some 100 units as sample size. I verified all of them. I discovered 2 mistakes. One mistake is anomaly, another one is non-anomaly. Based on non-anomaly, now in out of 100, one is, see, it's not out of 100, it's out of 99. Out of 100, one is non-repetitive, ignore it. So out of 99, how many repetitive mistakes you found? 1. Out of 99, 1 means, out of 9,999, how many? Are you getting the point? That mistake which you established as anomaly, excluded from the projection. From the sample, from the projection, both you exclude. Out of 10,000, minus 1 is a non-anomaly. So balanced population is 9999. Out of 100 samples, 1 is anomaly, only 99. Out of this, you found another one. So how to project? Only you should project for 9999. This is called projection. Projection is the end result of sample verification. It is not the starting point to select sample size. Understood or not? Projection is something which we do after end of sample verification. After verification, now we will project. Now projection is not a, projected MMS is not a basis for sample size. Is projected misstatement basis for selecting 100 or 120 or 150? Is it basis for me? No. Are you getting the point? All of you. I understand. You didn't study all this. And this is what asked in exams. Next. So, what are the factors that influence a sample size in case of controls, in case of details? I clearly explain few points. You read them later. Getting it, all of you? If I have to discuss that, it will take hours. So, projection treatment also, just I explain. Getting it? In controls, no, projection is not required. If control is deviated 30%, population deviation for controls is how much? 30% only, because it is expressed as a percentage. Whereas in test of details, extrapolation is required. Anomaly means what? What is the treatment of anomaly? How to evaluate sample results? What are the precautions you should take while applying test technique? So first, understand accounting system, internal control system. Identify areas which are not suitable for sampling, first of all, like statutory areas, and planning for sampling methods. All the transaction balances shall be properly classified. Sample size, please determine. Select in unbiased way, and result must be analyzed properly. These are the precautions to be taken whenever you are deciding to apply sampling. Are you clear? I explained you clearly the basics and a medium like commendable idea about the terminology. Now you can study those concepts which are pending, but study only from the beginning, that too from the main material if you want in-depth clarity. Are you clear? That's it. So this is sampling chapter. Then we have analytical procedure, we'll discuss. So let's start bank audit. So this we will discuss only from the main material. You can even look at smart notes as well, no problem. But just one chapter you will understand how to read from the main material. Always day before exam, if I have a short notes, I can finish faster. That kind of assumption is not correct. Nothing such. You must know how to filter that. In order to let you to have that kind of exercise, how we filter this, you see. Getting it? We will discuss the entire point, but still we will not read the entire book. Getting it? No. So first of all, how to do audit of a bank? What is a bank audit? Bank is first of all a company. It's a company registered under Companies Act. Only thing is they are in the business of banking. The business nature is what? Banking, financial banking. Getting it? Again, blood bank, power bank, all this will come. Getting it? So bank means what? Something where we can store. Bank means a storage unit. That's called a bank, kiddie bank. Yes or no? So banking is a company registered under Companies Act, which has got license from RBI as per Banking Regulation Act. Now, for this banks, there is a big regulatory, a strict supervision from RBI. Getting it? Even the appointment of auditor of bank is not that easy. First of all, in order to become the auditor of a bank, you must have certain eligibility requirements. You must have certain eligibility requirements. Suppose RBI has, for banks, the auditors are broadly two types: statutory central auditors and simply statutory auditors. When we say statutory auditor, it is branch auditor. Statutory central auditor means main auditor. We can also call him as principal auditor. His report is what we will send to public. Generally, for a company, in order to become an auditor, what is the qualification? You must be a chartered accountant having COP. For bank, not just that. The qualification, eligibility criteria for banks is much very complicated. Somewhere in April 2021, RBI has given directions regarding eligibility criteria for auditors in order to be appointed as statutory central auditor for banks. Roughly, I'll tell you, I'm not giving accurate picture, but roughly I'll tell you, the firm should have minimum 15 plus years in the existence. The partners must have continuous, one partner at least must be associated with the firm for minimum 15 years. Another two partners must be associated with the firm for minimum 10 years. Another two partners must be associated with the firm minimum for 5 years. There must be total 7 full-time CS associated with the firm. Able to understand? Out of them, one partner or two partners must have minimum, one partner should have DISA qualification. Out of that, again, one partner should have been working in the financial sector. Conducting audit of financial entities from past 10 years. Likewise, there is a criteria. I'm not exactly sure about the criteria, but there is a criteria like this much strict. Now in India, how many audit firms will meet with that criteria, you know? Hardly 100 or 150 will be there. Out of 3,000-4,000 audit firms that are there, not even 3-4, more than 10,000 firms were there. More than 10,000. It's big number only. It's not small number. Hardly 150 firms only meet with that criteria. And only out of them, 10 or 12 will be selected for bank audits by State Bank of India. Able to understand all of you? So it's not that easy to satisfy in order to get allocation for bank audit. And further remember, in case of nationalized bank, directly C&AG will appoint the auditor, especially for State Bank of India. Remaining nationalized banks only will appoint directly, not even members' approval. Bank directors can appoint, but prior approval of RBI is required regarding the auditor. In case of private sector banks, board of directors will recommend, members will appoint, but before board of directors make a recommendation, prior approval of RBI is required. This is the main provision. Now the auditors of a bank will also give same audit report, 700 format. Same principles apply, but CARO do not apply. And bank auditors have to give additional report called long form audit report. Now in this bank, the major point in our subject is, in this particular chapter, is how to do audit of advances. What are various NPA norms for advances? This is one typical topic. How to calculate drawing power. In the last exam, they asked the calculation of drawing power question. Getting it? All that we are going to learn. There are various types of banks: commercial banks, regional rural banks, cooperative banks, payment banks. Payment banks are those where you can save little amount of deposit. Payment banks are those where you can save little amount of deposit. There is a maximum limit up to which these banks will accept deposits. And development banks, small finance banks. Getting it? Now, Reserve Bank of India is the one which is entire functioning of the banking industry is regulated by RBI. So RBI is responsible for development and supervision of Indian financial system, the monetary credit policies, all that. The functions are currency issuance, regulation of currency, banker to government, banker to various types of banks, and regulating the activities of various banks. And remember, in India, no bank can commence business or open new branches without getting license. Further, bank operations can be conducted only at branches. Only at branches. So in compliance with regulatory impositions, generally accepted accounting principles, all that. Now the bank's head officers, controlling officers must contain delegation of powers, accountability. They should delegate the powers to people, all that. They should recruit and delegate the powers to the CEO, managing director, directors, like that. They should lay down their own policies. And all these policies that are being laid down must be in compliance with RBI. Next. Regulatory framework. What are the laws and regulations that are applicable to banks? RBI Act, Banking Regulation, Companies Act, Acquisition and Transfer of Undertaking, RRB Act, and Acquisition and Transfer of Undertaking, 1980, 1970, any one you can remember. IT Act, PMLA, Prevention of Money Laundering Act, SURFACE. This is called SURFACE. Securitization and Reconstruction of Financial Assets and Enforcement of Security Act, Credit Information Companies Act, Payment Settlement. These are only few. National Payment Settlement System, there are various acts also regarding that. In this, any 5 you have to write in exam, if at all regulatory framework question comes. In the above, they may ask you question on write about banking operations. 3 marks question they can ask, only this. Getting it? Next. Now, so still we have little more to, so much else to discuss. We'll take some few minutes gap, and then we'll let us finish this bank audit chapter. So today we will finish, in this session itself, we will finish bank audit chapter fully. Getting it? Yeah. So the continuation. So what are the central statutory auditor or statutory central auditor in case of a bank has to furnish reports along with audit report? See, the bank main auditor has to give audit report, right? That is common, that a common requirement that we know. But in addition to that, there are few other reports which the central auditor has to give. So what are they? So central auditor has to give a report on adequacy and operating effectiveness of controls over financial reporting. This is called IFC reporting, 143 subsection 3 clause I, that requirement. This do not apply for one person company, a small company and a private company whose turnover is less than 50 crore and borrowings less than 25 crore. Remember? Yeah. And the central statutory auditor shall also submit long form audit report. We shall submit a report on compliance with SLR requirement. We shall submit a report on whether IRAC norms and provisioning norms are issued by RBI are satisfied. IRAC means income recognition, asset classification. Income recognition and asset classification norms, are they satisfied or not? You have to give a report. And we have to give a report on any serious irregularities that were noticed in working of the bank which require immediate attention. And we need to give a report on adverse credit deposit ratios, especially in rural areas. These are the reports which we have to file with RBI. This can be asked as a 4 marks question. What are the reports that central statutory auditors furnish in case of audit of banks? Now, what is bank accounting system? The banks are broadly categorized into 3 parts: non-computerized banks, or partially computerized, or fully computerized. Nowadays, you can only find fully computerized banks. So, fully computerized banks will have core banking solution software. They will be implementing core banking solution software. It is something like anywhere, anytime banking. Getting it? Now, with core banking solution, if a bank is having core banking solution, even though you are having account in Hyderabad, you can operate that account by visiting the branch in the Chennai. Getting it? So, any transaction of a branch customer can execute the transaction anywhere else. A customer of one branch can execute the transaction in any branch of the bank. So, in computerized environment, it is very important, imperative, necessary that auditor is familiar with parameters as per latest RBI and see that they were built into the system. Then, auditor should not go by assumption that system generated information is correct, can be relied upon without evidence that demonstrate the systems are meeting with the parameters. So he should use skepticism, prudence. Whenever he feels something manually needs to be checked, to check the authenticity and consistency of the transaction. Remember, just because loan is granted, system will collect the loan, EMI recovery, everything is fine. Loan is collected on time by the computer. Computer will debit the customer account on time. Just because everything is fine, doesn't think the loans given by the banks are proper. First of all, you need to check based on what documentation bank is giving loan. How credit worthiness is being assessed. Able to understand? Just because computer controls are perfect, don't think the financial statements are completely true and fair. What is the difference between computerized branch and non-computerized branch? There is a possibility of this question. All bank activities are done through computer. They are done manually. Anywhere, anytime, only in working hours. Shortest time, longest time. More productivity, more efficiency. Less productivity, less efficiency. Able to understand? Now, what are the points to be kept in mind while drawing audit plan of a bank? If they ask you specifically audit plan of a bank, you need to write this point. What are the points to be kept in mind while drawing audit plan? You need to write SA 300 points. Audit strategy planning chapter is there, that points you have to write. But if they use the word bank, you should write these points. So what points? Level of operations, features, compliance based on previous reports, audit risk based inadequacy or breach of controls, all that. Like what are all the breaches that bank identified? All these points you should keep in mind before you draft an audit plan. Then we have important topics we will discuss. Now, provisions relating to appointment of auditors in case of a bank. For all regional rural banks, Board of Directors of the bank will appoint with the approval of central government. But for SBI, C&AG will apply by consulting with the central government. However, the subsidiaries of SBI were there, right? For them, the auditor will be appointed by SBI itself. In case of remaining nationalized banks other than SBI, Board of Directors will appoint subject to approval from RBI. Whereas remaining banking companies, remaining means what? Other than nationalized means private banks, appointed by shareholders at AGM. Here also Reserve Bank of India approval is required. Are you clear? Remuneration. In case of nationalized banks, SBI, RRBs, it will be fixed by Reserve Bank of India. Whereas in case of remaining banks, it is fixed as per 142 section, fixed by shareholders or the manner fixed by the shareholders. That's it. Now, what auditor has to report in case of a bank? First of all, format of audit report is similar to standards. We will comply with SA 700 format. We will give additional disclosures. The central auditor shall give additional disclosures about unaudited branches number. What central auditor shall give? Unaudited branches number. Not only that, even quantification shall also be given. If you recollected, I showed you other matter paragraph of SBI. 16,000 branches were not audited, whose deposits are 35%, whose advances are 25%, whose interest income is 25%, whose expenditure is 20%, like that percentages. Quantification is also important, understood or not? So quantification of advances, quantification of deposits, quantification of interest income, quantification of interest expenditure, that should also be given. Not only unaudited branches details, how far these unaudited branches account for in total advances, total deposits, total interest, total expenditure. Clear or not? Next. Now whatever matters 143 section says, checklist items, all those matters apply. And for what about Caro? That is not applicable. Now next. In addition to that, in case of nationalized bank, the auditor shall make a report to government, in which he shall make the following. So this is also part of audit report only. In case of nationalized bank, audit report will be addressed to whom? Central government. So we will put the president, to the president. Whether the balance sheet and profit and loss account contains all particulars so as to exhibit true and fair view. Whether he has been given any explanation or information requested, is it satisfactory? Whether transactions of the bank are within the powers of the bank. Whether returns means summary received from offices and branches have been found adequate for the purpose of audit. Similar to 143 items. We have seen similar points in societies audit. Same points we have seen in company audit. Able to understand? Hey, what happened, man? These are the points which you have to report, positive or negative. This itself can be asked as a 4 marks question. In case of nationalized bank, the auditor has to address the report to the central government. What are the points that auditor shall cover in the audit report? They'll ask you 4 marks, all the 4 points you have to write. Whether profit and loss account balance sheet contains all particulars and are giving true and fair view. Whether explanation information you asked for is given by the bank or not. Whether transactions are within the powers of the bank. Have you received branch returns and office returns, whatever is necessary for the purpose of audit? Getting it? Next, in case of banks, LFAR report shall also be given. This is called as LFAR report, long form audit report. It has to be submitted by auditors by 30th June every year. Getting it? So, in order to submit by auditor, central auditor by 30th June with RBI, central auditor should get branch LFAR much before. Getting it? Then he will consolidate and then file with the RBI. So, the terms of appointment in case of public sector bank, private bank, foreign bank, nothing but all banks. Require auditors to furnish a long form audit report. All banks, the auditors have to give LFAR. The matters, sir, what will be there in this long form audit report? That matters will be specified by RBI. We need to ensure timely filing of LFAR, proper planning is required. While format of LFAR does not require executive summary, members may consider providing a summary. Like in LFAR, there is no summary requirement and all. But if you want to give summary of observations in LFAR, you can give a summary. Getting it? Then reporting of fraud. The auditor of a bank has to give a report to RBI in case if you find an act of excess power, or if you smell any foul play, or if you find any fraudulent activity, or if you suspect any fraud, you need to immediately report to RBI. This requirement not only applicable for stat auditor, but also applicable for internal auditor. This is as per circular given by RBI. Able to understand? But remember, it does not mean you are expected to look into each and every transaction, but look at the system as a whole. While performing your duties, if you come across any instance, please report the matter to RBI in addition to those charged with governance of the bank. Are you clear? The bank auditor also has duty to report on fraud. 143 subsection 12. So you have duty to report on fraud, which is same as company auditor. Now the actual discussion which is important in banking is from question number 14. So write about audit of advances of a bank. Advances means what? Advances constitute what? Funded advances, non-funded advances. Suppose bank gave a guarantee on behalf of customer to some supplier. The supplier sent the goods to the customer. Customer paid money later, no problem. But here I gave a guarantee, no. That is called non-funded advance. What is that guarantee is called as? Non-funded. Non-funded means because of giving guarantee, is there any outflow of cash? No. What is funded? Customer approached me for term loan and I dispersed the loan also. Outflow is there, right? That is called as what? Funded loan, funded advance. Funded loans are the one where there is actual transfer of funds. Non-funded are the one which do not involve transfers. Now what these advances generally comprises? It may be term loan, cash credit, OD, bills, risk sharing basis participation, interest bearing staff loans. Next, the bank has to disclose advances in the balance sheet as below. Bills purchased how much, cash credit OD how much, loans repayable on demand how much, term loans how much. And these advances shall be further described into out of them how much is guaranteed by security, out of which how much is guaranteed by guarantee, and what is the unsecured portion. Further you should show breakup. How much advances were given in India, how much advances were given outside India. Within India, again you should show how much advances loans are given to priority sector. Priority means agriculture loan, housing loan, MSME loans. These are all comes under priority sector. How much loan is given for public sector, banks and others. Now how much amount you need to receive from other banks, how much amount you need to receive from others, bills, syndicated loans, others. What is syndicated loans? Consortium loans, I will discuss that later. Getting it all of you? Next. Now, when verifying audit of advances, auditor has to verify large advances 100%. Recommendation is what? Auditor should verify 100% verification of large advances. Whatever auditor feels it is big advance, we have to verify 100%. Remaining advances, we can verify on a sample basis. The auditor should examine all large advances, whereas other advances may be examined on sampling basis. What is a large advance? Large advance is an advance where if the year-end outstanding balance is in excess of 2 crore or 5% of the aggregate year-end advances, whichever is less. Maximum how much is there it is treated as large advance? 2 crore. If at all the outstanding loan is 2 crore for a customer, it is straight away large. Or if it is 5% of my total outstanding loans, then also it is treated as large. Suppose my total loans, mine is a small rural branch. My total loans itself is 10 crore. 5% of 10 crore means what? 50 lakhs. In my branch, any loan which is having more than 50 lakhs outstanding amount is a large advance. Suppose my branch is in a very big cosmopolitan city where the total loans are 1000 crore. 5% means 50. 2 crore itself is treated as large advance. They'll give you MCQ on this. Able to understand? Large advances we will verify generally 100%. Small advances we apply sampling. Next. The loans are broadly divided into, see, banks will give loan based on two conditions. One, they will look at your repayment capacity. Two, they will look at the security that you are offering. Getting it? Based on repayment capacity, if at all you have repayment capacity, then only application will go further. And then in order to disperse the loan, they will ask for some security. Are you getting the point? You might have seen this kind of comments. Why education loans are having highest rate of interest? You might have seen comparing Vijay Mallya post and all. For manufacturing beer, the bank is giving at rate of interest 8%. For education, the bank is charging 17%. Why this partiality? Banks are not charging lower rate of interest because they are doing business, because they offered security. Education loan is highly risky loan. The recovery rate is very low. Getting the point? Iva padichi pass aayittu job vandittu appuram repay pannanum. So the person who has granted education loan has to finish studies, secure a job, get a salary decently, then he should pay. Able to understand? Only then bank will collect. So that's why risk is high, rate of interest is high. Unsecured loans, rate of interest is high. Very simple. Secured loan, rate of interest is low. Housing loan, rate of interest is 7%. Car loan, rate of interest is 8 and of 9%. Because the secured, if the customer do not repay, I'll sell the house, I'll sell the car at least and recover the money. Able to understand? Now, you are giving security to a bank, right? Whatever the security you are giving, that's called primary security. What is it called as? Primary security. Sometimes, if at all the bank thinks the primary security that you are ready to offer, if it has high value fluctuations, banker is not able to satisfy with primary security. He will ask for not second security but collateral security. Collateral means what? If the primary security fails to discharge my liability, then I will come and touch your secondary security, that is collateral. Suppose to buy a house, I offered my land plus another land too. 2 lands I offered as security and got a housing loan. Both are primary only. Getting the point? Suppose I offered land, this is primary security. If at all this land value was low at the time when I default, if at all, and at the time the value was low, then take my land as second one. This is collateral security. So only if this land do not give, then go for this. Whereas primary means what? Both the lands are primary security. Able to understand? Next. What are the most common type of security that is offered to the bank in order to get a loan? Goods, stock, debtors, trade receivable, nothing but current assets. We have seen this point in Tata Motors for getting working capital loan. Gold ornaments, immovable property, plantations, insurance policies, securities, all these can be offered as an asset security. Now, how do banks create security? In case of immovable property, we call it as mortgage. Mortgage is of 2 types, equitable mortgage, registered mortgage. Equitable mortgage is something pawnbrokers do. Have you heard of pawnbrokers, PAWN? What they do? They take some property and then give you loan. Some pawnbrokers or some lenders, in an unorganized sector lenders, how do they give loan? They take your house documents. Only physical documents they'll take. And they'll take PN, promissory note. And they'll give you loan. Here, is the mortgage registered on my name? This is equitable mortgage, which is risky. Registered mortgage, how banks will give housing loan? The housing loan documents will be registered in the name of bank. Under mortgage, there will be a mortgage deed. Getting it? If there is a mortgage deed, in the sub-register office on this house property, mortgage is created. The borrower cannot sell the house without release of mortgage. What's the difference between registered mortgage, equitable mortgage? What happens? In equitable mortgage, I gave my house property documents to lender and got loan. I go to register, I will put a document, application that I lost my house documents. Registrar will give me new house documents after following some procedure. I will sell my house. And the person who lent me, he is still thinking that house is in my hands. That's equitable mortgage. That is dangerous. Equitable mortgage is affected by mere delivery of title deeds with an intention to create security. Whereas registered mortgage, mortgage deed will be there. Both the parties will sign. It is registered with the registrar office as well. Understood or not? Pledge. Gold loan is best example of pledge, where you deliver the goods and take the loan. After you repay the loan, take back your gold. So this is called pledge. Hypothecation. Car loan, bike loan, current assets loan, working capital loan. These all will be given under hypothecation. Hypothecation means what? I will have ownership on the goods until you repay. Once you repay full loan, I will release the ownership. Only after I release the ownership, you can sell it. Current assets, there the ownership is on the go down premises, like on the stock, but the stock is continuously moving. Able to understand? Here the loan is given based on stock statement, current assets statements, which is signed by some auditor. Able to understand? Next, assignment. Assignment means what? Example, assignment of life insurance policy. Assignment means assignment of life insurance policy. It represents a transfer of existing or future debt or right or property belongs to a person in another person. Only actionable claims are accepted by a bank by way of security. Like actionable claim means what? Where I have right to recover some money at a future date. Getting it? LIC policy is an actionable claim. Maturity amount is an actionable claim. Where through by enforcement under law you can receive that money. You can actionable means what? Enforceable under law. Now I have LIC policy. Right now if I surrender, it will fetch me 30 lakhs money. Example. But I want suddenly money. But I don't want to surrender because I have so many benefits after 5 years. I went to a bank. Please take this LIC bond and take this assignment deed. I took this deed from company and I'm giving it to you. You register with the company, insurance company. Give me 20 lakhs loan. Banker gave me. Only after I repay this loan, assignment deed he will release. He will give me NOC. Then if I go and submit that NOC to insurance company, they will give me maturity money. Otherwise they will not give me maturity money. Because the policy is assigned in the name of bank. Set off. Set off means what? See, as a student, you will not be getting credit card, correct? But there is one way to get a credit card. Suppose if you have some money, some 1.5, 2 lakhs money, if you take from parents or whatever, you go and deposit with a bank, fixed deposit. 2 lakhs you deposit with SBA and now ask credit card. By keeping the deposit as security, they'll give you credit card. They'll give you 1.5 lakh limit. Now you use the entire 1.5 lakh limit and you're not paying. What banker will do? You made a deposit, no? And they gave you a loan, right? They'll set off both. Are you getting the point? Set off means what? To combine two accounts. One is a deposit account, another one is loan account of the same person. Provided both accounts are in the same name and the same right. The capacity of the account holder in both accounts should be same. What is account capacity means? What is same capacity? Suppose I have got credit card, but it's actually an add-on card of my relative or my friend. My friend is original account credit card holder. He gave me another credit card. Just add-on card. Additional card can be added. Getting it? Now I am using that card. I am swiping and I am using it. Add-on card is in my name only. But primary holder is what? My friend. I am only a user. That is not in my name. Now I have a deposit in the bank. My friend not repaying. In fact, it is me. I have not repaid. But primary holder is who? My friend. Now can a bank apply set off? They can't. Because deposit is mine. This card is him. Just because I am using, it is not used in my right. Able to understand? Lien is not required. All of you understood or not? Next. NPA norms in case of a bank. See, NPA norms here has been discussed separately for term loan. NPA norm for overdraft and cash credit is different. NPA norm in case of bill purchased and discounted is different. In case of term loans, the norm is slightly different. OD and cash credit is different. And even bills purchased, it is different. Let's look at the first and third point. Suppose I took a term loan. Term loan means what? Where the duration of the loan is a particular term. and I will be repaying every month some interest or installment. So that is a term loan where I will repay after a particular period of time. Suppose if the interest or installment, if it is remaining overdue means what? Cross due date. Cross due date and overdue for more than 90 days in respect of a term loan. A term loan will be treated as NPA if it is overdue for more than 90 days. Are you getting the point? Same way, bank purchased a bill and after discounting, money is given to the drawer. The drawer, whoever accepted the bill, that fellow did not pay after the bill maturity date. Still 90 days over. Bill is matured 90 days back. On the 91st day, the bill whatever bank discounted, the drawing account is treated as NPA. Which means, in case of term loans and bills purchase, the criteria is overdue for more than 90 days. Now, when cash credit and overdraft will be treated as NPA if it remains out of order. A cash credit and overdraft is treated as NPA if it remains out of order. What do you mean by out of order? The outstanding balance in the OD account, outstanding balance in the cash credit account in excess of sanctioned limit and drawing power. It is in excess of sanctioned limit and drawing power. Now what is sanctioned limit, what is drawing power is a question. Based upon your repayment capacity, sanction limit is fixed. If you can repay up to 1 crore, you will be given 1 crore loan. You will be sanctioned 1 crore loan. But I told you, based on repayment, I will not give loan. I want security as well. Suppose you want working capital loan. Based on your turnover, based on your profit, based on your scale of operations, I gave you 10 crore sanction limit. To your company, how much is sanctioned working capital loan? 10 crore. But you gave me current asset statement, which is certified by a CA. The statement shows only 8 crore. The statement shows the stock balance of only 8 crore. This is your own stock. Out of this 8 crore, I will keep some 30% margin. There is no guarantee that always 8 crore worth of stock there in the godown, no. So I will look at your analysis, stock consumption analysis, 30% margin I kept. Approximately 5 crore I gave you drawing power. Which means I gave you working capital loan sanction, right? 10 crores. But can you draw 10 crores? You can draw only up to 5 crores because the power given to you only up to draw 5 crore. This is drawing power. Suppose your drawing power is 5 crore and your sanction limit is 10 crore. Suppose you have withdrawn for more than 5 crores or more than 10 crores. If the outstanding amount in a cash credit, outstanding amount in a cash credit or overdraft, if it is more than the drawing power allocated to a customer, that account shall be immediately treated as. Now you may get a doubt. Sir, if a customer is given drawing power 5, he can only withdraw up to 5, right? How come he withdraw more than 5? Getting the point? Suppose last time, 2 months before, I gave you 6 crores approval, drawing power. At that time, your stock statement is showing 9 crore. You withdraw an entire 6 crore. Now, I sent a stock auditor to conduct stock audit. A stock auditor came and conducted and certified that it is only 7 crore. Total stock. Now, immediately in my system, I revised my drawing power to 4 crore. Right now, customer is having outstanding amount more than revised drawing power. It should be treated as NPA straight away. The moment it is treated as NPA, please recover. Please recover as soon as possible. If the customer paid, realizing that stock value is low, customer paid the money, I will again treat it as a regular account. Are you clear? So, if outstanding balance is crossing sanctioned limit drawing power, we will treat it as NPA. Or outstanding balance is less than sanctioned limit drawing power, but no credits continuously for 90 days on the date of balance sheet. As on 31st March, customer is having outstanding amount. He withdrawn less than 5 crore. 5 crore is drawing power, 10 crore is sanctioned, but withdrawn how much less than 5 crore outstanding. But he withdrawn 90 days before. He should pay within 90 days, no? Overdue for more than how many? 90 days. Continuously 90 days, customer did not pay single rupee as on balance sheet date. We will treat it as NPA. We will treat it as what? That's why, what is better treatment, in case of OD cash credit? Pay first and withdraw again. Best. Able to understand? Or, credits are there. Customer is repaying OD and all. But it is not enough to cover interest itself. Bank is, customer withdrawn 5 crore. In the entire 1 year, bank debited to that OD account 75 lakhs interest. Customer did not pay, hardly credited 50 lakhs. That is not even enough to cover interest. Then also it is treated as out of order. What is difference between OD and cash credit? OD means your current account has 10 lakhs. I will give you permission to withdraw up to 12 lakhs. Over and above your balance, you can draw, overdraft. Cash credit means it's a separate facility. I'll give you a separate account for withdrawing loan. That's a separate facility. That's a basic difference between OD and cash credit. And OD and cash credit will become NPA when? If it is out of order. Term loan will become NPA when? Interest or installment overdue for more than 90 days. Bills purchased or discounted will become NPA if the amount is overdue for more than 90 days. Are you clear? Now, remember, NPA classification should be based on record of recovery. Availability of security is not to be taken into account. What do you mean by that? I gave a car loan. Car value is 25 lakhs. I gave only 15 lakhs loan. The EMI was 25,000. Customer defaulted. More than 3 months over. 90 days crossed. I should straightaway treat it as NPA. Sir, car is already there. No. We can recover and sell. No. Why should I treat it as NPA? No, you should not argue. Security there or not doesn't matter. Customer has took a loan and he is not repaying. 90 days crossed. That's it. Treat it as NPA. It should be based on recovery only. NPA criteria should be applied based on recovery. Non-recovery means non-performance. That's it. Security is there, high value is there, safety margin is so much. Ignore all that facts. Are you clear? However, in case of central government guaranteed advances, in case of central government guaranteed loans and advances given by the bank, even though the customer is not paying more than 90 days, we will not apply NPA norm. We will not apply NPA norm because government has given guarantee. Damn sure I will get from the government. Are you getting the point? In case of loans and advances given by keeping security of term deposit, National Savings Certificate, Kisan Vikas Patra, Indra Vikas Patra, based on these patras, if I give loan and that loan was defaulted more than 90 days over, I will not treat it as NPA. These two are exceptions. These two are exceptions. Are you getting the point? As long as margin is there in the security, I will not treat it as NPA. Are you getting the point? Anyhow, once again I will get below. There once again I will discuss in detail. And further, once an account of a customer in my bank is treated as NPA, all his loan accounts in the same bank shall also be treated as. So, asset classification will be borrower wise, but not facility wise. That's it. All of you understood. They have given an example here. So, when do a overdraft or cash credit is treated as NPA? Now, what do you mean by overdue? Any amount due to the bank, if it is not paid on the due date, the facility is treated as overdue. What is the provisioning norm? Once it is become an NPA, first 12 months it is treated as substandard. 15% provision you keep it, whether secured or unsecured doesn't matter. Once if it crossed 12 months, after it is classified as substandard, crossed 12 months, up to next 1 year, secured portion 25, unsecured portion 100, up to 3 years, increase it to 40 and 100, more than 3 years, 100% you make provision. And once you treat it as loss asset, that's it, customer will not pay. Write it off completely at 100. Later you sell the asset, recover, right? Recovery of NPA, what to do later we will discuss. Clear? Next. Now the next one is special NPA norms. So special NPA norms is also an important question. Special NPA norms. Once we discuss special NPA norms, we have question on drawing power calculation, all that. Oh, I'll do one thing. Before this, I'll discuss drawing power calculation, all that. Then we will discuss special NPA norms. Then we'll discuss how to do audit of advances. Then how to do audit of incomes. That's it. Bank audit chapter will be closed. Are you all clear until now? That's it. So let's continue. So how to compute drawing power? How to compute drawing power? First of all, what is drawing power? Drawing power is generally addressed as DP and is important concept for cash credit facility which is getting from banks and FIs. So drawing power is the limit up to which a firm or company can withdraw. What is sanction limit? It is a total exposure that a bank can take upon a particular client for OD, export packing credit, non-funded exposure, etc. Drawing power is amount calculated on security less margin. What is the value of the security? Minus margin they will give. Bank will give margin for price fluctuations of the asset. Now, what is the rule? What is the drawing power and sanction limit rules? They'll ask you, write a short note on drawing power and rules for drawing power. They'll ask you this question for 4 marks straight away. What are the rules for drawing power? All accounts should be kept within both drawing power and sanctioned limit at all times. The moment if the outstanding balance exceeds sanction limit, it is treated as irregular and shall be brought to the notice of the management. And drawing power is to be required based on latest stock statement. It should not be older than 3 months. The outstanding in the account based on drawing power drawing power which is calculated from stock statement which is older than 3 months. It is also treated as irregular, NPA. If at all customer has withdrawn money, customer has submitted stock statement 3 months ago. Now latest stock statement is not yet submitted. Then the account is treated as irregular. That loan account is treated as irregular. Now how drawing power has to be calculated? So below they have given, you see. Suppose the client is having right now in the godown 1000 rupees worth of stock. Out of which 300 rupees worth of amount is not yet paid to supplier. So primary right is with whom? Supplier. That is not my stock. Same way, another 300 rupees worth of stock I obtained through a guarantee from another company or another bank. So LOC, which means what is my own stock value? 400. Now margin, bank will give 25% margin, no? So some 100 margin. So only 300 drawing power bank will give you, which means bank will give you loan amount only based on your own stock, not based on your credit purchased stock. Are you clear? Same way, total debtors 1000, ineligible means provision doubtful something. So 800. Bank is creating 40% margin. So net amount that bank can give is 480. Totally how much drawing power? 780. This question amounts are slightly different but was asked in the recent exam for 5 marks. May exam. Are you getting it? Next. So what auditor has to check? Auditor has to check the stock statements, quarterly returns, everything you must scrutinize. Annual reports submitted by borrower should be verified. Monthly statements for respective months should be verified and should be compared with the previous month and identify reasons. Especially if the funded exposure is more than 5 crore, means total amount to disbursed to a customer is more than 5 crore. Stock audit must be conducted by bank. Auditor can also advise stock audit in some other cases if you think it is important. Branches should obtain stock audit report from lead bank in case of consortium working capital. That we will discuss later. What is consortium? All that. The report submitted by stock auditor should be reviewed during the course of audit, and special focus should be given for comments made by stock auditor regarding valuation of stock, all that. That's it. So this is the point. What are the audit requirements related to stock audit? 3 marks question they can ask. Able to understand how a different question can come. Next. So audit of advances is also easy. Audit of advances is an easy point. I'll come to that later. First, special NPA norms. What are special NPA norms? What is the NPA norm that we discussed actually? A term loan will become NPA if the amount is overdue for more than 90 days. A cash credit or overdraft will become NPA if it is out of order. A bill purchased or discounted is NPA if it is overdue for more than 90 days. Same logic. Now, these are some loans. In this, only important points I'll cover. Government guaranteed advance I'll cover. Advances under consortium I'll explain. Accounts where borrower that I'll explain. And advances affected by natural calamities, agricultural advances. These points I'll explain. Getting it? Now, what is the treatment for government guaranteed advance? Generally, if I gave a term loan, government also gave a guarantee. Which government? Central government, not state government. Central government gave a guarantee. And this customer defaulted. 90 days over. Generally, what will I do? I will treat it as NPA. But since central government guarantee is there, I will not treat it as. It will be still classified as standard asset, but treated as NPA for income recognition purpose. What is meant by that? See, generally, if there is a overdue in the term loan more than 90 days, I will treat it as NPA. Interest income I will not recognize. I will create provision on the asset loan. Correct? This is what consequence of NPA. Once a loan is treated as NPA, what are the consequences? On that loan, we will classify it as substandard, create 15% provision, and on that loan, some interest is accrued, right? That I will reverse because it is not realized. And will I recognize further interest on accrual basis? No. NPA loan, interest shall be recognized on cash basis. You might have understood. That's what. Suppose if government guarantee is there, loan amount, I will not treat it as NPA. If I do not treat it as NPA, will I have to create provision for substandard category like that? No. What about interest? That I will not recognize. From interest point of view, I will treat it as NPA. Are you getting it? But loan point of view, I will not classify that as NPA. I will not create a provision. Understood or not? Suppose if it is term deposit, national savings certificate, Kisan Vikas Patra, Indra Vikas Patra, even interest is not treated as NPA. Even though customer defaulted, still the bank will recognize interest on accrual basis as long as margin is available. So that is a treatment. Getting it? Next. This video will be there in YouTube. Later you once again watch. Bank audit video will be uploaded. I told right, out of 25-28 hours which I took, around 26 it will come effectively net recording, 25-26, 12 I will upload on YouTube. So you can watch again and again them. Getting it? Next. So in other words, provisioning norm do not apply and interest is recognized only when it is realized. This relaxation is not applicable in case of state government guaranteed advances. Understood or not? Now what do you mean by advances under consortium? Consortium means, see, every bank has to maintain liquidity ratio. Every bank has to maintain some liquidity ratio. Deposit advance ratio they need to maintain. Now, that is called as credit deposit ratio. It should not be adverse. If at all credit deposit ratio is adverse, credit means loans given, deposit means customer how much amount accepted, and after SLR, after CRR, you have to maintain little more liquidity. Only balance fund can be given as a loan. Able to understand? Now, A customer approached me, a big customer approached me. Suppose Tesla is planning to incorporate in India. Let us assume now they stop the plan. Let us assume in future they want to. They want 2 lakh crore loan. They want 2 lakh crore worth of loan, for which they are offering their factory situated in United States worth of 10 lakh crore as security. Getting it? They have a factory in United States. 10 lakh crore is the value of the security that they are offering, just to give 2 lakh crore. And repayment capacity, past track record, everything is excellent. Literally speaking, they are eligible for 5 lakh crore, but they are only asking meager 2 lakh crore. But the problem is, my bank cannot give 2 lakh crore, because I have liquidity norms to be maintained. I have so many problems in order to give 2 lakh crore, but your amount, your loan application is worthy eligible. What will I do? I'll give you 2 lakh crores, but from my pocket I'll give you 50,000 crore. On your behalf, I will go and talk to remaining banks, and all of us syndicate will form as a syndicate and give you totally 2 lakh crore. This is called consortium arrangement. This is called syndicated loans. So I'm SBI, I went to ICICI Bank, I went to HDFC Bank, I went to Indian Overseas Bank, or I went to some syndicate bank. Getting it? I went to all of them, and all of us together we gave 2 lakh crore to the Tesla company. Now here I am the leader. I am the lead bank. Who took lead for this entire project, entire loan? SBI. SBI is called as lead bank. These are called as member banks, or simply called as other banks. Now here, how I will recover loan from the customer, EMI, how I will recover? Lead bank may recover entire loan and distribute share to respective banks, or the customer may say, sir, I will pay all 5 banks respectively. Now tell me, is lead bank responsible if the customer defaulted to other banks? No. We are just a syndicate. I am only taking lead for administration purpose. Every bank will give loan to customer as per their own criteria. I am not compelling anybody. I am not giving guarantee on behalf of customer to anybody. Able to understand? It is just that customer came to me, because I am unable to give, I am asking you to give. Don't give me based on me. Based on customer credit profile you give. If you want, I will collect EMI and give it to you, no problem. But I am not giving guarantee on behalf of customer. I am not giving security on behalf of customer. Yes or no? Now here, how NPA norm should be applied? NPA norm should be applied by individual bank based on their record of recovery. Example, customer is paying SBI on time. HDFC Bank is getting on time. ICI is getting on time. Indian Overseas Bank and Syndicate Bank, they are not getting on time. They are not getting on time. Like they both were defaulted more than 90 days. Now all 5 banks should treat this loan as NPA, or only those 2 banks? Exactly. That is what this entire discussion is. Understood? Now consortium advances means advancing loans to borrower by 2 or more banks jointly. Yes or no? Usually the bank with higher share will lead the consortium. Advances should be based on record of recovery by the respective bank. Getting it? Where remittance by borrower are received by lead bank is not transferring to other member bank. NPA will be treated only for the customer. So it is customer responsibility to make sure the payment reaches every bank. Yes or no? So the banks participating need to arrange to get their share of recovery from the lead bank, or get an express consent from the lead bank for recovery from the customer directly. Now, in case of consortium, how much each bank should give to the customer, especially working capital loan, drawing power allocation will be decided by lead bank. The lead bank will be responsible for computing drawing power and allocate the same to member banks. In special circumstances, at the request of customer borrower, the lead bank may allocate higher or lower share of drawing power to member bank as against share of advances. So drawing power allocation will be by lead bank. Getting it? Example, customer want some 50,000 crore working capital loan. Now my bank, I agreed 30,000 crore, remaining also agreed. Customer came and asked me, sir, ICICI Bank is charging high rate of interest. You please give me another 10,000 crores additionally. So I will take lesser amount from ICICI. Drawing power. So like that customer can come and ask. Next. Understood or not? Next. Agricultural advances. Agricultural advances. See, agricultural advances, we have two classifications. Here one, agricultural advances affected by natural calamities. So two classes were there. Now general agricultural advances NPA norm is this. You see, these all are special norms. 90 days logics and all we will not apply. Here we will apply that particular norm plus 90 days norm wherever it is suitable. Now, so agricultural advances, what is the NPA norm? First of all, whenever a bank is giving loan to a farmer, okay, they will give loan for crops. Getting it? Now, these loans are broadly classified as two types. These loans are broadly classified as two types. Short duration crop loan, long duration crop loan. Long duration crop loan, short duration crop loan. Now, first of all, what is a long duration crop? If the crop season is if the crop season is longer than 1 year, it is treated as long duration crop. Remaining crops are short duration crops. And tobacco, all these are long duration crops. Vegetables, bananas, all these are short duration crops. Many fruits and vegetables are short duration crops. Now, what is the NPA treatment? Suppose if a farmer has taken loan in respect of long duration crop, right from plantation of seeds till the harvesting is the loan duration. After harvesting, he should sell and then repay the loan. Then it is treated as in time. But customer, the time is over. One more season also passed away. I gave loan, one season over, another season also passed away. One season means the crop season. Crop season over, later one more season also over. Suppose a long duration crop is treated as NPA if it is overdue for more than one crop season. A short duration crop loan is treated as NPA if it is remain overdue for more than. Are you clear? Suppose this is the general NPA norm which I will apply. Suppose by the time of harvesting, the customer has to repay, a big natural calamity was affected. Entire crop has been destroyed. The farmer went into loss. Now, what should be the NPA provision? Should you apply the general standard one crop season, more than one crop season, more than two crop season? Do you apply that norm? No. Here, what RBI says is, if at all any loan was impaired because of the calamity, banks may decide their own relief measures. And NPA classification would be governed by the new terms and conditions whatever banks decided. What banks may decide? They may convert a short-term production loan into a long-term, or they may reschedule repayment period, or they may give a fresh loan. In such case, NPA norms will be governed by the revised terms and conditions. More than one crop season, more than two crop seasons, that logic we will not apply. Understood or not? Next. This one. Accounts where there is erosion in value of security or frauds committed by borrowers. What is the NPA norm in case of frauds committed by borrower? Like this they'll ask. What is the NPA norm where there is erosion in the value of security? Anyway, they can ask this question. So what is this exactly? I told you, loan will be granted based on 1, repayment capacity, 2, value of security given by you. Yes or no? Value of security given by you. Now, the security value bank has to periodically assess. Bank has to periodically assess the security value. See, NPA norm is first criteria is what? Based on record of recovery. As long as you are repaying regularly, NPA norm may not apply. If at all you are defaulted, more than 90 days default is there, we will straight away treat it as NPA. So based on record of recovery, NPA provision will apply. Not only that, NPA provision may apply in one more scenario. The NPA provision will attract in one more scenario. When? If the security value has steeply came down. The security offered by the customer, the value is went low. It went low too steep. Customer is paying regularly, no problem. With regard to repayment, no problem. But remember, I didn't give him loan only based on his repayment ability. I gave him loan based on the security given by him. Yes or no? So, even when he default for more than 90 days, that is one way. I will treat it as NPA. But if there is a security valuation came down, that is also one more way I will treat it as NPA. What is it exactly? Suppose customer got a housing loan in one locality. He constructed the house. And that house was constructed after few days because of the environmental changes. That locality was treated as flood prone area. That locality was treated as a flood prone area. Naturally, all the immovable properties that were there in that area steeply came down, the values. The customer house was actually 10 crore. Bank has given 8 crores. Immediately after 1 year, where the outstanding loan was approximately still 8 crores. After 1 year, that locality, the house, so at the time when the house was constructed, the value is 10 crore. Based on this, I gave a loan of 80%. Later, after 1 year, that area was treated as flood prone area or something. Like it is not useful for households. Like that, they certified the area. Now, the value of the house came approximately to 50 lakh rupee. It came steeply down to 50 lakh rupee approximately. Now, what is the value of security now? 50 lakhs. What is the loan outstanding? 8 crore. Is it not even 10%? It is not even 10%. If the value of the security given by the customer is less than 10% of the outstanding loan amount, then that asset is to be straightaway treated as loss asset. Sir, he is repaying regularly. It's okay. Let it be. Be conservative. Security is no more. Getting it? If at all tomorrow he stops repayment, that's it. We don't have anything to recover. Right now, treat it as loss asset and charge it off. Write it off to P&L. Understood or not? Now, suppose no. Customer, we gave a loan worth of 8 crore because the value of the security last time when we inspected was 10 crore. Now, after 2 years, we went and did once again the valuation. Now the valuation was 4 crore. Last time when I valued is 10 crore. Now when I valued again, it is 4 crore. More than 50% of the previous valuation. Current valuation is less than 50% of the previous valuation. If value of the security was less than 50% of the previous valuation, then also treat it as doubtful asset. If it is less than 10% of the outstanding loan, loss asset. If it is less than 50% of the value previously assessed, doubtful. That's it. That's a provision. So erosion means what? Destruction, diminution, which is not prudent. It should be straightaway classified as doubtful or loss asset as below. First apply loss asset criteria. If it does not satisfy, then come and apply doubtful. If that is also not satisfied, happy, leave it. If it is satisfying loss asset criteria, will you again apply doubtful asset criteria? No. If the realizable value of the security as assessed by bank, valuer, RBI, whoever it is less than 10% of the outstanding in the borrower account, then existence of security, please ignore, and the asset should be straightaway classified as loss asset, which means it should be fully written off. Are you clear? Are you observing how I am reading? Every word I put significance. Every word I stop and understand and then go further. Yes or no? Next. Suppose if the realizable value of security is less than 50% of the value assessed by the bank or RBI at the time of last inspection. Last time when we inspected, whatever value. Now when we inspected, what is the value? The difference is difference is more than 50%. Such asset may be straightaway treated as doubtful. Apply provisioning norm whatever applicable for doubtful assets. These are special NPA norms. Understood or not? Next, how to do audit of advances. Here they will check whether credit worthiness has been checked, documentation has been checked, end use of funds. See, this is nothing but the auditor should examine efficacy of controls over advances. What internal controls bank will check, bank will apply. They will ask you this question straight away. It's an easy thing. If you're ready, you can understand. If you read it, you can understand it very simple, because all these technical terms we covered now. Okay. Now, how to audit bank incomes? First of all, remember, if there is uncertainty regarding ultimate collection, bank should not recognize income. Getting it? Which is non-performing asset until it is actually realized. Suppose when a credit facility is classified as NPA for the first time, interest accrued and credited to income account which has not been realized should be reversed. This will apply even for government guaranteed advance, because government guaranteed advance principal we will not treat it as NPA. Interest we will treat it as NPA. Now whatever interest you are treating it as NPA, no, that interest, no, we will transfer, bank will record that accrued interest in memorandum account. And once interest is realized later on, we will transfer from memorandum account to actual P&L account. Yes or no? In society's audit, overdue interest shall be credited to overdue interest reserve account. Similar to this. Getting it? Same way, bills purchased. Suppose I am a customer of a bank and I sold goods. I gave bill. That customer has to pay me. But customer agreed to pay me after 90 days. I went to the bank and gave this bill. Whatever goods I sold, that bills I gave to the bank. Bank asked me, you want me to collect and then give it to you later, or you want to discount it now? I asked for collection. Collection means what? Bank will wait until maturity. They will go and collect from the customer and they will pay me at the time. Now, for this collection, bank will collect a commission or collection charges. When should the bank recognize the collection charges? Whenever the bill is actually collected and credited to customer account. In case of bills for collection, the auditor verify that what is the procedure for crediting the party. The customer account should be credited only after the bill has been collected. Even the commission will become due only when the bill has been collected. So commission should be recognized as income of the year in which it was collected. Understood? Next, bills purchased. Bills purchased or discounted. What does it mean? Now customer came 90 days before, he came and asked me, please give me the money. Later you collect from customer. For this 90 days, opportunity cost of interest I will discount. And I will give you balance amount to the customer. Now customer transaction is settled with the debtor. Now the bank will have to collect from the debtor full amount of the bill. The margin is the profit for the bank. That is called discount or nothing but interest income. Now how should bank recognize this interest income? Proportionate to the time period. Suppose bank discounted on 10th March, whereas the bill is due on April 30th. Now for this 40 days, bank will collect interest. Nothing but bank will charge discount on this. Only balance amount will be given to customer. Now 10th March 21, 30th April 2021. This falls under 2021 financial year. This will fall under 21-22 financial year. Bank is getting discount related to these 20 plus 30, totally 50 days. 50 days worth of interest bank is enjoying now. Now this 50 days worth of interest should be accounted in which year? Proportionately. 20 days interest you will account in March. Balance 30 days interest you will account it in April. That is what here they mentioned. Interest component paid by bank on rediscounted bill is not netted off from that. That's different. In case of bills purchased outstanding at the closure, discount received thereon should be properly apportioned between 2 years. Are you getting the point? The unexpired discount rebate, where part of the discount charges is related to year end, beyond year end, should be recorded as other liability. because that is a discount now recognized, but not related to this year, but related to next year. Income received in advance, something like that, is a liability. Understood or not? Next. Now that's regarding main interest income. The above points are very simple. Interest on sale of NPA, reversal of income, that is also similar. That's what we have already covered. Suppose a loan is treated as NPA. Until the loan become NPA for the next 90 days, bank recognized interest in P&L on accrual basis. But only on 91st day, bank came to know that became NPA. Now what 91st day bank shall do? Whatever interest already recognized on accrual basis but not collected shall be reversed. That's what this point is. That's what this entire point is. Able to understand? All of you? That's it. Now there is a term called takeout finance. Takeout loan is a method of financing whereby loan that is procured later is used to replace the initial loan. More specifically, a takeout loan or takeout finance is a long-term financing that lender promises to provide at a particular date. What is that? Simply, takeout finance means, suppose I purchased a car using a SBI car loan. Originally SBI gave me the car loan, I purchased it. After 1 year, 2 years, ICICI Bank called me. Sir, we are charging lower rate of interest. Okay. So if you transfer the car loan from SBI to here, we will give you lower rate of interest. How do I transfer? I will not transfer. ICICI Bank will give me money. I will repay to SBI. Nothing but until then loan is with SBI. Now it is taken over by. That is called takeout finance. Now you read it, you will understand. Understood everyone? And audit of expenses of a bank is also a very easy thing. Interest expenditure is only the only important. Remaining are general for every organization. So almost we spent on bank audit 1 hour 15 to 1 hour 20 minutes. Thoroughly discussed all the topics. Understood? Main topics we have covered. But remember, whatever I am covering in revision, not only that is important from exam point of view, everything is important. Always remember, when I say ignore 3-4 chapters completely, no problem, but remaining chapters 100% you should study. From each chapter if you study 80%, if you are bad luck like last attempt, getting it, all the questions will come only from the balance 20%. That's it. Every chapter we left to 1/4, and all 1/4 questions only came. Gone. So what is best and safe strategy always? Leave 1/4 chapters. Study 3/4 chapters. Definitely from 1/4 chapters they will not ask questions. Entire bank audit will be tested 50 marks in paper. Always 6 or 10. So if I leave 4 or 5 chapters in my complete preparation, remaining 10-12 chapters if I am perfect, definitely from that 75-80 marks will come for sure. And if I answer them perfectly, I can even score exemption. Getting it? That should be the way. Anyhow, you will leave 25% syllabus in every chapter. Instead of in every chapter, leave 25% of chapters I am asking, which is safe strategy. You know, all India rankers will on an average attempt for how many marks? 85 only. You and all can attempt 110. All India rankers, they are not that intelligent. They attempt only for 85. You can see their interviews. Hardly they attempted for 85, 90. Remaining they didn't attempt, not because they don't have time, because they don't know. Getting it? For a student who really learns entire subject, that 3/4 paper thoroughly, for him 3 hours will be enough. In fact, he'll have some time left. For a student who don't understand anything, he needs 5 hours time. Getting it? The problem is only for the medium, those who are in the medium category, not either that side or this side. Getting it? So, don't, those who did not study at all, they will give the paper after 30 minutes. Those who studied really superb, they will finish exam before 30 minutes. And remaining people will go up to 5:30. Understood? So, even if you are studying 3/4 syllabus, be perfect in the entire chapter. Never ignore a single concept in any chapter. Getting it? That should be the best method. You see, bank audit, almost I covered. Sampling, except some 3 or 4 concepts, I covered almost. but you need to cover 100%. Just because I ignored in revision, because it's revision I ignore. You should not ignore. You are not practicing on a sampling basis in exam, no? Correct, huh? That's it. So with this, bank audit is done. Satisfied until now? So whatever chapters that I am covering in revision, whatever topics I am covering in revision, they will give you a very decent command in order to prepare the entire chapter. If you observe, in every chapter, the gist of the chapter I clearly explained. What is the outcome of the chapter also I explained. Getting it? If you observe, initial 2-3 chapters I go little slow. Why? Because they are very basic, fundamental. If you don't understand that, later you can't understand at all. Now you know, wherever I am talking about a further topic, if at all evidence is not available or evidence is available, you can able to relate with always ultimate impact on the report. Getting it? So that's why we gradually increase the speed. If at all we have to discuss in the same slow pattern, it will take 45 hours to revise, which is not enough. Getting it? I hope sampling, whatever you see, I hope I covered in depth. Even fraud also I covered many topics which you have not studied till date. In the revision class, I think I might have showed you the concepts which you have not studied till date. Agree? And remember, these are all part of the syllabus. These are all part of the syllabus. So, whatever book you are reading from, be careful. So, there is so much in the syllabus. Last time and before that time, all in the past 3-4 attempts, the students, the problem with the student is, forget about writing answer, he is not understanding question. Last time one student sent me a message and asking me which chapters are this question. Honestly, that's how the papers was. So unless you read the entire study material, each and every line, why to that extent, those of you who ever feel very good in audit, don't practice anything. Open icai MCQ booklet. Open case-based MCQs. Start solving. You will realize your audit skills. Understood? So now after revision, once again the chapters whatever you thought of leaving, except that, rest all other chapters be strong. 100%. I am telling you, you can happily, confidently leave audit strategy chapter, because in audit strategy, there are 6 topics. What are the factors to be considered for developing an audit strategy? What are the advantages of audit strategy? What are the factors to be considered for developing audit plan? What are advantages of plan? What are the points to be considered for developing audit program? What are the advantages of audit program? All the 6 questions, if you read the answer, they look similar to each other. They look similar to each other. You will feel like Gajini movement. 2 people will be there at the end. Yeah, both look similar. The entire answer looks similar. In reality also, we will not have strategy plan program separately. We will have one document inbuilt of everything. But in book it is discussed separately. Getting it? So, this chapter, risk assessment, internal control gives single reading. Based on now whatever we discussed, I told you about risk assessment. Example I clearly explained. What is exactly risk assessment while starting documentation chapter. Thoroughly explained the example. Getting it? So keep that in mind. And with that, read the risk assessment chapter. If possible, when you will read risk assessment chapter, only after you finish remaining all other chapters. Understood? So what are all we completed now? NOS audit, company audit, audit report, societies audit. This entirely occupies 35 to 40 marks. 35, around 35 for sure. 30 to 35 for sure. Including MCQs. Including MCQs. Then we have documentation, fraud, sampling, bank audit. Another 25 for sure. Getting it? Now you see, in exams also, we are only having 56 marks worth of descriptive questions. And we are having 44 objective. True or false questions as well as MCQs altogether. Risk assessment, audit strategy, these chapters you give single reading. in order to secure 44. Out of 44, your target should be 30 plus. Minimum. I'm telling you conservative target. 30 plus should be your minimum. Out of this 56, entire theory paper, please try to score 25. I'm not asking you to put so much. This entire 44, 30 plus you can score only based upon pure conceptual understanding. Getting it? Whereas this you can score only if you reproduce the content. Getting the point? Now, through revision class, I think you might have understood conceptually the entire subject. What is there in the subject? What is not there? Getting it? How much you need to study? How to understand? I think now you understood. Later in your preparation, apply all these techniques, whatever I applied in this class, and get a complete command. So 30 plus securing is quite easy. Whereas to secure this 25, you have to do 2 revisions. How you should revise? Just reading slides, like suppose in case of takeout finance, if based on record of recovery, account is classified as NPA, by that kind of reading is not enough. You need to understand each and every word. If you understand and read twice, naturally you remember. See, today, after listening to these classes, I think now especially sampling you see, or you see documentation topic, or you see reporting topic or society's audit. We read and understood thoroughly. Now if you read them, you require less efforts to remember. Substantially lesser efforts. You don't require much effort to remember. How I remembered? Is it because I read it twice, many times? No. It's because I understand the content. The moment I think of NPA, I think of there are so many classifications. I think of how it works. So I naturally write entire that terminology. If you also understand, you can reproduce well. Only reason why you are unable to write well is because you didn't understand. It's not you didn't remember, it's you didn't understand. If you understand it thoroughly, this is the clarity you require. Clear all of you? That's it. Okay. So scoring 25 plus in entire theory paper and 30 plus in objective paper. So this is a minimum benchmark that you should keep, 55 plus. Only above that you should target, which is easy also. Correct? Huh? That's it. So take care. We'll continue in the next session. What are the other topics that we have still? Analytical procedure, government audit, items of financial statements and standards. Yes, we can successfully finish in the next. We still have tomorrow some 6 hours, out of which 5.5 effective hours, and that next day 1.5 to 2 hours. Total 7 hours. Yeah, I think it is absolutely enough. Getting it? That's it. So let's start with items of financial statements. This chapter weightage is approximately 12 to 18 marks. 12 is minimum. Up to 18 it may come. Getting it? Remember, this chapter I suggest you to directly read from ICA material. Of course, my material is there, but in that I have not covered disclosure requirements topic. Almost in every item, disclosure requirement I have not covered. But from important exam point of view, that is enough. But this notes is something which is added recently. This notes I did not cover, but I mentioned reference in the main book. In my main book, I clearly mentioned for these topics, please refer so and so page. I clearly mentioned as a reference in my main book, which I released in July 2022. Okay. So what auditor has to? Items of financial statements. You see, any standards you take, a documentation chapter you take, all the standards, what are they saying actually? They are only saying conceptually that auditor has to obtain evidence. How to obtain evidence? In what are the ways that he can obtain evidence? Only regarding that the standard actually explains. Suppose, taking a real example, how to do audit of insurance policy taken by the company. Suppose company purchased insurance policy on stock. How to do the audit? That point none of the standard explains. How to verify debtors? How to verify sales? How to get sufficient appropriate evidence on taxes paid by the company? Nothing is explained in the standards. What the standards standards conceptually speak what you have to do. They generalizedly will say that in respect of all important assertions in the financial statements, the auditor must get sufficient appropriate evidence. This is what the standards says, correct? They don't say anything beyond that. Now, in this chapter, we are practically understanding, getting it, how we verify purchases, how we verify sales, how we verify employee benefit expenses, how do we verify depreciation, how we verify fixed assets, how we verify creditors, debtors, everything. Able to understand? Now, this is newly added notes. This is something the financial statements has to disclose. These are the disclosure requirements to the financial statements. Notes. So, the company has to disclose in the financial statements the following. In the recent exam, this point has been asked for 4 marks, and even this point has been asked for 4 marks. 4 or 5, something it was asked for. 2 points have been asked for 4 plus 4, 8 or 10. Many students, when they asked about this Binami, they straight away wrote Caro point. But I showed in my paper analysis video also, that is regarding this. Items of financial statements notes. I showed after the exam was over, May attempt 22. I made a video on paper analysis. In that I clearly showed this. It's not Caro, it is items of financial statements. Are you getting it? So anyhow, I'm just telling you, this is something, a disclosure requirement. This is something, a disclosure requirements to be made by company in the financial statements regarding CSR. What disclosures company shall make? Very simple. How much amount company has to spend during the year? That is something 2% of average net profits. How much of it is actually incurred? What is the shortfall? And what is the shortfall in the last year? What is the reason why the company has spent lesser amount? What are the activities the company spent? CSR activities. What are the related party transaction, like contribution to a trust, which is related to the company? Where a provision is made with respect to liability incurred by entering into obligation, the movements in the provision during the year should be separately shown. CSR related provisions. If any provision has been created, you need to check what is opening, what is closing, what happened during the year to the provision, all that. Any 5 points you have to write in this. Next. Second point is talking about how to round it off. How to round off the financial statements numbers. That is easy. If the financial statement total income of the company is less than 100 crore, nearest million the company can round off. Nearest million. Getting it? 100 crore means maximum how many millions? Approximately 1000 millions. Means 1 billion. Getting it? So if the financial statements are in billions, you can round it off up to million. Suppose if it is more than 100 crore or 100 crore, you can round it off even to the nearest crore, or you can present the financial statements in lakhs, or you can present it in millions, you can present it in crores. You look at Air India, they present financial statements in millions. Their profit and loss account, right side revenue from operation 10,000 will be there. Actually 10,000 millions it is. Able to understand? State Bank of India has presented in lakhs. Able to understand? So when a company is presenting, which means, now tell me, if a company has an income more than 100 crore, can they present actual number of the actual value of the transaction, actual revenue from operation? No, it is not suggestible, because the number appears very big. The moment it crosses 100 crore, the number approximately goes to 10 digits. More than that. So 10 digit means it occupies the reading space so much. It is sometimes confusing. Able to understand? Next, company has to disclose the following relating to Binami proceedings, Binami property. Whether any proceedings has been initiated or pending against the company for holding Binami property. This is exactly Caro reporting also the same. Getting it? Rules made as the company has to disclose what is the property, amount, details of beneficiaries. Actually, you can even refer Caro point also. Here, one advantage everyone has. Even in Caro also, details thereof has to be given is what mentioned. But these points listed in Caro, it will not there. The points, what points you have to disclose, that is not there in Caro. Even if you write as per Caro 2020 Binami, it will not be treated as a wrong answer. Why? I'll tell you. The person valuing the paper, he doesn't know that much knowledge. First point. If you do not write a point which is there in suggested answer, he will identify that you didn't write. If you write an additional point beyond what is there in the suggested answer, he cannot decide is it right or wrong. Logically correct or not? If you give me costing paper, if you write one additional note, how do I know it's right or wrong? I will see here some 5 points, you wrote only 4, 1 point missing, I can tell you. But if you write one extra point, I don't know is it right or wrong. That one advantage is there for everyone. Okay. So, if the property is in books, reference to the item in the balance sheet. So, if at all you mentioned that Binami property, getting it, details in respect of which Binami proceedings have been initiated, it is shown under fixed assets or current assets or somewhere. So, you need to disclose that property reference, refer to fixed asset, 9th item, like that. If property is not in the books, fact must be stated. Where there are proceedings against the company, under this law, as an abettor of the transaction, means the company who did the transaction, as the transferor, then the details shall be provided. If the company is the original transferor, details shall be provided. What is the nature of proceeding, status of the same, and company's view on the same? What company's argument? What is the status right now? So what is the status of proceeding right now? Company has to disclose. This is something disclosure requirement by company, not auditor. First understand. We are talking about financial statements. How to audit them we are talking about. Which means the financial statements, disclosures therein is responsibility of whom? Management. So this is a question. What are the disclosures relating to Binami property held by the company shall be made in the financial statements is the question. Correct? So these are the disclosures. Got my point? Everyone. Same way, we have some other disclosure. Every company shall disclose any transactions that were entered with the companies whose name was struck off under section 248. Whose name was struck off. Nothing but registrar of the company will strike off the name. You might have seen this point in company law. If the company has obtained permission, if the company has incorporated by giving false information, the registrar can strike off the name. You might have seen this. Incorporation chapter. Strike off the name means what? Binding means what? Strike off means once the company name has been striken off, it cannot do business. Means it's nothing but indirectly a prohibition on the company to do further business. Correct? Winding up means what? Shutting down the company. If a company name is striked off, auditor can again remove the strike. In reality, they will open the membership register of companies and strike off. No, that's not that strike off. Strike off means what? They'll put full stop to this company operations. That's what strike off means. During strike off, if company renders any activity, further punishments and all over there. Now, if you are company, you are the director in a company. Did your company entered into any transaction with the companies whose name was struck off? The company shall disclose following details. Name of the company whose is struck off, what transactions you did. You invested in them. You sold goods to them on credit. You purchased goods from them on credit. What is the outstanding? What is the relationship, if at all you have any relationship, like holding, subsidiary, associate? If you have, you need to disclose that. So if the company has entered into any transaction with a company whose name is struck off, the company has to disclose the following data. Understood or not? All of you? Now, shares held by the struck off company, outstanding balances to be specified. Now, in the financial statements, these are the important ratios which every company shall disclose as per Schedule 3. Like current ratio, debt equity ratio, debt service coverage ratio, ROE, inventory turnover, trade receivable turnover, trade payable turnover, net capital turnover, net profit, return on capital, return on investments. These are the approximately some 11 or 12 ratios which company has to disclose in their notes to accounts. Understood? The company shall explain the items included in numerator and denominator for computing the above ratios. Further explanation shall be provided for any change in ratio by more than 25% compared to the preceding year. Means analytical procedure also company has to do. Last year debtor turnover ratio 4. This year debtor turnover ratio 3. What is the percentage of change? 4 minus 3, 1 divided by 4 is equal to 25. Company has to show the reason why there is a huge change in ratio. So important ratios company has to disclose. And not only ratio, percentage or number if you disclose enough. You need to mention numerator and denominator, how the numerator arrived, how the denominator arrived. You need to mention that. Further, company has to disclose reason why there is a substantial change compared to previous ratio. What do you mean by substantial change in this? 25% or more. Understood or not? Hey, what happened? Have you seen all this? That's why I'm taking you directly from study material. Next. Whether company has traded or invested in cryptocurrency or virtual currency during the year, the following shall be disclosed. What is the profit or loss on the transaction involving crypto? What is the amount of cryptocurrency held as on 31st March reporting date? Deposits or advances from any person for the purpose of trading or investing crypto or virtual. This is nothing but margin money we maintain with the crypto broker. Very simple. You want to transact in Paytm. First what you need to do, you need to add money to the Paytm wallet. Then only you can transact in Paytm. Now whatever money you added to Paytm wallet is a deposit with Paytm, nothing but. Same way, if you want to buy shares and securities of any company, first you must have Demat. You need to transfer funds from your bank account to Demat account. Same way, in crypto also, if you want to buy cryptocurrency, you have to transfer funds from bank to crypto account. There are so many now coins which, there are so many crypto coins which is very famous. Now crypto is banned. Now it is not legally valid. RBI clearly says crypto is not valid legally. They didn't prohibit, but they boycotted. Getting the point? Trading is not prohibited yet. Able to understand? Next. So the company has to disclose all these. Understood or not? These are the 6 important disclosures which company shall disclose in the notes to accounts. Understood all of you? From this, in the last exam, 2 points were asked. This time also there is a possibility 1 item may come. 4 marks to 5 marks question. Easy to understand all of them? Next. Next we will straight away go to the first page. So introduction. First of all, companies prepare financial statements using GAAP principles and accounting standard. What is a financial statement audit? It comprises verifying financial statements and disclosures by independent auditor. The result will be reported by auditor attesting to the true and fairness of the financial statements and disclosures. First of all, preparation of financials is the responsibility of management. That's it. Now, what is an assertion? We have seen already in documentation chapter. Assertion is nothing but representation made by management. Whatever management is giving the information, whatever management is putting the data, explicit or otherwise, which are embodied, which are as part of financial statements. Getting it? They are treated as assertion. But assertion do not include financial statement itself. I cannot say financial statement as assertion. But inside financials, whatever is there, we can call it as assertion. In preparing financial statements, company management makes implicit or explicit claims regarding completeness, cutoff, existence, valuation, rights and obligation, presentation and disclosure. What are they? When a company is saying 10 crore as trade receivable, it is indirectly saying total trade receivable is how much? 10 crore. Entire debtors, entire receivable from customers up to 31st March is 10 crore. And all these 10 crore worth of customers are existed. All the transactions of them are occurred during that year. And the value is 10 crore after provision. And this is a right of the company. These are the goods which we sold to them. So it is we who are having right. And we are presenting and disclosing breakup for more than 6 months, less than 6 months, all that. For one item, See how these many assertions apply. These many assertions are claimed by the company. Able to understand. Example, they have given one example. You read it, you will simply understand. Next. Income statement captions comprising revenue and expenditure balance. So in income generally, what assertions we will look into? Occurrence. Whenever they showed as an income in P&L, they are simply saying the transaction is recognized financial statements. Whatever transaction we recognize, it may be expenditure or income. It is occurred during the year and it is related to the organization. Example they have given, employee benefit expenses has been incurred during the period in respect of personnel employed by the entity. Employee benefit expenses does not include unauthorized personnel. Example, employee benefit expenses. Suppose you say in profit and loss account, employee benefit expenses some 100 crore. What does it mean? What that assertion explicitly saying? It is saying this is an expenditure incurred in respect of employee benefits who are employed in the organization by the company. Employee benefit does not include amount paid for unauthorized staff. Unauthorized means what? Those who are not working in the company or those who are working in the company but not recruited formally. Whatever salary debited in P&L, there is only a salary paid to the company who is recruited. That's what the assertion says. Able to understand? Now, completeness. All P&L items, when I say purchases 55 crore, sales 6,50,000 crore, Reliance, it says total sales that were happened during the year is 6,50,000 crore. See, when we say sales 6,50,000 crore, we are indirectly saying it is recognized during the year, it is related to our organization, and total sales are only 6,50,000. And the total sales up to 31st March are 6,50,000. Able to understand? You see, profit and loss account for the year ended 31st March 2022. When I say like that, inside that below statement, when I say revenue 3 lakh crore, the 3 lakh crore is earned up to 31st March. And 3 lakh crore only earned, completeness. An entire 3 lakh crore is belonging to our organization. That's why we showed in our P&L. So that is what. All transactions which were to be recorded have been recorded. And none of the transactions have been omitted. Cut off. All expenditure relating to this accounting period is correctly accounted. So that is what this point says. So regarding employee benefit expenses, they took an example and how occurrence is to be interpreted, completeness is to be interpreted, cut off is to be interpreted. They are given example. Understood. Next. Can you switch on the fan? Next. Measurement. Measurement. Transactions have been recorded at right amount, accurately at the right amount, and no errors were occurred when we are recognizing the expenditure or income. Measurement is a word which we use for P&L items. Valuation is a word which we use for balance sheet items. Balances only can be valued. Transactions cannot be valued. Transactions can only be measured. Understood? Then, transactions, presentation and disclosure. What is this regarding? How employee benefit expenses has to be presented, operating expenses in production, administrative, cost of personnel, sale of products how much, sale of services how much, other operating revenue how much. Revenue shall be disclosed like this. Getting it? Employee benefit expenses shall be allocated like this. That is called presentation and disclosure. Transactions have been properly classified and presented. Transactions events are properly segregated or desegregated. Presentation, disclosure are considered during the course of audit. All this you have to consider. How they were classified, how they are presenting, is it misleading? You need to check it out. Understood? Next. Same way, for balance sheet, what assertions we will check? Mainly, generally, we check existence, whether the asset physically existing. We check completeness. All the assets, company showing plant and machinery worth of 100 crore. Really complete 100 crore worth of plant and machinery there physically or not? Our company is indirectly claiming we are having totally 100 crore of plant and machinery. Cut off. Whatever amount shown under plant and machinery, that is plant and machinery installed and is being used by company. It is not capital work in progress. Cut off means. Valuation, whatever value we are showing, that is after providing depreciation, after providing provisions, all that only. It is the right value, fair value that can be recovered. Correct? So rights and obligation in respect of assets, entity has ownership. In respect of liability, entity has obligation. And presentation and disclosure, they have given various examples. These are the assertions. These are all called as what? Assertions. Now, so we need to verify all these assertions. We need to verify all these assertions when we are conducting audit. See, literally speaking, we don't read this and do in our audit. We by default do that audit. Suppose company, they purchased goods. Now, first I understand how the company will make a purchase. Best example, Reliance Trends you take. Reliance Digital you take. How Reliance Digital store will get a TV inside their store first of all. Before they have to sell, they need to get inside the store, right? Correct, huh? So, first, these Reliance Digital, these are all branches actually. These are the branches which are meant for sales. Showrooms, nothing but. Yes or no? Now this Reliance Digital is having right now in their store some 55 TVs which are under display. You went to store, right? Reliance store, some TVs will be under display, no? Purvika, any appliance shop if you go. Yes or no? Now, in their actual warehouse, they are having some 180 TVs. 180 TVs in the stock. How did they get this stock? They have placed order to the warehouse, the Reliance warehouse. Maybe in the Chennai they will have one big warehouse. Entire Reliance Digital will have one big warehouse. How warehouse have got this? There is some administrative office getting it who has placed order with vendor. Who has placed order with the vendor? So vendors are so many. Samsung, Sony, LG, all this, MI, there are so many vendors. From all of them, the central warehouse of Reliance Digital will place an order. And first this vendor will directly distribute that goods to the respective warehouse. And the warehouse, it will send the TV to one Reliance Digital store that is there in Albarpet. Then they will send to Annanagar. They will send to some whatever, local areas. They will distribute. Now, how the purchase happened? Now here, Reliance Digital store will, based upon their stock, once the stock value reaches to reorder level, they will place an order with the warehouse. Dear warehouse, we want TV, we are running shortage. Now customers are asking. Now, what this warehouse will do? They will send the TVs to the Reliance Digital. They will sell it. Later, they will again send the amount to the warehouse. Or then they will send the amount to the head office later. It might happen like this, or they may directly, head office will collect the sale amount. Who knows? Depends on the structure. Now, the warehouse will place an order with the, head office that we want these many TVs totally. This is a breakup of TV ordered by various showrooms. These many TVs we want of particular model. They will place an order with head office. Head office will first raise a purchase order with the Sony or LG. After they raise the order, LG will send the goods right to the warehouse. Warehouse people will not accept directly. They need to accept the goods and they need to give GRN. GRN means what? It's an acknowledgement that I received goods. Yes or no? Goods received? Note. So before I give acknowledgement, first I want PO. Who ordered? I will see whether there is a valid PO or not. Then against that I will map it and then receive it and keep it in the warehouse. Now you see how much process is involved here. Now what auditor has to check? First I need to understand what process happens. Yes, I understood the process. Then I will test some controls in this. Is warehouse receiving any TV from any vendor? Without a PO, I will have to check. Now during the year they received 150 times totally goods from vendors. 150 inflows were there. I will take randomly 3 or 4 inflows and see whether purchase order date is more than the before inflow date or not. I will see. Before inflow date only purchase order was raised, then it is correct. Suppose goods I received today, next day I made a purchase order, which means it's a weakness in internal control. So I will check like this controls. Then I will take some transactions, I will check all the transactions. So what are all I will have to check? Whether there is a valid purchase order, whether goods have been received by the warehouse, and whether goods received note has been issued, whether GRN has been issued only against a valid purchase order. Verify the purchase invoice. What is purchase invoice? Seller will give me bill, no, that he sold goods, that invoice. And verify the invoice quantity with the stock register. Correct? Huh? And see whether physically that many items were there available or not as per the stock register, surprisingly. This is purchase audit. Do you think you need to read this chapter and then we need to do the audit? No. I just took this example and told you. So in this chapter, they are giving you an idea about how to verify purchases, how to verify sales, an idea they are giving you. In reality, that process we may follow, or there might be a different process. Understood or not? All of you. Now the first thing that we need to discuss is share capital. Regarding share capital, company law provisions only covered here. Regarding share capital, company law provisions covered. What you have to do, we have given company law marathon in my YouTube channel. In that, share capital chapter is there. In that, which chapter is there? Share capital. In that, share securities issued at premium, sweat equity shares, buyback, all the concepts we have clearly explained. Are you getting the point? Dividend, accounts of companies, all that we have clearly explained. Please watch them. That is what here it is covered. What is covered here is exactly how to verify shares issued at premium. How security premium account can be utilized. This is completely company law matter. What auditor has to verify? What you will verify securities premium? In order to verify securities premium, first of all, what is securities premium? For what purpose it can use? Again, it's a company law question. Understood? Next. So, this entire capital related thing, first you need to watch company law provision and then you have to come to this. Getting it? Without watching company law funds, please don't read this. This is regarding, if you see, this is regarding utilization of borrowed funds and share premium. Exactly 143 subsection 3 checklist item is there, no? Inside that last one, foreign entity, mediator, funding party, that exactly that is given here. That is given. So whenever a company has provided any guarantee, or the company has lent directly or indirectly, getting it to a mediator, and the mediator is directly or indirectly investing in another party or giving guarantee to another party, company shall disclose the following. When our company is funding party, the funding party means our client, they have transferred some money to a mediator, it may be foreign entity, that mediator is ultimately lending to another person, whoever identified by the funding party. So who is that other person? Ultimate beneficiary. Or the mediator given guarantee to some third party on behalf of the ultimate beneficiary. If any of these transactions were there, the company shall disclose the following: date, amount of fund loaned or invested in intermediary, with complete details of each intermediary to whom you gave as an intermediary. What do you mean by intermediary? I gave money to them, but that money is not for them. That money they need to give to somebody. Then only we call it as intermediary. Date and amount of fund loaned or advanced invested by such intermediary to the beneficiary. Date and amount of guarantee in case if the intermediary is giving guarantee. Declaration that relevant provisions of FEMA Companies Act has been complied, including non-violative declaration for Money Laundering Act. The company has to give a declaration like this in the notes to accounts. Now, auditor has to get a representation here. Apart from whatever disclosed in notes, no other transaction was entered. Apart from whatever disclosed in notes to accounts, we should get a declaration that no other transaction was entered by a company. And that point we should give as a comment in 143 subsection 3. Understood or not? Same way, if the company acted as intermediary, what points company shall disclose? If the company acted as intermediary, what points company shall disclose? So that is given. Understood or not? How to do audit of reserves and surplus? This is not that important. Now, borrowings. So, borrowings means what? Nothing but it's a liability. Yes or no? So, what audit procedure? Briefly, what audit procedure we will take up? What is a brief audit procedure? First, we will look at the board meetings. When a company is raising money as a loan, the company means nothing but directors only have to execute. No, a director will not be given power. Sometimes to borrow money, board resolution is required. Understood? Again, if a company want to borrow money beyond the paid up capital and reserves, shareholders approval is required. Likewise, under Companies Act, they have given some powers. They have given some duties as well. So, whenever a company has took a borrowing, the company has to, we have to see the meeting, getting it, board meeting minutes for approval of the loan. During the review, ensure that loan agreements or bond were authorized. Ensure that commitments were approved by directors. Agreements what? Tally. Details of loan recorded to the loan agreement. How much loan you received, like how much you recorded in books. And look at the corresponding loan agreement. Verify the borrowing limits. How much company can borrow first of all. Roll out and obtain balance confirmation. Directly send a confirmation to lender. Tally details of leases and hire purchase to underlying agreement. Suppose if the borrower is under lease or hire purchase contract, through that a borrower has been created. Check with the agreements. In case of debentures, borrower, examine trust deed. When the debt is retired, is it discharged properly? The asset secured has been discharged from charges or not? Get a declaration that all liabilities have been recorded. All liabilities have been recorded by the company. Now, company has to obtain a schedule of short-term, long-term, auditor has to obtain a schedule of long-term and short-term borrowings, showing what is the outstanding at the beginning, ending balances, and how much is taken during the year and repaid during the year. See whether any other evidence is available like board minutes, contracts, cash ledgers, all that. Trace closing balances to the general ledgers. Nothing but simply speaking, how much is closing balance of the loan? What is the loan ledger account says? Closing balance. Something is shown in the balance sheet. Notes to accounts. Match it with the ledger, books of accounts. That's it. Actually, no, this requires a real understanding of audit, this chapter. A real life understanding is what required. Mostly this chapter is with common sense. Before you read a point in this chapter, first you visualize what you will verify if at all you were there. First always visualize it, then you read, you see how beautiful you will understand and remember as well. Suppose we'll do for next thing. Direct confirmation procedure with borrowings. What will you do? Like we told you, get a third party confirmation from lender. What will you do if you are in that place? Suppose if I am there, what I will do, First I will take list of borrowers. List of lenders. We borrowed, no? Who all lenders? I take a list of all the lenders. Out of them, banks will be there, FIs will be there. Correct? Or some related parties might be there. Correct? Now, I will design confirmation request. It may be positive or negative. Then I will send the confirmation request. Then, if at all they don't respond, I will send the follow-up request. Once the other party confirms, I will say whether the amount is matching or not. If amount is not matching, I will do additional work where it went wrong. Is it in our books which is wrong or in the other party which is wrong? And I will also see loan agreement and cross verify the terms and conditions. That's it. That's what given. Ascertain confirmation asks for all information which is necessary for loan, like what is the rate of interest, due date, security, whatever be given. When you are asking for confirmation, don't only ask what is outstanding amount. Ask whatever you want in the confirmation. Next, if at all there is no reply, send a reminder. Correct? Now, once you got reply, compare balances or as per confirmation balances with the books of account. If there are any difference, do reconciliation. Test the supporting documents for reconciling. Correct? So imagine first, then look at here. Mostly it will match. Next. Now, at what value we should record the liability? At what value we should record the liability? Whatever is outstanding. Whatever is outstanding. How do you check whether the amount outstanding is this much exactly? How do you check? First, I will look at the loan agreement in order to know how much loan I received. Then I will look at the bank statement, how much is actually received. Then I will see how much is paid during the year. I will see the breakup of interest and principal. Then balance outstanding is shown in the balance sheet. And see, outstanding amount considers accrued interest but not paid. All these points I should check, right? Same will be there, you see. Determine first accounting policy and methods for recording the debt. By using what policy company is using for recording the borrowing. Here there will not be any policy generally. For borrowings, what policy? I borrowed a loan. I will record it as a non-current liability if the duration is more than 12 months. Tally loan balance and loan payable to loan agreement. Correct? Recompute interest and discount premium on redemption if any. Company said some discount is there, company said some premium is there, I will recompute. Check computation of amortization, premium or discount. Amortization where we will use? Not that. This is regarding loans. Interest can be either we can call it as amortization or we can also call it as discount in case of bills. Getting it? For foreign currency loan, check accounting standard 11 requirement satisfied or not. Then further, look at the loan agreement and read. Is the entity complying with loan provisions or not? If there is any provision which the entity is not in compliance, whether that should be classified as correct. See whether is there any waiver amount by lender. Lender did, if at all anything is waived, that should not be shown as liability. Examine due dates on loans for proper classification between long term and short term. That's what I told. If the loan duration is more than 12 months, non-current loan. Otherwise it's a current loan. Suppose if the installment of long-term loan falling due within next 12 months, it should be, has been disclosed in financial statements. You need to disclose what are all the loan installments that are falling due within the next 12 months. You need to disclose it as a footnote. These are all requirements of Schedule 3. What we are reading here is nothing but requirement of Schedule 3. And auditor has to verify Schedule 3. Schedule 3. Able to understand? All the requirements of Schedule 3 we have to verify. And how to audit them. For that, there is a guidance note on audit of assets, guidance note on audit of liabilities. So, that entire Schedule 3 content guidance note is copy pasted in this chapter. Understood? Look at the important terms in the loan agreement and document and see the charge has been created or not. And whether requirement of applicable statute regarding charges, company law provisions for charges have been satisfied or not, check it out. Suppose if the value of security falls below the amount of loan outstanding, that balance amount of loan where there is no security should be shown as unsecured loan. In case of hire purchase, look at the hire purchase agreement. And in case if the loan is borrowed from related parties, see AS 18 compliances. Verify liability towards banks, bills discounted or disclosed correctly in the financials. See that whatever loan borrowed is within the borrowing powers of the company. Companies Act provisions were there, 185, 186, all that. Directors' powers, all that. Verify section 180, borrowing power under Companies Act. For what purpose the loan was borrowed, for what purpose it is used. If it is not used against the original purpose, why there is a diversion of fund. If at all, especially if it is a bank loan or financial instrument loan, debentures or term loan. Getting it? If there is a violation in purpose, it has to be mentioned in the CARO. And the company has to disclose loans in the following. Loans in the form of bonds, term loans from banks, from other parties. Any deferred payment liabilities, deposits, loans, advances from related parties, finance lease obligations, other loans. Borrowing shall be subclassified again into secured or unsecured. If at all any loan has been guaranteed by directors or others, the aggregate amount of such loan shall be disclosed. How much is guaranteed by others? So what is the disclosure for bonds, debentures? Have given additional matter. If any bonds have been redeemed, okay, whether the company has power to reissue them. Redeemed bonds sometimes can be reissued. So almost entire these points are like, it is not something where we explain. Getting it? It is something you have to read and visualize. That's it. All these points are not required. Any 4 or 5 points only you may have to write. This is regarding Schedule 3 disclosure requirement. This is regarding Schedule 3 disclosure requirements. In a regular class, what we do, in audit, 5 hours schedule 3 class first we will give. First watch that schedule 3 video. By our accounts faculty, he will explain. So 4 to 5 hours purely schedule 3. Complete schedule 3 will be discussed. Then only we will ask them to watch this chapter. Understood? Items of financial statements is approximately 8 to 10 hours chapter, including schedule 3. That too, we can't discuss in depth entirely. Because it is saying what? Check that, check this, check that, check this. Now you tell me whatever is there, I am just repeating it. Is there anything that I can add here? It is asking me, agree whether loan outstanding amount is matching with the agreement. What I can tell you in this? Instead of what I'm doing, I'm slightly simplifying. Tally loan outstanding amount with outstanding balance as per the statement or with the loan agreement. Check it out. That's what I'm telling. Understood? So this is disclosure requirement. This is completely disclosure. And you see here there is a another requirement where company has borrowed from banks FIs on the basis of security of current assets. It shall disclose, which means it's additional requirement under schedule 3. Schedule 3 also should disclose. Even in CAR also we should disclose this point, working capital loan. Whether quarterly returns, statements filed by company with the banks are in agreement with the books. If not, summary of reconciliation and reasons has to be disclosed. Company has to disclose why there is a difference. Now whether the company has been declared as willful defaulter, date on which it was declared as willful defaulter, details of the default. Who is a willful defaulter? They will ask you a 3 marks question. They will give you a question on this. 3 marks question. Write about disclosure by the company if the company is declared as willful defaulter. That's it. Student will write carro point. Correct? But this is not carro point. This is a disclosure in schedule 3 by the company in respect of borrowings. If the company was declared as willful defaulter by any bank or financial institution or other lender, the company shall give date on which it was declared as willful defaulter. What is the default? Amount and nature of debt. Who is a willful defaulter? He is a person or an issuer of debentures. Getting it? Which is categorized as willful defaulter by bank FI. Getting it? As defined under the Act, or consortium means consortium banks in accordance with guidelines on willful defaulters by RBI. Issuer means nothing but issuer of bonds. Issuer of bonds. Same way, company has to check, company has to disclose what are the charges that created by the company, out of which how many charges were satisfied, means charges were removed. Understood? Charges chapter, in the company law. Charge means what? Charge can be created in mortgage, pledge, hypothecation, anyway. Charge means I'm having charge over the asset. Getting it? Next. Same way, company has to disclose utilization of borrowed funds and share premium. This point again repeated. This point a company again repeated. When the company have not used borrowings from bank FI for specific purpose for which it was taken, the company shall disclose. Where they have used, diversion shall also be disclosed. This is schedule 3 requirements. Understood or not? Without reading all this, if you go to exam, if a question can come from any of this, whatever is highlighted in bold letters, no, important. Utilization of borrowed funds is again, same, that intermediary, foreign entity, the same point only given. Then, how to do audit of trade receivable? Tell me how to do audit of debtors. You just think of it. In the balance sheet, there is a debtors amount shown some 50 crore. Company has to receive debtors 50 crore. The company showed debtors outstanding for more than 6 months some amount, remaining some amount. Understood? Now what I will verify? First I will take list of debtors. Then I will take sample. Then I will trace to the sale entries in the books of accounts. Then I will say, first of all, on what basis company sell goods to the customers on credit. I will look at the credit worthiness policy of the company. On what basis company will sell goods to customers on credit. Then I will check I will send external confirmation. In this debtors verification, external confirmation is important. How do I send external confirmation? Same process. First select the debtors. Select the confirming party, nothing but. Then design the confirmation request. Send the request. Design the request in such a way it covers all the details. Like what is the outstanding amount? When he is expecting to pay. Getting the point. So all that full details we have to, maintain that. Now what auditor has to check with respect to debtors? Auditor has to check whether controls are in place to ensure that invoices cannot be recorded more than once and receivable balance automatically recorded in the general ledger from original invoice. Company will not record a debtor separately. When sale entry has been passed on credit, naturally customer account will be credited. Sorry, customer account will be debited. That we need to receive from so and so customer this much. In a bank, no. When you withdraw money, do banker has to update your balance manually? It automatically comes from same. Ask for period end receivables aging report as on 31st March. Aging report you take. How many debtors were outstanding for more than 30 days? How many debtors were outstanding for less than 30? More than 60 but less than 90? More than 90 but less than 120? More than 120? More than 180? Get a aging report. And trace the balance as per the report to general ledger. So aging report says so and so customers are having outstanding for more than 180 days. List of the customers, look at the particular general ledger account, their ledger account. Check whether realization is recorded invoice wise or not. We generally debtors collection from debtor, no, we will account it on FIFO method. Suppose I sold goods to you from past 10 days, every day I am selling you 1 lakh. Today what is your outstanding amount? 10 lakhs. 11th day onwards you will pay me money. Tomorrow you paid me 1 lakh or tomorrow you paid me 3 lakhs. I should adjust it for first 3 bills. Yes or no? So whatever the amount you are giving me, first I should adjust it for the old invoice wise. Whenever we receive from customer, we should adjust it against a sale. So right now, as on today, if I open debtor's outstanding balance, which invoices related amount is pending, I can talk to the debtor. If not, check money received from debtor is adjusted chronologically. That is FIFO basis. இப்போ வரைக்கும் FIFO na inventory la da கேக்குது. Yes or no? FIFO means what? It's not inventory valuation method. FIFO means first in, first out. First whatever debtor I made a transaction, that I will adjust it. In case of large balance is due for long time, what is the reason? Justification. Especially here auditor has to check whether provision is required or not. Confirmation procedure. They'll ask you a straight question. Write about direct confirmation from trade receivables. How auditor will execute, how auditor will apply direct confirmation for trade receivables. A significant and important activity is to contact customers directly and ask them to confirm amount for unpaid receivable as at 31st March. An important activity on 31st March is contact the customer and ask him what is outstanding balance. This is necessary for all big accounts. While certain random customers having small outstanding may also be selected, small balances also select. But for small balances, we send a negative format of request. Generally, we send what? Negative format. Now, external confirmation is of two types. Positive confirmation request, negative confirmation request. Positive confirmation request means, I will type the confirmation letter like this. We are the auditors of ABC Private Limited, were appointed for conducting audit for the financial year 21-22. And as part of our audit program, we found that your account is having outstanding balance as on 31st March and not yet paid today. On the date on which we are sending confirmation, within bracket we will mention the date also. On today it is still outstanding. The amount is 10,50,000 rupees. Kindly confirm within 3 days from the date of receiving this confirmation request. Okay. What is the outstanding balance in your books of accounts? Dash. They have to fill it and then send me. Now here, reply is must know. Correct? He has to give reply, because I'm asking him to fill it. If at all, within next 3 days he didn't reply. What will I do? I will send a follow-up mail or I will call him and remind him once again. Understood or not? Negative request, how it looks like. First pair is saying, in our books of accounts, in the audit, in the client books of accounts, we found that your account is having an outstanding balance of 10,50,000 rupees, full stop. Reply within 3 days if you disagree. Understood? If you disagree, please reply within 3 days. Otherwise, ignore. Within 3 days, if at all reply came, within 3 days, if reply came, what is the answer? No. See, some third parties, no, they will reply even if they agree. Suppose if at all, I told him only if you disagree, reply I told. Suppose he replied by saying everything is matching. Will you punish him? That is his choice. Suppose within 3 days, if you didn't get reply, what will you assume? Amount is matching. That's why the third party did not reply. Yes or no? All of you, this is what you assume. Now tell me, in positive format and negative format, which is superior? Positive is only superior. I'll have evidence here. Negative, no, I sent a mail, he forgot to see. He didn't check the mail. 4 days over, 5 days over. What I assume? Everything is matching. But in reality, he didn't check. He didn't see that he got a mail. Yes or no? Now, actually balance is materially misstated. And the mistake is in our books only, not his books. Client is perfect. The third party is perfect. Our client only problem. Now tell me, I will misinterpret no. So positive confirmation request is more persuasive than negative confirmation request. Now you may say, sir, in such a case, for everyone we can send positive. No. That's why standard gave a list of conditions where negative confirmation request can be used. Where negative confirmation request condition can be used. That format can be used. 4 or 5 conditions were given. 1. A confirmation in respect of the outstanding balance which you are sending is homogeneous, immaterial, small items, numerous were there. Second condition, all have to be satisfied. Low exception rate is expected. Have you seen SA 505? Everyone say SA 505 easy, I know very well. Tell me this answer. A low exception rate is expected. What is the sentence meaning? The possibility that the whatever our books, client books balance and the other party is confirming no, both will match. Mismatch possibility is low. Mismatch means what? Misstatement. Exception. Exception, there is a definition for SA 505. This is also one more question. If at all anybody says, I know auditing very well, ask him what is exception in SA 505, you ask him. 90% they can't tell. Tell me what is SA 505? SA 505 சொன்னோனே external confirmation. அவ்வளவு தெரியுமா உனக்கு? Exception என்ன? Only one definition is there. 3 definitions are there in the SA 505. Positive confirmation request, negative confirmation request, exception. What is exception? You know, it's a difference between amount requested to be confirmed by the auditor or amount contained in entity records and amount confirmed by third party. Whatever confirmation received, whatever there in our books, if there is a difference, we call it as exception. If you identify exception, what will you do? Will you scold the client? What will you do? First, you will resolve whose books of accounts it is wrong. Is my client made a mistake in financials or the other party? I will open entire ledger. I will ask him his ledger. In his books, my ledger is there, no? In my books, his ledger is there, no? I will cross verify. In his books, credit means in my books it is debit. I will cross verify. Whatever untallied amounts is there, what happened, I will inquire. I will see. If our accounting is correct, then our balance is correct. There's only wrong. Exception is not necessarily a misstatement. I'll give an MCQ or I'll give a correct or incorrect question. An exception in case of an external confirmation is to be treated as a material misstatement in the financials. பாதி பேர் இந்த கொஸ்டினே புரியாது. நான் சொல்றனால you are able to identify. Getting it? These kinds of questions will be asked. So, a low exception rate is expected. The possibility that the other party and my books, the possibility of difference is low. Then you send negative confirmation. A low non-response rate is expected. The third party always will respond. He is such a kind of disciplined person. To him, you send negative confirmation, no problem. If at all he read it, if at all he didn't reply within 3 days, I can happily assume he have definitely read it. Because he is such a kind of third party. Even if you send greetings, he'll reply, thank you. For every greeting you send, he'll reply. Such a kind of third party, nice party. The chances of non-response is very low. Understood or not? These are the conditions. If all these conditions are satisfied, then only you can use a negative confirmation request. Clear? Now, the auditor employs direct confirmation with the consent of the client. First of all, direct confirmation, if you want to ask, send to the other party, first take client consent. So that's why you see in SA 505, you have, if management is refusing to you to get an external confirmation, ask for reasons. Try obtaining evidence alternatively. If management refusal is unreasonable, alternative evidence is also not possible, give modified opinion. Take appropriate action as per SA 705. That's what they say. What is action in 705? Modified opinion. Understood or not? So that entire procedure is given. Understood? Can you read this later? Suppose if you do not receive any reply, alternatively you should do like see whether cash is received subsequently as on 31st March is outstanding means still I am doing audit in June month. Okay, I have not yet completed my audit. Audit report is not yet given. 31st March, 10,50,000 outstanding. Means somewhere in April or May he would have paid, no? See whether is he paid or not. He paid. If he paid means, it's a confirmation that he is outstanding to our organization, right? So, all this. And with respect to related parties also, get external confirmation, all that. This is cutoff completeness. This is cutoff. Especially last 5 days in the reporting period, no? All last 5 days. All last 5 days. See, I'll give you one example. Stock in transit will arise in whose books of accounts? Buyer books of accounts or seller books of accounts? Stock in transit will appear in whose books of accounts? Ellaru tappuda. It depends upon the control is with whom. It depends upon. If at all you all told me depends on the situation, sir, I would have appreciated. Ellaru fix aita seller buyer illa both yaar pa solradhu. Okay, it depends upon the control is with whom the risk and reward is. Getting it? Very simple. I came to Chennai. I went to some manufacturer. I purchased 5 tons of some raw material. I paid money. I only contracted one lorry, big truck container. Loaded the goods into the container. Bye bye, I told the manufacturer, and I started leaving. Now if something happens to the truck, if something happens to the goods, whose responsibility? Buyer or seller? It's my truck, it's my authority, it's under my control. Now it is in my control, right? As on 31st March in my factory, which is there somewhere in Rajasthan, I have not yet received the goods. 31st March it is on the highway. Now stock in transit. Seller, no, he sold goods, delivered goods also, risk and reward transferred. He will treat it as that cash account debtor to sales account. Over. Stock and all will not appear for him. In my books, purchase is over. Purchases account debtor to cash. Now goods are there, no. Stock I should show, no. Is it in hand? It is in transit. In whose books it came? Buyer. Understood. Situation different. I ordered, gave cash, and I asked him to deliver at my factory in Rajasthan. If at all something went wrong in between, he should only bear loss. I don't have any trouble. Only if I receive in my factory, I will give you balance payment. This is the condition. The buyer seller also agreed. Now as on 31st March, I paid money, some amount. Did I purchase goods? Did control came to me? Advance given to supplier, to cash account. Now the other person, did sale completed? Risk not transferred, no? Until delivery at my factory, risk not transferred. As on 31st March, so sale cannot be recorded. Whatever amount he received, how he will record? Advance received from customer. Now, in the stock, in the go down, is stock available? Not available. But where is it? It is in the transit. So, he will reduce from stock in hand that amount and put it under stock in transit. Now, in whose books it came? Seller. Depends upon risk and reward is with whom. Understood or not? All of you. Understanding accounts means this. How much to be debited, how much to be credited, not that. That system will take care. You need to understand this. Are you clear? These kinds of accounting. See, application of accounting principle means what? This only. Risk and reward transfer. Accounting standard application means this. Next. So we apply cutoff. Whatever I told right now, it is called as what? Cutoff technique. What we do is, all purchases and sales, we apply cutoff procedure. What we do in cutoff procedure, you know? Suppose last 1 week purchases which are debited in profit and loss account, I will take list. See whether control is received in our organization or not. Whether goods received inward in our control or not, I will check. Only in respect of goods that came into our control before 31st March or on or before 31st March, they shall only be recorded as purchases. Correct? Same way, whatever goods we sold, only risk is transferred by 31st March to others. Then only we should show it as sale. Otherwise, how come it is sale? Company will do frauds in this. As on 31st March, they will create fake sales. See whether goods were delivered ultimately. Check it out. Understood or not? All of you. Ensure that all the goods are dispatched prior to year end. Sales no, debtors no. So we need to see whether every good has been dispatched. Okay, on a test check basis. Ensure that no goods are dispatched after year end have been invoiced and included in debtors under the audit period. If any goods were dispatched after reporting period, 31st March, and if that goods which are dispatched means delivered after 31st March, if at all they are recorded as sale in the current year, is it right? That's what they are saying. Understood or not? People ask me, sir, how to remember this chapter? How to remember this chapter? Eppadi remember panna mudiyudalla? Without understanding, how will you remember? So I am giving for trade receivables. Similar logic apply for? Exactly. Very good. Smart students. Next. So, same way, test check invoices which are listed in receivable report. Take few invoices from debtors aging report. Compare them with the supporting documents. See whether amount is correct or not. Correct the customer credited or debited or not. On which date it was entered into the books. All that you have to check. Match invoices, sales to shipping, dispatch log. Delivery challan will be there. GST e-way bill will be there. So check that. And if any customer was given discount, look at the discount process, incentive process, all that. Now, how to check whether trade receivables were valued properly? In exam, they will ask you all these questions separately. They may ask you only this question. Suggested answer will contain this. Your answer will be containing this. Understood? Observe what you are reading. Here, we are checking valuation. How to check debtors value. Here, how to check whether debtors are accounted completely. Cutoff means completeness provision. Whether whatever debtors were shown under this year, are they belonging to this year or not? That is what completeness means. Valuation means what? I am not worried about accounting of debtors. I am worried about recoverability. Valuation, I focus on what? Provision for bad and doubtful debts, all that. Aging report, I will check 30 days, 60 days. This is tally. List of debtors under litigation. Compare with previous year. Identify those debtors which appear doubtful. Discuss with management. When they will be coming, ask them. See whether provisions are made at appropriate percentages considering recoverability. See the movement of bad debts, provisions, all that. See if any write-offs were there. Is it written up by proper authority or not? Check it out. Are you clear? Now, disclosures related to trade receivables. What trade receivables shall be disclosed? Trade receivables shall be disclosed as below. Trade receivable shall be disclosed as below. Undisputed trade receivable considered good. Undisputed trade receivable considered doubtful. Disputed trade receivable but considered good. Disputed trade receivable considered doubtful. Ivulla classifications kamikno. Adula thiripi inside that how much is outstanding for less than 6 months, how much is outstanding between 1 year, 6 months to 1 to 2 years, 1 to 3 years, more than 3 years. This is something similar to banking norms. Purida, able to understand? Similar information shall be given where no due date on payment is specified. Suppose some goods were sold on credit but payment due date is not fixed. Unbilled due shall be disclosed separately. So trade receivable shall be subclassified again. Secured considered good, unsecured considered good, and doubtful. Understood how it is? Here undisputed, disputed classification. Here it is secured, unsecured classification. In both the cases, good or doubtful you have to show separately. Understood? Good and doubtful are different. Bad is different. Bad debt has means to write off. You should not show. Debtors treated as bad means bad debts. You will not show it in the balance sheet. Understood or not? Then how to do cash and cash equivalent? Special care is necessary here. Ellathukku special care irukum. Puriyudha? In this point, if there is more than one cash balance, in all the cash balances wherever company is maintaining shall be verified simultaneously. Very simple. Suppose if head office is maintaining separate cash ledger, branch is maintaining separate cash ledger, petty cashier is maintaining separate cash ledger, it's okay. I can verify independently. But there is only one cash ledger. In this cash ledger, 10,50,000 rupees is there or 10 lakhs is there cash as on 31st March. Where is this 10 lakhs? I asked accountant. Sir, 7 lakhs is with the cashier, 1.5 lakh with the production manager, 1.5 lakh is with the sales person. Now, I should physically verify cash whether really there or not. Surprise check I should do. Surprise means what? I will intimate them 2 days before and then go. Surprise means what? Without intimation I should check. Now when you are doing surprise check, total balance is matching or not, you should check no. Now total balance is with 3 persons. You should check 3 persons simultaneously or one by one. Simultaneously. So send your 2 team members to those 2 persons on the same time. And now also you go here and then check surprisingly. Understood or not? Next. In audits, surprise check is only on the paper. Neither the client feels surprised nor the auditor. In reality. Getting it? This again you can understand. Confirmation procedure. This is regarding bank balance available with the bank. Margin money available in demat. All that. Getting it? Now how cash and cash balances shall be disclosed in the balance sheet? Balances with banks, checks on hand, cash on hand. Earmarked balances with banks. For example, dividend declared account, unpaid account, CSR unspent money, all these are earmarked balances. Balances which are held as margin money, amount held in share demat account, repatriation money, bank deposits with more than 12 months maturity, fixed deposits, they shall be disclosed separately. Then inventory. Inventory is also important aspect. Inventory, debtors is important. Compared to cash and cash equivalent, inventory, debtors, borrowings. Borrowings, you see below, so many disclosures were there. Yes or no? So borrowing should be disclosed. Now borrowings point is completely important. Debtors is important. Inventory is important. Understood? Next. So we'll take small break. Okay. Mostly I think Rumba heat edukle. I mean mind. We'll take break. I know. Because this chapter I think you might have understand. Now to understand this chapter you must understand so many other things. Correct? Hey, honestly tell me how many of you have gone through this chapter already? Once or twice or whatever. Have you gone through or not? Understood? Appo enna padichachu neenga? Okay, fine. Now you are able to read. After this class, will you be able to read? Now will you understand? So in the next whatever I am going to cover also, I will be covering in the same way. Totally 2.5 hours will be spending on this chapter. 2.5 to 3 hours. That's a revision. Getting it? So with this, you read once again this entire book slowly, one by one point. Understand what that point convey. All typical points I'm covering. Getting it? Then only move to the next. If you see, after you read each and individual point, once you summarize what is there. Summarize means what? Once again, the entire points, what is there? Okay, first I should check this, I should check this. Why you should check this? Logically analyze. Understood? Yes. So come back, take break and come back in 15 minutes. So let's continue with the discussion on audit of inventory. Like just I spoke about one of the aspect in inventory, that is regarding inventory in transit. Yes or no? Like we'll see now. So they will ask you a question regarding what is the audit procedure that you will undertake or that you will perform in order to establish existence of inventory at period end. As on 31st March, the balance sheet is showing some value of inventory. What audit procedure, what procedure you perform to get an evidence that this much inventory is existing? Very simple. First I will look at organization plan for performing inventory count at 31st March and see that the goods have been segregated. If possible, participate in inventory counting with the management. That's what SA 501 also says. Audit evidence, specific considerations for selected items. SA 501 selected 3 items. What are they? Inventory, segment information, segment litigations and claims. Here I'll tell you how to read in this. Inventory, what SA 501 deals. Option A, existence and valuation. Option B, existence and condition of inventory. Option C, existence, condition and valuation of inventory. Option D, condition and valuation of inventory. C, existence, condition and only existence and condition of inventory. SA 501 deals only with regard to existence and condition, not valuation. Understood or not? This is a question asked in MCQ, case-based MCQ. So this is how questions will come. You need to understand clearly. Okay, SA 501 is talking about only existence and condition. It is not nowhere talking about valuation. What SA 501 says, auditor has to attend inventory counting performed by management at year end. If attending at year end is not possible, plan some other day. Or if management is not doing inventory counting as on 31st March, plan some other day. If that is also not possible, you fix particular day and you go and visit and count physically. If inventory counting is impracticable, consider the implications on auditor's opinion. If inventory is lying with third party, get external confirmation. If you have doubt over that confirmation, arrange another auditor to go and physically count and then come and then compare with the books. Understood? This is what SA 501 regarding existence and condition of inventory. Selected item is inventory. What consideration you should check here? Existence and condition. Litigations and claims, what you need to check? Completeness of disclosures. Segment information, what you should check? Disclosures as per applicable financial reporting framework. Are you getting it? Understood? Test count. Auditor, if possible, he has to do test count. What you will do, what you will do in this test counting of inventory by auditor should include what you will do. Observe how employees are counting. Ensure that all items are tagged. Tagged means what? Tags will be there, no? And assure that there is appropriate supervision on count procedure. Observe that amounts are shown properly on the tags. Determining the tags and summary sheets are collected and reconciled. Reconcile test counts with tax summary sheets and discrepancy notice, if any, you need to discuss with client personnel. Be alert at all times, specifically cautious about empty boxes and obsolete items. They may show you warehouse, these are the goods available. You don't just count the boxes. See whether any box is empty. Perform cutoff, like last 5 to 10 days. See when the goods are actually received, when the goods are actually delivered. Check it out. And please exclude inventory belonging to third party but held by you. Suppose third party sent you goods to sell you on sale or return basis. Right now goods are with you, but you have not yet given acceptance. Is it your own inventory? That should be excluded from valuation. Ensure that accounting of all stock sheets. Just check the stock sheets. If there are any differences between physical stock and stock record, investigate. Suppose if the organization is using periodic inventory system, please undertake at the end of the period inventory. If the entity uses perpetual system, anytime you can take physical inventory counting. If the inventory is with third party, get a confirmation and perform analytical procedures. Compute inventory turnover ratio, perform vertical analysis like inventory to assets analysis, compare budgetary expectations with actuals, examine non-financial information like weights, measurements, all that, perform cutoff test regarding shipping documents, all that. With regard to tagged inventory, perform test for omitted transactions and test for invalid transaction. Is there any transaction which are omitted, like some tag is there but it is not recorded in books? Verify clerical and arithmetical accuracy in the inventory listing. Here, what is the audit objectives? How do you verify that only inventories belonging to the entity have been recorded and do not include inventory belonging to third party, and does not include inventories but does include inventories owned by entity lying with third party? How do you verify? So all these points you verify. The entity has a valid legal ownership rights over the inventories which are held by the entity and contained in the records. Look at the purchase documents. See whether any goods are consigned. Correspondence, sales, all that you check. Determine collateral agreements if any available. Consignment deeds you check. Material purchase commitment agreements you check. Auditor shall obtain confirmation if at all inventory is with third party as per SA 501. So all that. Now you need to check regarding valuation. How auditor should verify? What auditor should verify in inventory? Regarding getting evidence regarding whether inventory has been valued properly or not. First to look at what method they are using. Weighted average, FIFO, LIFO. For raw material, what components are included as part of cost? AS2. What is the valuation like principle? Getting it? What is forming part of cost of raw material? What is forming part of cost of work in progress? What you will form part of finished goods? All that you need to check. If standard cost technique is used, what is the basis for standards? What are the elements of cost that are included in the inventory? All that cost, purchase price plus all that cost that has been incurred up to bringing the inventory to the present location, all that cost has to be added, yes or no? See the cost prices used with purchase invoices. If any damaged inventory is there, that should be given provision for that. Work in progress, how the stage of production has been arrived. Finished goods and goods held for resale. So see whether the finished goods are determined based on the normal cost, whatever is incurred or not. Ensure that inventories are valued at NRV or cost, whichever is lower, especially if the finished good is about to sell at a price less than cost, then goods must be valued at NRV. And if items are absolutely damaged, slow moving, what is the possible realizable value? Carefully examine what is the valuation of damaged inventory. For this purpose, auditor may request the client to provide inventory aging. Inventory aging means what you know? Inventory is produced, finished good, but could not be sold. It was produced, but not yet sold till today. The gap is more than 180, less than 180, less than 90, less than 60, less than 30. If the inventory manufactured is very latest, it's okay. The inventory is long outstanding, obsolete, old, outstanding inventory. Create provision for that. You observe, when you're reading, observe what I'm reading exactly, valuation. That's why these points are covered. Okay, if I'm reading these points, it's about valuation. And all these points you see, they're only talking about provisions and all, which means regarding value of the item they're talking about. Confirmation from creditor, confirmation from debtor. It is talking about the ownership of the inventory, physical existence of the inventory. Understood or not? Next. And see whether disclosures of inventory has been made as per schedule 3. Inventory should be classified as raw material, work in progress, finished goods, stock in trade. And stock in trade means, remember, stock in trade means the goods which I purchased and held for trade. That's called stock in trade. Where I'm a trader, I will use the word stock in trade. If I'm a manufacturer, I will use the word finished goods. Able to understand? And loose tools and others. Whether goods in transit have been disclosed separately under the subhead. Which goods in transit will come, I told clearly. If the goods are in transit and the goods which are under our control only should come in our books of accounts. And what should be the mode of valuation? FIFO, LIFO, weighted average shall be stated. These are the disclosure requirements regarding inventory. They'll ask you a question. They'll ask you a question on this. Write about analytical procedure on inventory. They'll ask you only this question. Write about analytical procedure in respect of inventory. Getting it? You need to write regarding this. Read this carefully and then look at the right side carefully. What is the nexus between these two? Understand. Clear? Next is regarding fixed assets. Fixed assets. So first, how do you verify whatever assets shown in the balance sheet? Are they existing or not? How to verify? Physical verification. Existence can be confirmed only by physical verification. See whether proper supervision were there on property, plant and equipment. See the physical verification report. Look at the worksheets which are performed by entity. If all items are properly tagged, physical assets also, the fixed assets will also be having tax. In organizations where number of assets are having very high, there will be fixed asset identification number. What is it? Fixed asset identification number. To go any big temples, you will find numbers on all the fans, chairs, numbers will be there. Getting it? So that is actually called asset tag, asset identification number. Getting it? Reconcile items of PPE as physically verified with the fixed asset register maintained by entity. Verify discrepancies noted and how they were dealt in the books of accounts. Suppose shortages not in working condition or active use should be accounted as deletions in the books. Assets which are not in use or which are not active usage or obsolete, out or damaged assets, it should be deleted from the fixed assets. It should be shown under scrap. And see the movement in PPE. Whether additions to PPE has been recorded in the financials. They will ask you how to do audit of additions to property, plant and equipment. They'll ask you exclusively this question. Now, first thing you need to check is movement. Additions during the year, deletions during the year, and see the closing balances matching with the books. Check the arithmetical accuracy of movement. Tally opening balance to previous year. Whatever opening balance is there in the current year, last year it is closing balance year. Obtain the list of all additions from management. For all important additions, whether expenditure meet with PPE recognition criteria, check it out. The cost include cost incurred initially for constructing the PPE and cost incurred subsequently to bring it to the present working and condition. Verify it is valued as per AS10. And verify and ensure that items such as spare parts, standby mission, servicing equipment is also recognized as PPE only when they are held for more than one period. Means nothing but one accounting period. In relation to deletions, whenever some asset has been sold, ask the reason, what is the logic or rationale behind deletion and manner of the sale, and see whether it is properly authorization is there or not. Verify process followed for sale, check it out. Is the sale accurately recorded? When any asset is sold, only WDV value of that asset shall be reduced from the books. Whereas in income tax block, you will reduce sale value. Remember in block 32 format. And now it is regarding valuation. What audit procedure you will take in order to check whether PPE has been properly valued. Verify that entity charged depreciation on all PPE unless it is non-depreciable. Assets that the depreciable, check the depreciation method used reflects the pattern in which the asset is used. Suppose if it is furniture or building, SLM is suggestible. Plant and machinery, always WDV is suggestible. Suppose if the mission is based on number of hours working, number of units, then number of hours method or number of units method we have to follow. So it could be straight line, value method, unit method, whatever. So the auditor should verify whether management has done impairment loss assessment. And next, how do you check whether company is having ownership, rights and obligations? Now look at the title deeds. Yes or no? Legal valid owner or not? Verify the title deeds, conveyance deed, sales deed. Insist Original title deeds for all the immovable property. In case entity has immovable property as security for any borrowings, original title deeds are not available. The auditor requests the management for getting confirmation from the lender that the lender is having the top property title deeds, equitable mortgage or registered mortgage. Verify charges register filed under ROC. You can go to MC and find what are all charges against the company. Charges list you can find. And disclosures of PPE shall be given as below. Land, buildings, plant and machinery. This is class of PPE. This is each class of PPE. So land, buildings, plant and equipment, furniture, vehicles, office equipment, others. Assets under lease shall be shown separately. Which assets? Finance leased assets only will come. Operating leased assets will not come in balance sheet. And not only that, gross carrying value, net carrying value, breakup, entire thing must be shown separately. And whenever there is any revaluation, if the change is 10% or more in the aggregate net carrying value of each PPE, that details also shall be shown. So rest all are disclosure. Suppose company has to give additional disclosures. If title deeds of immovable property were not held in the name of the company shall provide details of all the property whose title deeds are not held in the name of the company in the format given below. What? Relevant line item in the balance sheet. Example, investment property. What is the property? Land and building. Gross carrying value, how much? Title deeds were held in the name of whom? Whether title holder is a promoter, director or relative of a director, promoter or employee. Who is he? Check it out. Property held from which date? Reason why it is not in the why it is not held in the name of the company. Tata Motors gave disclosure on this. Relative here means company sect relative. Promoter here means promoter of the company. Where the company has revalued its PPE, whether it has been done by a registered valuer or not, you have to disclose in the notes. Auditor also has to check this, but company should disclose. Same way, capital work in progress, aging schedule shall be given like this. Amount which is involved in work in progress for less than 1 year. The project is in progress between 1 to 2 years, 2 to 3 years, more than 3 years. L&T Metro, CMRL company. They will show so-and-so project, L&T, some project more than 3 years work in progress. They will show like this. Total shall tally with the closing work in progress amount in the balance sheet. Suppose if the work in progress completion is overdue or has exceeded its cost compared to original plan, or the company shall disclose the following. When it has to be completed in 1 to 2 years, to be completed in 2 to 3 years, to be completed in more than 3 years, project 1, project 2, likewise you need to disclose. Intangibles, what auditor has to verify? How do you verify existence of intangibles? Patents, you will have patent certification. Copyrights, you will have copyright certification. And trademarks, you will have trademark certification. Getting it? Additions to intangible assets, see whether it is valued as per AS 26 intangibles or not. So similar, if it is more or less similar to fixed assets. If you look at PPE, it is more or less same. What should be the disclosure requirement for trademark? It should be disclosed goodwill, trademarks, software, publishing titles, mining rights, and copyrights and patents, recipes, formulas, methods. These are all applicable for different industries. Licenses, franchises, and others. Send gross gross carrying value, net carrying value, breakup, revaluation, all that shall be given. Here also aging, capital work in progress, aging we are giving no. Here also intangibles under development, aging should also be given. Same here also, if any intangibles are not in the name of the company, that detail shall also be given. But anyhow, for intangibles, it will not come like that, not in the name of the company. It will not come like that generally. Then trade payables, I told you, this is exactly similar to trade receivable. All the points of trade receivable will once again appear here. But here it will be reversed it will be recorded as a reverse direction. Trade payable is lengthy. Now, how do you verify loans and advances? How do you verify loans and advances? This is also very less the possibility. In this entire chapter, please read from ICI study material only what? You have to read the following items. You have to read the following items. Everyone please make a list. Borrowings, which is liabilities. Okay. Borrowings. What are all the things that you need to compulsorily read in this chapter in full without ignoring anything? You see, in borrowings, they will ask about valuation a question. In borrowings, they may ask you regarding existence. In borrowings, they may ask you regarding question regarding completeness. If you write some other answer, you will not get marks. So anyway, they can ask. You need to observe and then read. Then only you can write correct answer. Now, what are the things that we have? Liabilities, assets, incomes, expenses. These are the things which we are having in the items of financials. Liabilities. You just have to read. Borrowings mainly. Then you need to read share capital provisions. In company law. This is important. You need to read share capital provisions in company law. Assets. You need to compulsorily read trade receivables. Then you need to read inventory for sure, completely. You must read inventory and trade receivables completely. Then if possible, PPE alone you read. PPE. Intangibles not required. PPE related again. Existence you have to read. Completeness you have to read. Valuation you have to read. Rights and obligation. Understood? Incomes. Incomes, I think not much important thing is there, but interest income, dividend income. This question is something which is asked very frequently. Investment income. This is something which is frequently asked. Then expenditure, operating expenses, and purchases. That's it. In purchases, more importantly, analytical procedures. But anyhow, entire purchases, please read. These are the important things. At the first of this chapter, when we are starting this chapter, we discuss some 6 note points in the end. CSR, amount to be rounded off, Binami transactions, all that you have to read. That is compulsory. Understood or not? Mostly the questions were tested only from this in past, but generally also these questions only will be tempted to be tested. Remaining or not, that heavily important. Okay. But remember, if you want to become perfect in this chapter, you need to properly read it, analyze it, differentiate between what is the first set and second set points. What points you should check regarding existence of PPE, what points you should check regarding existence of inventory, they both are similar. What points you should check regarding valuation of inventory, what points you should check regarding valuation of PPE, again, answer will be different. What points you should check regarding completeness of inventory, what points you should check regarding rights and obligations related to inventory, again the points are different. In order to have clarity on this, it will take 12 to 15 hours for you to understand, have a good command of this. Getting the point? If at all you are giving lesser time than that, it means you are risking. 12 to 15 hours dedicate for this chapter. You will get equal number of marks. 12 hours, 12 to 15 hours means you will get 12 out of 12 easily for this. 12 marks is minimum. So read thoroughly and compare. What is the difference between what points I verified in existence, what points I verified here? Again, no, here one mistake everyone do. Making simple notes, no. Not required. Okay. Directly read from that, summarize it many times. Many will write notes, write short notes. They spend lot of time on writing the notes. Instead of that, you can spend 3-4 times reading. That will give you much more clarity. Understood? Even for me today, whenever I read items of financials, I will get more clarity every time. Suddenly I remember, I will connect with another point. Every time when you read once, you get more connection. That too when you read only from the original material, not from the cut short notes or your running notes and all. Understood? So these are the important things that you need to compulsorily see in the items of financial statements. Next. Loans is more or less trade receivables. Loans, trade receivables mostly same. Borrowings, trade receivables, loans. They three go on similar lines. Borrowings means we need to pay. Loans means we need to receive. They both are same. Now they will ask you, what are the disclosures that shall be made in Schedule 3 if any loans which are granted to promoters, director, KMP, related parties? How much of the loan is given for repayable on demand or without specifying term? How much is given to promoter, director, KMP and related party? Amount given, percentage to the total loans. Auditor should also check these points in Caro. Correct? Now after reading these items, once again read Caro points. You see how many points you will connect with. In Caro it is talking about auditor has to report this information in the audit report. Here company has to disclose this information in the financial statements. Then provisions and contingencies. What is a contingent liability? Definition is given. First, what are obtain list of all the items where provision is made. Inspect the underlying agreement like warranty, terms, all that in respect of which provision is made. And get the workings for each provision. Obtain expert report. And underlying working for provision amount like warranty involving complex calculation. So auditor may request management to share actuarial valuation report. If at all any legal disputes were there, what is the take of the management? Is it shown as contingent or is it shown as provision? Audit evidence, especially whenever management expert is used, evaluate the competence, capability, objectivity of expert, whether expert is employed by the entity or outside party, whether expert is independent party, what is auditor's previous experience of the work of the expert, obtain the understanding of the work of the expert, whether he has sufficient expertise to evaluate the work, what assumptions he is using, okay, what data he is using. So here they are completely focusing on expert related. If you are deciding to use management expert workings, what points you should check? That is what here. Disclosures. Long-term provision, short-term provision should be shown separately. And contingencies, contingent liabilities and commitments to the extent not provided for means what? Where there is no provision is created. So where you are showing at contingent liability but not provision, you should show separately again here below. AS 29 you need to satisfy. Then how to do audit of sale of goods and services. First auditor has to obtain, before you do audit of sales, first obtain a clear understanding about the organization and from where the organization will get revenue, like type of service, products, demand for the service, major selling product, new product, a service line, are they continuing or discontinuing any product, or are they launching a new product, major customers, what are the sales terms and conditions, who are the people dealing with the sales, understand that. First understand management control in respect of sales, like whether segregation of duties are there regarding stock and sales team, who authorizes sales order, who raises the bill, when and how goods are delivered, who collects and records the amount received from customers, who ensure risk and rewards are transferred to customer, how the sales were recognized in the system. They may ask you only this question. An auditor need to obtain an understanding of internal control in respect of sales process. Give few examples. They'll ask you, give few examples. You need to write these points. Getting it? 3 to 4 marks question they may ask. Now, an auditor shall test the controls which entity has set up for sales cycle to determine how strong and reliable they are. If they are strong and operating effectively, the auditor can reduce the substantive testing. What are the examples of controls? Pre-numbered sales invoices, authority for approval of orders, execution of sales order, customer purchase order authorization over certain limit, authorization over receivables write-off. These are all controls, additional controls. Then auditor, once you understand the controls, then you need to apply test of details, no? So select a random sample of transaction, examine the related purchase order, invoice, customer statement to ensure that control being tested is a serially numbered invoice or not. So you will see whether serial number is there, amount is there, all that. The auditor shall ensure that all serial numbers in a section are accounted for and none are missing. How we will see, we will take sales register. There are totally 1500 items were there, invoices. We will see physical invoice number. What is the year first invoice number? What is the last invoice number? If the number is 1500, there 1500, everything is fine. Suppose the numbers are 1550. Whereas in the books sales register only 1500 items were there in the register. 50 invoices, what happened? Cancelled invoices. Again, cancelled sale is different from sales return. Sale return is different. Cancelled sale is different. Cancelled sale means what? Before risk and reward is transferred, before goods are delivered, customer cancelled the order. That is cancelled sale. Return means what? We deliver the goods and customer return. Now, substantive analytical procedure will consist of sales trend analysis, comparison with previous year, category-wise sales analysis, all that. They will ask you once again here. Write about analytical procedure in respect of sales. You need to write this answer. Now, the below table summarizes what audit procedures we generally apply. Whether recorded sales represent goods shipped or not means we are testing occurrence assertion. Now, company showing revenue from operation some amount. Is that amount really sold or not? Is it occurred or not? What points will check? Our objective is what? Ensure that sales is not overstated. What points will check? Sales is not overstated means what? If something is 10 crore, really 10 crore sale is there. Actual sale is 8 crore, company showing 10 crore. That should not be there. How to check that the sales are not overstated? Whether a single invoice is recorded twice or cancelled sale invoice could also be recorded. How do we check this? We compare register with a number. Because sales number cannot be manipulated because it is pre-printed invoice number. It is computer generated number. Year beginning, the number started at 1100. Right now the number is at 2650. Means 1550 numbers were received. So how many we have totally? 1550. Now I will see in the ledger how many were accounted sales. Total credits in the sales account. The total number of credits on various dates is 1600 or 1500 were there. What happened to 50? I will have to question. Test check few invoices with entries in the sales journal. Obtain confirmation from customer regarding genuineness of the transaction. Any fictitious customer, whether sale have been recorded or not, check it out. How do we identify fictitious customer? We can't identify basically. We will take who are all our customers. See again, for manufacturer, customers are wholesalers. For a retailer, customers are consumers. Correct? A retailer, it is very difficult to identify consumers. But for a manufacturer, who are all customers, we can identify. External confirmation will be enough. Depending upon whom. Are you auditing a manufacturer or are you auditing a retailer? Depends upon that, you need to apply that procedure. For a manufacturer, I will apply external confirmation to know about existence of a customer. But for a retailer, external confirmation is not possible. Understood? Only thing we can check is whether it is received or not. Whether any shipment was done without consent or agreement from the customer, without purchase order, you can't ship the goods. If you ship the goods without purchase order, it's a loss for the organization. Next. Look at the invoice sequence. Review journal entries, especially unusual items. Calculate ratios. Check sales return with sales invoice, stock register, credit note, everything. And how do you verify? All the sales made during the year were completely accounted. This is to identify understatement. This is to identify understatement. Whether all sales, whatever sales accounted, are they really occurred? This is to identify overstatement. Whether all sales occurred during the year, are they recorded? This is to identify understatement. Understand? Completeness assertion is focusing mainly on understatement of sales. Occurrence assertion is mainly focusing on overstatement of sales. Suppose 10,000 crore turnover is there. Is it really occurred? What does it mean? Is it really occurred? That may not be there. In reality, less than that might be there. This might be overstated. I want to check whether it is really occurred. All the transactions accounted. Here, what does it mean? There might be some unrecorded. Unrecorded means what? What you shown is less than what it is. Means understatement. Understood. They may ask you like this. Is it understatement objective or overstatement objective? My auditor is following this procedure. This procedure will detect what? Overstatement or understatement. MCQs they will ask you, case-based MCQs. Now we will see at what value the sale is booked. Generally sale will be booked at gross invoice value minus GST. And any freight collected may be booked separately. Getting it? So gross invoice value minus GST minus freight outward, which is collected from customer. So we will exclude it and then record only revenue from operations. See whether AS9 recognition criteria is satisfied or not. We will check AS9. And especially if it is export sales, AS11 also we will see. Now we need to check the rate at which sale is effected. Is the rate authorized or not? Discounts also we should check. Now what should be the disclosure? Revenue from operations, you should disclose sale of products how much, services how much, other operating revenue how much. Trade discounts and all has to be disclosed. Whether transactions with related parties are disclosed in the notes to accounts or not, you need to see. Now other income, this is important point. How do you audit interest income? It is recognized on time proportion basis. Auditor has to see whether based on the fixed deposit receipt, interest is accounted correctly or not. Dividends, you will receive only when the other company declared, only then it should be recognized. See, entity right to receive is established. See, economic benefits, for sure dividend will be received or not. See, dividend can be measured reliably. Obviously, what they will put some rate of dividend, no? We can measure it. Same way, how do you verify gain or loss or, profit or loss on sale of investment? So it is recorded as other income. So what other income consists of? Interest income, dividend income, sale or profit on sale of investments. Now, how to do audit of other incomes? For interest income, first get list of fixed deposits. In that you will find rate of interest. You apply arithmetical. You calculate once the interest calculation. How do you calculate? Multiplying deposit amount with the rate of interest into number of days. Simple, no? For deposits outstanding as a balance sheet date, get direct confirmation. Obtain interest certificate from banker also. Interest confirmation banker will give. Not only balance confirmation, interest confirmation they will give. Also see form TDS. 26A there is a form. Nothing but form 16A will be there. Getting it? Whenever I was given interest, bank deducted TDS, no? They will give me acknowledgement that they paid this much interest and this much TDS is deducted. See, it is matching with the amount recognized in the books. Dividends also. You see whether the same are recognized, especially whenever there is a sale of investment, X dividend, cum dividend like that. See who is receiving the dividend, check it out. And disclosures. Interest income, dividend income, gain or profit on sale of investments, other non-operating income. Non-operating income means what? Other than business related income. Next, undisclosed income. This point in Caro newly added. Company shall also disclose. If suppose any income tax raid conducted in the company and some amount was discovered during the raid, that is an income but not accounted in the books of accounts of the company. If this income belongs to past period, company shall account it in the current period as a prior period item. Auditor has to check whether this has been done or not and report it in Caro. Management should disclose in financial statements. Schedule 3 was amended like anything in 2020-21 time. Correspondingly, Caro amendments were also given. Are you clear? These were all amendments were made in Schedule 3, 2020. Then how to do audit of purchases? This is again similar to sales. Able to understand like all of you? How to verify purchases are occurred? How to verify purchases are occurred? Whatever purchases, recorded purchases, are they actually received? Ensure that purchases are not understated or overstated by performing following. Is there any fictitious vendor? Is there any fictitious invoice? Whether goods were received at the factory gate, whether there exists an entry at the security gate. Inward register, we call it as what? Goods inward register. Security keeper, gatekeeper will maintain, storekeeper will maintain stock record. Whether quality inspection is done, GRN is prepared, purchase invoice and purchase invoice, GRN, purchase order, three-way matching we call it as. What we call it as? Three-way matching. Purchase invoice, GRN, only these two if you are doing two-way matching. Whether stock record has been updated by store personnel. Purchase invoice should be original copy, only that you should check. Purchase invoice should have been booked, only risk reward is transferred to me. Purchase invoice should be in the name of our organization. However, in case of different branches, maybe branch address might be given. Input tax component should be booked in input tax, GST input. In case of purchases made from related party, see whether board of directors approval, audit committee approval is there or not. Auditor should review whether purchases should be capitalized. Is there any capital purchases? It should be capitalized, not recorded in purchases account. How do you verify whether all purchases were accounted during the year? Do cut off. Take purchases that are recorded in the last 1 week of the March. See whether goods risk and reward is received in this year or not. Also take purchases that were made in the April 1st week when the goods were actually received. If the goods were received on or before 31st March but recorded as a purchase of April month, you should question the management. You should modify. See, it's not invoice date. It's not when the amount paid. In our accounting, when the risk is received, when the risk is given. That is the deciding criteria for recording sale or purchase. In GST, time of supply may be based on date of invoice, date of payment, date of delivery, whatever. Getting it? But under accounting, it is ultimately substance over form. Getting it? This question was asked earlier. What analytical procedures regarding purchases auditor will do regarding purchase quantity and price? We do stock consumption analysis, composition analysis. Composition means what? What the stock will compose of: material A, material B, material C, raw material, work in progress, finished good. Composition analysis. Ratios we will apply. This question is important, many times asked. Next, how to do audit of employee benefit expenses. Now there is a question on this. This itself has been asked as a question. Like November 2019 or November 2020 or January 2021, somewhere it was asked. May 2020 exam was not conducted. Auditor need to obtain a clear understanding about organization and its hiring process. Appraisal means promotion, increment and retirement process. What you will check? Only this question was asked. So here entire these 3 points you have to write. So employee recorded employee benefit were actually incurred. Like we are showing employee benefit expenses 100 crore, salary is paid. First understand how entities process for capturing employee attendance, biometric, facial recognition, what? Manual attendance. There is always a risk that an entity could record expense for fictitious employee. We also call them as ghost employees, dummy employees. To address this risk, auditor will choose to meet employees in person, take a sample of employees as per the register, go and meet them, check Aadhaar card, check their employment contract, are they physically existing, check it out. First get a list of employees as at 31st March along with monthly movement for new hires, leavers and continuing employees. Take sample of new hires, look at appointment letter. First month salary credited only from the date of joining till that month end. Same way, take who have resigned from employees. For them, we will do final settlement, full and final settlement, gratuity settlement, PF settlement and all will happen for them. Check it out. Obtain monthly salary register for all 12 months. This is also called as payroll register. Check whether provident fund, ESI, bonus, everything has been collected and accounted properly. Verify provision is made for gratuity and all. In case of PF, Compile what is the rate of PF to the basic wage. Basic, yes or no, basic salary only, PF we will charge 12%. Like that. So all that. And perform analytical procedures. How company shall disclose how much is the employee benefit in the form of salary and wages, how much is contribution to welfare fund, how much is contribution for welfare expenses, means tea, coffee, all this, hospitalization expenses, employee, all that. Then how to do audit of depreciation and amortization. Fixed assets, if you understand, this is easy to understand. PPE, if you understand thoroughly, this is easy to understand. You didn't imagine, this much is there in items of financials. Huh? Which books you are following? Them, super. Okay. Then you are following ICA book. How come you can't imagine this much? Auditing in law, no, each and every word you study, right? Same way auditing should be studied. Now you understood, no? It is not something different. It is same like law. Every word, every sentence has a meaning, has an impact. Correct? Huh? See, that's what, no. If you read this and then give you translate the meaning, you don't understand anything. If that is not happened, what is the consequence you should understand? That's understanding. Now tell me, how do you verify depreciation? First of all, take list of fixed assets. Sir, no? Look at when the asset was installed if it is a new asset. Look at the opening balance. And look at the rate of depreciation. Is it matching with Companies Act depreciation schedule 2 or some rate? Matching or not, you should check. Income tax depreciation is not there in this books. It is separate again. That is separate. It is not relevant for books of accounts. See, depreciation, arithmetical accuracy, calculation correctly made or not. See, while calculating depreciation, salvage value has been reduced for calculating depreciation. Yes or no? If it is WDV method, only on the closing WDV of the last year, depreciation shall be calculated. See, if any asset is revalued, only after revaluation, depreciation has been calculated. Correct or not? All of you. And if there is any change in accounting estimate useful life, see that has been taken into consideration or not. If any method of depreciation has been changed, whether it has been disclosed properly or not. Correct? All that points came almost. Look at fixed asset register and see the fixed asset register is recording all the depreciation aspects or not. All that is there. You will see all these points in real life audit for sure. Only when you go there and you see all this. See, tomorrow when you go for audit, how you should audit, no? Don't ask, Anna, eppadi pannanum, avanukku theriyadu. Because I am experienced, no? Yes or no? He also doesn't know. I think he knows very well, but now I know that he doesn't know. Okay. So first you have seen this audit, no? What is audit? Stat audit means what's your objective? You have to give opinion. You have to give opinion on the financials, whether they are right or wrong. Take balance sheet. Right side, the top, assets were there. Below, liabilities were there. Or liabilities first and assets next. Whatever the approach they can follow. Assets, fixed assets were there. What points you will check? Logically you do audit. So what are the fixed assets? Plant and machinery. You want. When and all these plant and machineries were purchased. Invoices you want. What is the amount? How much is capitalized here? And how much is the depreciation? What method they used? Why they used that method? Is the plant and machinery, suppose they followed SLM. Is it really SLM? Is SLM suitable? Check it out. And in this way you should do audit. Then you should take the actual bills and vouch whether the amounts are correctly made or not. Yes or no? Then remember, in Caro, what you should report about fixed assets. Check it out your reporting requirements. Always, whenever you are verifying some item, always cross check with your reporting requirement. The way you do audit should change. Getting it? Going there, waiting for lunch time, getting it, and verifying bills, ticking something. Enna pannite, audit pannite. Adula enna pannite, audit da pannite. This is what they do, yes or no? Actually, that culture should evolve. In the offices, the culture should evolve. Like principal should make you sit and explain what exactly happens. Why we are doing this, what exactly the scope of work, all that you should. How audit meetings will happen, once you get an audit, in some audit firms, in big, especially big firms and above medium firms, it happens formally, to some extent good. In small and medium firms, உன்னை கூப்பிட்டு வா, you will be called. இந்த போயிட்டு ஆடிட் பண்ணிட்டு வாப்பான்னு சொல்றேன். This is what they do. என்ன பண்ணணும்? போப்பா நீவே கத்திக்கிற அப்படி சொல்றேன். What? I don't understand anything. Correct? We don't understand anything. This is what happened to me. போப்பா ஆடிட் பண்ணுப்பா. அப்போ எனக்கு ஆடிட்னா என்ன தெரியும்? ஸ்பெல்லிங் தவிர என்ன தெரியும் எங்களுக்கு? For you at least, we are there to give you what exactly happens in audit. But for us, the person who came to teach us audit doesn't know audit first of all. What he knows is only reading everything and explaining. And giving, dictating notes and take notes. அவ்வளவுதான். இது மட்டும் தான் தெரியும் எங்களுக்கு. வேற எதுவுமே புரியாது, எதுவுமே தெரியாது. சொன்னலே, that time the papers were easy, so we qualified easily. Okay, though it took little effort. Now papers are tough. And you're getting better resources also. Same way. Both are offset. Both are compensated. Then how to do audit of other expenses like power, fuel, repairs, all that. Now they asked this sentence exactly as a question. While the auditor may choose to analyze monthly trends for expenses like rent, power, fuel, the auditor generally prefer to vouch other expenses. What points he will consider? Whether expenditure belongs to current period, whether it is revenue and not capital, supporting documents we will check, whether expenditure is classified under correct expend head, whether expenditure was authorized, whether it is related to business but not personal. What is this question? Generally, this is again linked with the substantive procedure, analytical procedure. Generally, when controls are strong, you can just perform analytical procedure and then leave. But these expenses, generally you can apply analytical procedure. Okay, if it is in line with the trend, you will leave it. What else you can do for these expenses? They are asking. What I will do? I will take supporting documents, bills I will see. I will vouch them. Yes or no? I will see is it revenue expenditure or capital expenditure. I will see it is business expenditure or other expenditure. They debited it under repairs. Is it really repair expenditure or some other expenditure? Correct head classification or not. These are all the points I will check apart from analytical points. Understood? So how to do audit of rent expenditure? Verify whether all the 12 months rent is recorded. Only rent amount should be debited to P&L. Deposit given, advance given shall not be debited to P&L. See the rental agreement is in the name of the company. Power and fuel expenses. Take month-wise schedule. If any unusual consumption is there in 1 month, why? What happened? Check it out. Whether corresponding increase in production happened or not. Suppose in 1 month power and fuel is so much. Management told, no sir, that time production was very high. You see production record, really production was high. Why production was high? We received a big order. Which means next month sale should be there, no. You see how the chain will go. So, verify expenses recorded for all the 12 months. Only units consumed. Analyze monthly power units consumed by linking to finished goods and investigate. You take bills, power bills and see how many units consumed, what is the rate, apply. Nowadays you need not because it's automatic, no. Power bills and all automated, no. They automatically come. You cannot manipulate the rates and all. And how to verify legal and professional expenses. Only this they can ask for 3 marks. How to verify traveling, repair, maintenance, printing expenditure. That alone can be asked for 3 marks. That's it. I gave you a glimpse idea. Getting it? Now what is your duty? You have to go through each and every line thoroughly. Understand exactly why you have to do it. It's not what, it's why. That is the question you should make yourself. Getting it? That's it. So we'll start with standards. See, in our book it is actually chapter number 3. Whereas in ICI material it is first chapter. In ICI material it is first chapter. And what ICI material contains is only preface. It won't discuss anything about any standard specifically because many of the standards were discussed as part of various chapters. You need not refer pronouncements, technically speaking. But every exam, in the past 3 exams, one question is coming from pronouncement explanatory material which nobody can read. I'm saying nobody can read because it's impossible to cover that. Pronouncement book is of 1200-1300 pages, which talks purely about standard and implementation guide. From the implementation guide, nothing but application material. They are asking question. Last time also they asked a question on SA 230 from the application material. You will not find that question or that related matter anywhere in the ICS main study material, anywhere in the CA inter material on 230. Because in ICI final material, SA 230 topic, they are asking you to refer CA inter material. But when you go to CA inter material, you don't find anywhere that. You will find that only in the pronouncement. That too in the application material you will find, not in the normal material. Getting it? So for that, like you may find some simple answers outside, but that is not the answer you have to write in exam. You have seen the valuation pattern now. Only if suggested answer terminology is presented, then only you'll get marks. Otherwise, you don't get the marks. And that kind of risk is always there. From pronouncement, definitely a question will come. From where it will come, you and me cannot predict. And so, does it mean should we read entire pronouncement? See, it's like many will read that, but for namesake they read, but they don't literally understand anything. They don't literally learn anything out of it. It will take a lot of time. That's why in the proposed scheme 2023, which is going to be launched, proposed scheme for November exams onwards, it might be launched. With respect to standards portion in audit, they are keeping it open book exam. With respect to standards topic, it's a restricted open book exam. Restricted open book exam means in audit, some part of the paper is normal, as usual, present approach. Some part of the paper will be open book. So in that case, remember I'm telling you, open book exam will not be that simple. If a question is framed so conceptually and practically, those who really understand the standards intention, the application guidance, only they can write that answer well. Otherwise they can't write. It's impossible. It is not like economics for finance, economic class paper. In fact, last time I heard economic class paper, or that before last time, was a bit tricky. I heard. I don't know. I just heard. Okay, but that is only a beginning. That is only a beginning. In order to protect the reputation of the profession, in order to produce more qualified chartered accountants, more qualitative chartered accountants, obviously these measures are required. So open book exams, don't expect a simple. Maybe in the initial level it might be simple, but later it will be difficult. And first of all, so what are the standards that we are having? So first we'll have a look at. The chapter. Actually, this chapter is called as, the institute will not release standards on auditing. Institute will release engagement and quality control standards. For all the standards that institute has issued, the name is engagement and quality control standards. We have only one quality control standard, SQC1. We have various engagement standards. Now, the institute divides the engagements broadly into two types. Institute divides the auditors, whatever work they are accepting. The work is broadly divided into two types. Assurance works and non-assurance works. And only non-assurance work has a standard called SRS. Standards on related services, like compilation engagement, 4000 series standards. These are nothing but 4000 series standards, compilation engagements, compilation works, mostly agreed upon procedures, compilation works, that's it. Suppose if a company specifically called you to prepare financial statements as per Division 2 Ind AS, you are appointed only to prepare the financial statements. You are providing non-assurance service, nothing but related service. So what are your responsibilities? What are their responsibilities? All that is governed by related services standard. I am telling you, whenever you are recruited for non-assurance work, most of the terms and conditions were driven by terms of engagement, not even the standard. So this SRS is not quite popular, logically speaking. Next we have assurance related works. Next we have assurance standards. These assurance standards are again broadly divided into two classifications. Is it an assurance of historical financial information? Is it an assurance of historical financial information, or is it an assurance on other than historical financial information? Assurance on Historical financial information means past financial data. Somebody has already prepared financials and you have to give assurance on that. So relating to that, the standards are different. It is not past financials, it is about projected financials, prospective financials. So for these, standards on assurance will apply. Standards on assurance. This is called as SAE. This is actually called as SAE. So this is 3000 series. This is 3000 series. Then we have on historical financials, we give assurance 2 levels. One is reasonable assurance, another one is a limited assurance. Limited assurance is dealt under SRE. SRE means standard on review engagement 2000 series. Getting it? Then on historical financial information, we give reasonable assurance, and that is called standard on audit engagement, SA. We actually keep the word SA. E also we don't use. SAE means standard on assurance engagement. SA refers to standard on auditing. Getting it? And this is completely 200 series. This is completely 200 series. So standard on audit we have in our syllabus at final. We do not have this one, and this one. We don't have all these in our syllabus. Able to understand. Now, Institute has given a guidance note on assurance engagements, entire this assurance engagements. So the guidance note says related services are not treated as assurance engagements, and that's what we actually discuss it right now. Now, coming to standards on auditing, we have totally 35 standards on audit, plus we have 1 standard on quality control. Totally we have 36 standards in our syllabus. Getting it? We have one SQC1. This is applicable for every audit firm, whether you are a sole proprietary concern or a partnership firm or LLP. Whenever you are engaged in rendering audit services, SQC1 obviously apply. And remember, SQC1 is not only in the context of audit. Even if you are rendering related services, this SQC1 applies. Getting it? So SQC1 is a standard applicable to firms rendering audit services, review services, and other related services. So SQC1 applies to literally every chartered accountant firm. Getting it? Then we have various auditing standards. These auditing standards apply to all the audit engagements where you are supposed to give opinion. Which means when I'm doing internal audit, these standards do not apply. When I'm doing operational audit, these standards do not apply. Because for internal audit, we have SIA. Standards on internal audit, we have separately. Getting it? For operational auditing, we follow ISO standards. We follow ISO standards for operational audits. Whenever we are doing operating audits, we follow some sort of ISO standards will be there. When we are doing audit of information system, we follow ISMS standards. Getting it? ISO 27001. These are all information system management security. Those standards, we check those compliances. COBIT, COSO, all that frameworks we will follow. That we will discuss in risk assessment chapter. Are you getting the point? Now, what are the standards that we have? So we have 200, 210, 220, 230, 240, 250, 260, 265, and 299. Then we have 300 series, 300, 315, 320, 330. Then we have 402, 450. That's it. Then we have 500, 501, 505, 510, 520, 530, 540, 550, 560, 570, 580. Next we have 600, only 3 standards, 600, 610, 620. Then we have 700. That's it. And we have 800 series also, but that is applicable for special purpose financial statements audit. That's not there in our syllabus as well. Getting it? Now these are the standards. Out of this, we have already completed 700, 701, 705, 706, 710, 720, 600, 610, 620, 570, 260. 299. These standards we have already completed as part of audit report chapter. Then coming to risk assessment, we are going to cover this. Risk assessment, we are going to cover this in risk assessment chapter. Then we are not covering audit strategy chapter. 320 standard also, 330 standard, 230 standard, 240, 200, 210. We are asking you to refer ICS study material of CA Inter. For all this, you have to refer CA intermaterial because the content is not covered in CA final. So which standards? 200, 210, 230, 240 and 300, 320, 330, 500. So all these standards you have to refer to CA intermaterial. Sorry. 520, 530. Sorry. Getting it? So these standards you have to refer to CA intermaterial. This is what clearly mentioned in ICS study material, second chapter, audit strategy. If you look at ICS study material, audit strategy chapter, at the end of the chapter, they have given a big table, big box. In that they clearly mention whatever I have highlighted in red color. Please refer to CA inter. Now, what about the remaining standards? This we will discuss in risk assessment and internal control chapter. Now, what are the remaining standards that we have? So 220 we need to discuss, 250 we need to discuss, 402, 450, 501, 505, 510, 540, 550, 560, 580. So how many? 1, 2, 3, 4 and 5. 265 is also risk assessment, internal control. 265 is also risk assessment and internal control. Getting it? Then we have 5, 6, sorry, not this. Yeah, 5, 6, 7, 8, 9, 10, 11. Approximately 11 standards that we need to discuss. SQC, of course. And 12 SQC. Getting it? So 12 standards we need to broadly discuss. So nothing but the standards which we have to cover exclusively as part of standards topic. Exclusively as part of standards topic is SQC 220. This is a set. This is actually a set. See, they both are not completely related, but this has to be read in a set so that you can understand better. Then 250 you need to understand. Then we have to understand 402, 450. Then 501, 505, 510, 540, 550, 560, 580. That's it broadly. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. These standards is what important as part of standards topic. Getting the point? All of you. Now, you may have this query. So what about 520, 530, 230, 330, all this? You can watch my CA Inter Marathon. Getting it? You can watch my CA Inter Marathon for having an idea. So what is that? 300 is nothing but audit strategy chapter. 500 is nothing but audit evidence chapter in CA Inter. 330 is nothing but audit evidence and documentation chapter. 230, 330 together. 230, 330, 500. All these three together is a documentation and evidence chapter in CA Inter. 520 is analytical procedure chapter in CA Inter. 530 is audit sampling chapter in CA Inter. You can open my CA Inter audit marathon and can watch all this. There is no change in the syllabus. Getting it? You can watch. But 99% of the cases, CA final, they will ignore all this. Even institute also will not test. If at all they test 5 marks weightage only, it will come. Probably, I'm thinking. Able to understand? All of you. Next. So that's about the breakup of the standards. So we'll start with so the order we will go is, the order what we will choose is 250 we will discuss, 501, 505, 510, 550, 560, 580, then 402, then 450 is nothing but evaluation of response. This evaluation of, conclusions you need to, this is a conclusion standard. This has to be understood along with 530. Evaluation of results. It's nothing but actually evaluation of results of the audit procedure. Evaluation of evidence. Getting it? So this is nothing but 530 related discussion will be there. Projected misstatement, anomalous misstatement, tolerable misstatement. That entire discussion will be as part of this. Okay. Anyhow, one by one we'll proceed. First one. So internationally, we have an institute called International Federation of Accountants, which established International Auditing and Assurance Standard Board. Before this IAASB, it has a name called International Auditing Practices Committee. In India, it is called as Auditing Practices Committee. Later, it is renamed as Auditing and Assurance Standard Board, which is a non-standing committee of ICI. Then, And in India, ICI is the supreme authority for releasing all the standards. So under the authority of the council, the Auditing and Assurance Standard Board issues engagement and quality control standards, statements, guidance notes. Right now, you don't find any statements. Statement or standard, both are one and same, literally speaking. Right now, there are no such thing called statement. Getting it? Next. So authority, statements are mandatory, standards are mandatory, and even guidance notes are recommendatory. However, the following guidance notes are mandatory. Guidance note on IFC, guidance note on tax audit is mandatory to be followed. You have to compulsorily follow all these guidance notes. And that's why, because of guidance note on tax audit, we give 3CD form. Getting it? These are the two guidance notes which is compulsory. Now, can you deviate from standards on auditing? You shall not deviate. If at all you are deviating, you shall disclose that in the audit report. And remember, just because you are disclosing, you are not exempted from the standard. Just because you are disclosing that I have not followed so and so standard doesn't mean you are relieved from the responsibility to comply with the requirement of the standard. Then, what about accounting standards? Accounting standards are applicable for all business, commercial, industrial establishments. If not followed by an organization, you have to give a qualified opinion or adverse opinion. And suppose if the company has clearly gave a disclosure, you just have to give a disclosure without any modification. You may use emphasis of matter paragraph to highlight that. So if accounting standard is not followed, please refer notes to accounts of the company because it is disclosed by the company. Suppose if it is not applicable, if for a particular organization where you are doing audit, accounting standards do not apply, then you have to give a disclosure in audit report without making a modification. So this is actually preface of the standard. Preface of the standard. Able to understand. Now we'll straight away start with our SEA 250. We'll straight away start with SEA 250. So SEA 250. So what is this? Auditor's responsibilities relating to laws and regulations in an audit of financial statements. What are auditor's responsibilities relating to laws and regulations in an audit of financial statements? The standard has another name which is used interchangeably. Consideration of laws and regulations in an audit of financial statements. Nothing but consideration of laws and regulations in an audit of financial statements. See, NOCLAR is a different provision outrightly. That's a guidance given to internal auditors, stat auditors, and every chartered accountant, first of all, every member. Whereas SEA 250 is applicable for independent auditors. I'm not using the word stat auditor, understand? I'm using the word independent auditors. Whenever you're doing an independent audit, SEA 250 you have to compulsorily comply. Now, what is this SEA 250 says? What SEA 250 is asking from the auditor? Look, financial statements, what is our objective? We need to give opinion whether financial statements are free from material misstatement. How a material misstatement might occur either because of fraud or because of error. Material misstatement may occur in the form of amount, presentation, classification, disclosure. It may be overstatement or understatement. Now, how a law and regulation affect financial statements? That is a main question. How a law or regulation affect the financial statements? Very simple. Taxation laws you take. TDS you take. We need to deduct TDS at appropriate rate. At the rates given by the chapter 17 of the income tax law. We need to deduct TDS at a particular rate. Now, as on 31st March, whatever TDS we have deducted, we will show it as a liability. What if you are actually supposed to deduct TDS at 10%, but you actually deducted at 3%? You are understating your liability. Are you getting the point? Because you have not deducted TDS at the right amount in the act. But remember, ultimately, if department asks for, you have to pay that late fee. You have to pay the penalty. You have to pay the interest for lower deduction. You have to pay for non-deduction. So, because of a non-compliance with the taxation law, because of a non-compliance with the taxation law, you are about to incur a liability. You are about to incur an expenditure, additional expenditure. So, and if there is a non-compliance, and the non-compliance is not identified by the company, non-compliance is not identified by the auditor, what will happen? The financial statements will be showing a lesser liability. The liability that we have, that we accrued under a statutory law, getting it, that we didn't recognize in books of accounts. So this is how a non-compliance with the law and regulation affects the financial statements. And remember, these laws and regulations, see, the standard uses a very vague term, laws and regulations. There are approximately in India more than, the people say 20,000 enactments. 20,000 enactments were there. Approximately, for every small thing also there are laws. Getting it? Very recently I saw this, law, where I'm taking an insurance policy. I saw this Married Women Protection Act. There is a law, Married Women Protection Act. Like generally, if at all we take an insurance, whatever the sum assured, getting it, in the event of that uncertainty, it will go to the nominee. But at the time, if I have any liabilities with banks, creditors, everything, whatever the insurance amount is there, that will first adjusted towards the liabilities by the court, then balance only has to be released to the nominee. Suppose if the nominee is a married woman, getting it, for them, it's a protection. Insurance is taken by people across the world as a protection for the family. What if the nominee is not aware of all this? So there is a Married Women Protection Act is there. If your insurance policy is registered with Married Women Protection Act, the outsider and all cannot touch this one. It will only go to the nominee completely, irrespective of the liabilities of the insured, person insured. So we can't predict how many laws and regulations were there. Same way, for a company, every company which is doing industrial activity or whatever, they have to comply with enormous laws and regulations. Auditor has to check that, there is something called Legatrix, this one. So this is a list of, this is how we check non-compliances with laws. You see, this is one of the, compliance audit checklist. This is something called compliance audit. So, Legatrix, like Companies Act, CSR, how many tasks, how many things we need to check. Companies Act, how many things we need to check. This is regarding compliance audit performed. It's one of the internal audit. It's one type of internal audit. See, Air Prevention and Control Pollution Act 130. Compliances they need to check. The Apprentices Act and Apprentices Rules 232 checklist were there. Bombay Provision Municipality. This is actually company situated in Bombay, so they need to comply with Bombay Municipality. The Bureau of Indian Standards. This company is doing some hydrogen peroxide production. So relating to that, some 110 compliances were there. You see, so many laws we don't know at all. These are all administrative laws. Like you see, environment protection, there are so many. On environment protection, approximately you see 10 types of laws were there. Environment protection, the batteries, environment, biomedical waste, environment protection rules, e-waste management, hazardous and other waste management. These are all various acts. You see, likewise, for one of the company, one of our, friend has done this work, 4,935 legal compliances you need to check. Getting it? Sexual harassments for women at workplace, prevention, prohibition, redressal. So that particular act. Security section, SEBI. So we only know few laws of this. And we say in Instagram, CA course, 20 laws, 200 sections, 5,000 pages. Ordinary person cannot do. Only those who do are called as chartered accountants. Stupidity. Yes or no? And you see, total compliance list is like this. This is the audits. These are the audits. How challenging are they? These are being done by big four entities. Many of them are doing all this. See the compliances. It goes up to 4,935 and what they verified. Everything they'll show. 8,282 points they need to check. And everything they need to check. This is called compliance audit. In PSU audit, we do compliance audit. This is something similar to a compliance audit. This is purely law and regulation audit. Some companies, they want to, every company which is operating especially in manufacturing facility, which is having a manufacturing, they do these kinds of audit intentionally every year. Why? Because if at all they don't check their non-compliances, suddenly a big penalty will come. They have to pay bribes and all in order to come out of that situation. If a law is not complied, it will affect the going concern of the entity. Correct? So, The auditor has to check various laws, and the standard divides the laws and regulations into two types. This standard divides. Now you see so many laws, no? You may immediately say, sir, all these laws are not covered in syllabus. First of all, we don't even understand the technical terminology used in these laws. Okay, what is e-waste itself? One important question is there. That itself we didn't understand. And inside that law, how the e-waste is generated, what are the ways to dispose the e-waste? So many were there, so many non-compliances. As a financial auditor, how many I will check? Getting it? So that's why the standard divides the laws and regulations into two types. Those laws and regulations that directly affects material amounts and disclosures in financial statements. These directly affect your financial statements. Some amount or disclosure will directly affect if at all this law and regulation is not complied. Example, tax laws, labor laws. Getting it? There are other laws and regulations. If I do violate pollution norms, if I do violate, a battery manufacturing norm, it may not result in a material misstatement in the balance sheet. It may not result in overstatement of credit or debt, nothing. But failure to comply with them will have a significant problem at a future date. It may affect the continuity of the company. Resultingly, penalties, fines and all will be levied. So, these are other laws which do not have direct effect on amounts or disclosure, but compliance with which is compulsory to avoid penalties and fines. Able to understand? So, the standard divides the laws and regulations into two types. Now, type 1 law, auditor should get reasonable assurance whether these type 1 laws and regulations are complied or not. Type 2 laws and regulations, you have to perform limited audit procedure. Specified audit procedure. The standard actually uses the word specified audit procedure, but I call it as limited audit procedure in order to identify non-compliances. Just to perform limited audit procedure, try to identify is there any non-compliance by doing limited work. You are not expected to have a big checklist like what I showed. I have showed a big checklist of that and all you need not do. But you do some limited procedures which the standard says. By doing that, if you identify, okay, otherwise proceed, no problem. But this type 1 laws and regulations, you have to obtain sufficient appropriate evidence that all these laws and regulations are complied. GST, Provident Fund, Employee State Insurance, Income Tax, Property Tax laws, Municipal Tax laws. Getting it? All these laws and regulations have a direct impact, immediate cash flow. Getting it? So those laws you have to verify compulsorily. So these laws you have to get reasonable, whereas these laws you have to simply get, limited assurance. So what is that? So what limited audit procedure for type 2 laws means what? What is meant by limited audit procedure? Simple. Inquire the management. Inquire top management whether there is any non-compliance, whether the entity is in compliance with these laws and regulations. Nothing but ask them, is there any known non-compliances with laws and regulations? First ask them. And inspect correspondence with the legal and regulatory authority. Look at the penalty ledger account. Look at the legal fee ledger account. For what purpose it is paid, to whom it is paid. And inquire the lawyers to know details of any pending litigations under environmental laws, product safety laws, consumer safety laws, labor laws. So just to perform this, in the process of doing this, if you came across any non-compliance, see whether it is appropriately dealt in the financial statements and disclosure is made, check it out. Suppose you discovered non-compliance, financial statements are not disclosing it, financial statements are misleading it, then give a modified opinion. Able to understand? So this is regarding type 2 laws. Limited audit procedure you have to perform. Now, so what is the responsibility of the auditor? First of all, who is responsible for complying with all laws and regulations? Management. Management is primarily responsible to ensure that the entity operations are in accordance with the laws and regulations. Now, what is the responsibility of auditor? The auditor has the responsibility. The auditor shall obtain sufficient appropriate evidence regarding compliance with type 1 laws and regulations. Don't write the word type 1 in exam. In exam you have to write auditor shall obtain sufficient appropriate evidence regarding compliance with those laws and regulations that have a direct effect on determination of material amounts and disclosures in the financial statements. Type 2, to perform specified, actually institute uses the word specified audit procedure, but I renamed it as limited, but in exam please write the word specified. Specified, perform specified audit procedures on other, audit procedures to identify incidents of non-compliance related to other laws and regulations that do not impact directly the financial statements. However, compliance with them is compulsory in order to avoid penalties and fines. This is actual sentence. Getting it? And once you identify how to report non-compliance, if you identify a non-compliance, how to report, this is what the standard deals with. What the standard ultimately says, you see. Reporting of non-compliance. The moment auditor identified a non-compliance, first report to top management, those charged with governance. And how do you report in audit report? Suppose if non-compliance is a material effect in the financial statements and is not properly reflected in financials, you discovered a non-compliance, not disclosed. Non-disclosure, material misstatement, give a qualified opinion or adverse opinion. Suppose you are not able to get any evidence on non-compliances, you are not permitted by management to have access to that legatrix, that legal compliances checklist. Management will prepare that kind of checklist in every company. You need to ask that checklist, see that. Getting it? If management did not give, depending upon the pervasiveness, give qualified. If you think that is so pervasive, give disclaimer. Don't express the opinion at all. Are you clear? Sir, can auditor find, can auditor find any indicator for non-compliances? Yes, there will be some indicators. As part of risk assessment, you should keep all these indicators in mind. Like if any investigation is going on currently, that's an indication that some sort of violation might have been done. Payment of fines and penalties. Suppose in the ledger account, fines, penalties account is showing higher amount. For what purpose they paid a fine? For what purpose they paid penalty? That might be a reason of non-compliance. Unspecified services, unspecified loans to consultants. On this, I remember a news always. In Walmart in United States have paid approximately some 250 or 300 crores penalty. Because in the Walmart consolidated financial statements, there is a ledger account, there is an account which shows payment to others, for which there is no explanation. Upon investigation by Anti-Corruption Bureau in the United States, it is discovered that this is an amount paid to bureaucrats in India for getting license to operate best price stores across India. Getting it? Since they paid bribes and obtained licenses, the Anti-Corruption Bureau in the United States have levied a penalty of 300 crore. So payment to unspecified services means there is no reason explained that might be a bribe. That is an indication that some non-compliance is there. And you are purchasing at a higher price or at a lower price compared to arm's length price. This is a non-compliance with the tax law. Unusual payments in cash, non-compliance with the tax law. Unusual payments for lawyer fees. Why you are paying too much of legal fee? It's an indication that some issue is going on. And transaction with companies engaged in tax haven, it might be a non-compliance of GAAR principles, general anti-avoidance rules. Getting it? And unauthorized transactions, adverse media comments. These are all indications of non-compliances. Whenever you find an indication, what auditor has to do? Investigate and try. Is there a real non-compliance? Remember, indicator is just a symptom. It is not a real non-compliance. They will give you this sentence. They will give you this sentence as a true or false question. An indicator, they will remove the word, doesn't. An indicator mean that there is a severe non-compliance. False. Indicator is not meaning, indicator does not mean there is actual non-compliance. Indicator is a symptom based on which you should investigate to identify if there is a non-compliance. Indicator is a suspicion. It will raise suspicion. You have to be skeptical, able to understand. Next, what is non-compliance? First of all, non-compliance definition. Does it include employee personal misconduct? Employee, while going on road met with an accident or made an accident. Is it related to company? Exactly. Non-compliance means an omission. Non-compliance means an actual commission by entity, nothing but top management, or employee, either intentional or unintentional. Some activity they did or some omission they did which is contrary to prevailing law and regulation, and that's called non-compliance. It does not include personal misconduct by top management of the company which are not related to business. This is important for true or false statement or MCQ. So with this, the standard is main content is over. Clear? So what is the audit procedure? What is the audit procedure under SA 250 for identifying non-compliances, or what is the audit procedure? Inquiring the management, inquiring those charged with governance to identify whether is there any non-compliance. Do the company establish a risk assessment system for identifying non-compliances? Do company establish a quality control system for timely compliance with laws and regulations? Is there any, look at the internal audit reports, look at the lawyer advices, look at the fees and legal fees penalty account. This is all auditor has to verify in order to identify non-compliances. This audit procedure auditor will perform only when there is an indicator. Generally, when there is an indicator, auditor will perform this audit procedure in depth. Clear? This SA 250 over. Reporting we discussed. What is SA 250 we discussed. Clear? Confident? How many of you have gone through this SA 250 earlier? Oh, mostly. Next. So that's about SA 250. Next. SA 501, at least I'll cover 2 parts of this, then balance will cover after lunch. Now, so what is SA 501? So specific considerations for selected items. Okay, yeah. Specific considerations for selected items. So you should get audit evidence, specific considerations for selected items. See, this is actually an additional extension to 500. It's actually extension to 500. This 501, 505 were extensions. Originally they are part of 500. Later, almost 10 years back it happened. Later it was separately given as 501, 510. 505. Now what are the selected items? The standard selected 3 items. Existence and condition of inventory. In fact, let me not call existence condition here. Okay. The standard has selected 3 items. Inventory. Okay. Litigations, segment information. Now, what auditor has to specifically consider? For these selected items? What auditor has to specifically consider? The auditor has to specifically consider existence and condition. Of inventory. So with respect to inventory, which is a selected item, auditor has to specifically consider its existence and condition, not valuation. Remember, regarding valuation, the standard is not dealing with. MCQ, a question has been asked on this. Getting it? So SA 501, audit evidence specific considerations with selected items, deals which of the following? Option A, existence and valuation of inventory, existence and condition of inventory, condition and valuation of inventory, existence, condition and valuation of inventory. Most of the people selected the last option. Valuation valuation also we will check. But standard will not check about. Standard is not talking about valuation. Standard is talking about existence and condition of the inventory. Only the physical attributes it is being tested. Able to understand. Next, litigation. It is talking about completeness of disclosures. Completeness of disclosure. It is only talking about completeness assertion. This is talking about existence assertion. Now, segment, disclosure as per applicable framework. It's actually talking about what? Disclosure as per applicable framework of segment information. So these are the selected items. Auditor has to check these three. With respect to inventory, existence and condition, you have to check. Litigations, whether all the pending litigations against the company are completely disclosed. This is the actual verification point. Third one, whether segment information has been disclosed by the company in accordance with the applicable financial reporting framework. Accounting standard 17 Ind AS, what is the number segment? 108. So if it is 108 which is applicable, 108 you have to check. So schedule 3, division 2 and 108 requirement you should check. Able to understand. So regarding these three, now how to do audit? What specific considerations auditor shall do? For litigations, how do you evaluate completeness? In the last exam, this question was asked in May 2022, not what you thought. In that, internal point has been asked. If I show you, you will shock. Is this how the question will be framed? Litigations and claims were there, right? In the D point was there, right? 3 marks question was asked on this D point. On this D point, 3 marks question was asked. How the question was asked is, in what are the circumstances? In what are the circumstances the external auditor communicates with entity's legal counsel in respect of obtaining audit evidence regarding completeness of litigations? 3 circumstances. Now, when management refuses to give auditor when management refuses to give permission to directly talk to the legal counsel, or entity legal counsel refuses to respond, or auditor is prohibited from responding, or the legal counsel was prohibited to responding, auditor can directly talk with the entity's external legal counsel. So this is the question, which was asked. Getting the point? In what are the circumstances auditor will be trying to communicate with legal counsel? So this question has been asked. Getting the point? Please look at this suggested answer on this just once. And one more misconception I'll tell you. Since it is asked in last time, next time it will not be asked. Don't do that. Have you seen the people? They'll straight away ignore all the questions. Last 3 attempts, whatever questions are, they'll ignore. Examiner, whenever an examiner, suppose if I am the examiner, I will not look at last time enna question ketachpa. Amma, idu ipo keka kuda. Appadalla we don't think. Getting it? Nobody. Even if at all a paper is given to you, if at all you were given an option to set up a paper, how will you set the paper? According to you, whatever you feel important, you will test. Professional judgment again there also. So what will be tested, what will not be tested depends upon what is tested last time, what is tested that before time. No, adalla irka. Getting it? So litigations and claims, what auditor has to get? Evidence. Auditor has to get evidence by performing the following procedure. Whether complete disclosures were made, inquire management, wherever applicable, in-house legal counsel, internal company, internal lawyers will be there. Ask them. Review minutes of the meeting and communication with external legal counsel. Review legal expenses account. Get direct communication from the entity legal external counsel. If management denies permission, or meeting with external legal counsel, if denies permission, the entity legal counsel refuses to respond to the letter of inquiry, the auditor has to perform alternative procedures, and if that alternative procedure also after performing you are unable to get evidence, you should modify opinion. And finally, get a written representation from the company that all the pending litigations and their impact on the financial statements were completely disclosed in the financial statements. Nothing is omitted. Get a disclosure. Clear? Then segment information. What auditor shall get? Auditor shall obtain evidence regarding whether the segment information disclosures, are they made as per applicable framework? Are they made as per Ind AS 108? Are they made as per AS 17? Are they made as per Division 1, Division 2 and Division 3? Auditor has to check this. Now, these accounting standards gives you some methods to identify segments, reportable segments. Not every segment will report. First of all, how to identify a segment? There is a formula given in the accounting standard. How to identify reportable segments. Getting it? See whether the methods followed by our organization, are they matching with the methods given in the respective accounting standard? And you also reperform calculating reportable segments using that method. See how many reportable segments came and how many they have reported actually, and what are the segments that were not reported, why they have not reported. Check it out. Getting it? Now you see, obtain an understanding of methods used by the management and see that these methods are in accordance with applicable framework. If possible, test the methods and perform analytical procedures. Last year, how many reportable segments were there? This year, how many reportable segments were there? Why these segments were not reported? Does it come under discontinuing operation? All that you need to check. Clear? All of you? So next, with respect to inventory, auditor has to check evidence. Auditor should get evidence regarding existence and condition of inventory. Existence and condition of inventory. Let us finish that. First, how do you check whether inventory is really existing? In what condition it exists? First, attend management accounting. At the year end, it is compulsory for the auditor to attend the physical verification activity performed by management. But remember, we will have numerous clients. To how many client locations I will attend? That's why what they said, if inventory counting is carried at some other date or you are unable to attend at that particular date, then plan another date and then attend. So sometimes you can directly go and do inventory inspection. This is called surprise visit. Suppose inventory inspection is completely impracticable. You are unable to verify inventory at all. Try to get evidence about existence and condition of inventory by performing alternative sources. You are unable to. Example, inventory is in transit. Inventory is with third party. You are unable to go to that location, get external confirmation. That's what given. If the inventory is in the custody of third party, this question was given previously in one of the exam. When the inventory is in the control and custody of a third party, write audit procedure. If inventory is in the custody of third party, request confirmation from the third party. Suppose you are having doubt about the confirmation given by third party, you directly attend or arrange some other person to visit third party premises, obtain another audit report. Nothing but you are sending another auditor, right? Get his report, stock audit report, and inspect the documents regarding inventory held by the party. What is the proof that inventory is lying with the third party? Request confirmation from other parties where inventory is pledged or collateral. In case of collateral and pledge, get confirmation from other party. Suppose it's a gold jewelry company, some amount of loan they need, so they kept gold as pledged to the banker and got a loan. Here inventory is with the banker. Look at the loan document, look at the grams mentioned, look at the kgs mentioned. Getting it? That's it. So this is the standard. Now they will ask you this particular question. When auditor is attending physical verification activity performed by management, what points the auditor will keep in mind? Evaluate how the management is counting. Inspect inventory. Inspect means what? Some items will be there, no, some inventory. Look at the boxes. Are the boxes damaged, tampered? Is the boxes having inside the box, is the asset is there or not? Getting it? Perform test counts. You also count a test. Suppose when you're observing, some management person is counting and counting. This fellow is writing the number. Whatever the count he said, whatever this fellow write, is it correct or not? You also go and do test count. And reconcile physical inventory, whatever is there as per the records. In the same store, records will be there, reconcile. If any discrepancy is there, how they were resolving it. Is it excess or is it shortage or is the inventory kept at some other location? Identify. That's it. Are you clear? This point can be tested as a true or false again, or can be tested as an MCQ or case-based MCQ. Anything can be framed on this. You have to read and understand its impact as a whole. You should read. Just reading means not remembering. Don't try to remember the content. You will never remember. Try to understand the content. Naturally you remember. Remembrance is a byproduct of understanding. If you're not remembering means actually you didn't understand. Simple. Getting it? That's about this SA 501. Understood the exact standard completely. So what is selected item? What is specific consideration? You need to understand at that level in a holistic way. Clear? That's it. Now simple, if at all I was not given access to check existence and condition of inventory, I'm unable to get evidence, what will I do? Modified opinion. Which opinion? Qualified or adverse? Question should be qualified or disclaimer. Getting the point? Then suppose completeness of disclosures, information was not given. Qualified or disclaimer depends upon pervasiveness. Suppose some pending litigations were not disclosed at all, then qualified or adverse. Segment information not made as per applicable framework, qualified or adverse. Management is not permitting me to check segment information, qualified or disclaimer. Understood? So the next standard is SA 505, which is external confirmation. SA 505, external confirmation. So what is an external confirmation? It's a direct confirmation. This is also called as direct confirmation. This is also called as third party confirmation. This is a confirmation obtained directly by the auditor from third party. It's a confirmation obtained directly by the auditor from third party. There is a question on this. Like when analytical procedure cannot be applied, or they say when test of controls are not at all reliable. When test of controls are not at all reliable, it is better for the auditor to get confirmation from third party. Or if there is a significant risk involved in a particular item, if there is a significant risk is involved, then the best course of getting evidence is through external confirmation. When the item is involving significant risk, how auditors should respond? Obtain external confirmation. The link I'm telling you in SA 315 to this link. Now, what is external confirmation? It's a direct written response obtained by auditor. Nothing but it's a response to the auditor from the third party. We also call it as also known as confirming party in either paper or electronic form. So this is called external confirmation. Now, what is the procedure for external confirmation? First, what is the procedure? See, first of all, auditors should decide where and all external confirmation should be obtained. First, auditor should decide the information where he want confirmation. What determine the information to be confirmed? Like, should I need in debtors? Should I need in creditors? Should I need in loans and advances? Where? In respect of what information? What and all informations I want confirmation. Then I need to select conforming parties. Okay, I decided trade receivables, trade payables, something. In trade receivables, we have some hundreds of customers from whom we should get confirmation. Then send the request. Now this request can be sent in two formats. One is positive confirmation request, another one negative confirmation request. Where a negative confirmation request can be used, where positive confirmation request can be used, standard has given guidelines. Getting it? Then in these and send the request, including follow-up request. So this is what external confirmation procedure. What is this called as? External confirmation procedure. Write about external confirmation as an audit procedure. Just a minute. So in the main material, we have little more discussion, I guess so. 160. Yes, 160. Same only was there mostly. I think in CA inter material, we have given little more extra content. Just let me check that. See, the problem with ICA book is they don't have this entire matter. Only from pronouncement you have to copy this. Or from CA inter material we have to copy this. Which one standards? We can't prepare directly from pronouncement because it will become again excessive. So in this we will see SA 505. And you see here, we have given little more in-depth information was given at a CA inter material because it was there in the CA inter study material. Getting it? And definitely this kind of in-depth analysis also can be asked questions. Now you see, what is the external confirmation procedure? First, determine the information to be confirmed. So external confirmation procedures are frequently performed to confirm regarding outstanding balances or account balances. Or they can also be used to confirm terms and conditions. We can confirm about transactions. We can confirm regarding amount due to lenders. We can confirm regarding existence of property title deeds with lawyers. Getting it? They'll ask you a question like this. They'll straight away give this sentence. External confirmation procedures are frequently performed to confirm or request information regarding account balances and their elements. Further, the external confirmations can also be used for confirming certain other things. What are they? So you need to give any 4 points in this. It will be asked for 4 marks. Getting it? Only this itself can be asked for 4 marks. Next. Then you need to select the confirming party. First you decide the information, what information you want, what item you want to select. Do you want completeness of debtors? Do you want existence of debtor? Which assertion you want to test? Accordingly, select the confirming party. Now you see, response to confirmation request provide more reliable audit evidence. When confirmation requests are sent to a confirming party, the auditor believes is knowledgeable. To whom you need to send this confirmation? Knowledgeable third party. You need to send the confirmation letter to whom? Knowledgeable third party. What do you mean by knowledgeable third party? They have given an example. For example, in a financial institution, official who is knowledgeable about transactions and arrangements for which confirmation requested may be the most appropriate person from that financial institution from whom we can request confirmation. Confirmation party means not just the company, the other company, debtor, creditor. Inside that, who is the right person? Able to understand that one. Then design the confirmation request. The design of request may directly affect the confirmation response rate. What is confirmation response rate? Suppose if I send a positive confirmation request, in that reply is must. The choice of words, the way you draft, everything that matters, they affect response rate from the third party. How far the third party will respond. So it will affect. And the reliability of the evidence. The following are the factors when designing confirmation request. This itself can be asked as a separate question. What are the factors the auditor should keep in mind while designing a confirmation request? While designing a confirmation request, while exercising audit procedure as per SA 505. This question can come. So what factors auditor should consider? Risk of MMS, the presentation of the confirmation request, prior experience on the audit, whatever the experience you have previously, depending upon that is a factor. Suppose I am doing audit of a company which regularly interacts with their customers and suppliers. They regularly settle the accounts between them, statement of accounts they regularly bring and settle everything. Everything is pakka. And even our client, customers and suppliers are so responsive. Getting it? You send a normal letter, they'll immediately respond. That is the kind of experience I had previously. Then my response, the way I design the request can be different. Simple. Should I use a positive confirmation pattern? Should I use a negative confirmation pattern? This is the question. Should I use a positive confirmation pattern or a negative confirmation pattern? That is the question. And assertions being addressed. What assertion? You want to check whether outstanding balance is correct or not, or you want to check whether a transaction which is already entered, closed, settled, you want to check that completed transaction. Which assertion you want to get? Accordingly, you need to take confirmation. Accordingly, you have to design confirmation. Suppose, negative confirmation request. What is negative confirmation request? I'll send a request. The other party has to respond. Only he want to disagree. Only when he want to disagree. Your choice of words will reflect in such a way that other party will reply only if you disagree. Very simple. How the drafting will be done? Simple example. We, the auditors of XYZ Limited, for conducting statutory audit for the financial year 21-22, as part of our audit, while obtaining audit evidence, we are given certain authority to get external confirmation. Out of this, we have selected your company as part of our sample, random sampling, something you will mention. And it is observed that in the books of accounts of our client, as on 31st March, the outstanding amount receivable from you is 10,50,000. Kindly reply if you disagree with the above monetary amount. Kindly reply if you disagree. Which means the other party, and we will also further mention, ignore if the above balance is tallied with your records. So ignore this letter if the above balance tallied, which means we are indirectly asking third party to reply for what? Only if you want to disagree. Okay, if you want to disagree, please reply within 3 days from the date of receiving this confirmation. Like this we will send. If at all within 3 days we didn't get any reply, we assume that the amount is matching. Getting it? Now, whereas in positive confirmation request, the below paragraph will change. Kindly reply what is the outstanding balance reflected in your books of accounts blank. Please fill us and send the reply within next 3 days. Which means here, whether it is matching or not matching doesn't matter. What is outstanding balance as per his books of accounts, he should fill it and then reply you. Getting the point? So here, positive confirmation reply is mandatory. Now, which is superior? Obviously, positive confirmation request is superior method because it is what an effective communication. Negative confirmation request is risky method. If at all, the other party have not seen mail itself, the other party have not received the letter itself, 3 days over, you assume that it is matching. You may end up taking up a wrong conclusion. So, however, the standard says negative confirmation request is risky. Though it is risky, you can use negative confirmation request in certain cases. When the risk of MMS is low, getting it, and you obtain the operating effectiveness of controls. You already controls are working effectively, and moreover the risk involved is very low in that particular party. You can use negative format. Or there are large number of small homogeneous account balances, small accounts, immaterial balances not required. Or low exception rate is expected. What is it? Low exception rate is expected. Now, low exception rate. What do you mean by exception? What do you mean by exception? Exception is a difference between amount requested to be confirmed by the auditor and amount lying in the books of accounts. Two, we have to compare with the response given by third party. Getting it? Amount requested to be confirmed by auditor or prevailing in the books of accounts and amount confirmed by third party. Suppose in our books of accounts 10,50,000 outstanding balance is there, and that is what I requested in the confirmation letter. And whereas third party replied saying it is 9 lakhs. The third party said it is 9 lakhs. This is not misstatement, understand. This is called exception. This is called exception. Now, whenever there is an exception, we need to investigate further. Is it a material misstatement in our books of accounts or is it a material misstatement in third party books of accounts? So, in a true or false question, they'll give you exception definition and ask you, is it a material misstatement? No. Material misstatement means when the amount is not presented as per applicable financial reporting framework, it is material misstatement. When the information requested by you and information confirmed by third party differs with each other, it is initially treated as exception. When it is treated as exception, you need to investigate further why there is a difference. Is it mistake in the third party accounting or is it a mistake in our company accounting? Where the mistake went? So you need to verify entire transactions happened in the past. Then you will discover, is it a material misstatement in our books of accounts or misstatement in the other party books of accounts? Able to understand. So exception is not misstatement. Don't confuse. Getting the point? If exception rate is low, for a particular party, the exception rate is low. Why? How can you say low exception rate? With that party, very recently, our organization communicated and settled the records. Getting it? And when I saw already communication is there, 1 week before the audit only communication was there. This is the outstanding balance from third party. Obviously, now once again if I send a letter, I am not going to get a different balance. So exception rate is very low. Or low chances of non-response. Low chance of non-response means what? That the third party's nature is such that he will reply for every mail. He will reply for every communication. Definitely when I send a negative confirmation, if I did not get reply, I can confidently say that he has gone through the letter, saw the condition, that's why he didn't reply. Getting the point? So a low response rate, a very low non-response rate. Getting the point? The non-response rate is very, very less, which means high response rate from a third party. To all of them, you can send a negative format of confirmation. Remember, negative confirmation provides less persuasive evidence than positive confirmation. Accordingly, auditors shall not use negative confirmation as a sole substantive procedure. Sole substantive to address an assessed risk of MMS assertion unless all of the following are present. The risk is low, the items are small, the exception rate is less, and low chances of non-responses. This entire paragraph can be tested as an MCQ. It is end. It is end. All should be considered. Unless the following all present, don't use a negative confirmation request. The balance must be immaterial, risk must be low, the exception rate is low, the chances of non-response is very less. Only when all these characteristics present, we can use a negative confirmation. And remember, negative confirmation request provide less persuasive evidence. They'll give you a question like this. Negative confirmation request provides a less persuasive evidence than positive confirmation request. Comment. You need to write this answer. Are you all clear? Next. So what is exception? They have given definition here. Exception means what? It's a response from the third party. What it indicates? It indicates difference between what? Information requested to be confirmed by auditor, or this is contained in entity records, and information provided by confirming party. Whatever information confirming party provides, whatever auditor requested or contained in entity records, when there is a difference, we call it as exception, not misstatement. Are you all clear? That's it. The standard is over. SA 505. Now, here one more point that we need to understand is, what if management refuses? What if management refuses you to send a confirmation request? Why management is asking? Reason. Look at the implications. Okay, management is refusing. Okay, if I don't send confirmation, what is the implication on audit? What is the risk of fraud? What is the nature and timing and timing extent of alternative procedures? If I don't get evidence from one method, I'll try another method. So what is the additional time that it takes? Then, if alternative procedure is there, I'll perform alternative procedure. Suppose if management refusal is unreasonable and you're unable to get evidence alternatively, you communicate with top management and give a modified opinion as per SA 705. Getting it? Then, suppose third party replied and I have a doubt on the reliability of the third party. If I have a doubt, if auditor identified that give rise to doubt about reliability of response, please do further audit work to resolve this doubt. If auditor determines response to a confirmation is not reliable, identify what is its implication and try to get evidence from alternative. If alternative way is also not possible, ultimately you end up getting no evidence. Again, which opinion? Modified opinion. Getting it? Are you all clear? Now here, another question that may be asked. What are the factors that help in determining external confirmation procedure as substantive audit procedure? Which factors you will take into account while determining whether to use external confirmation or not? Here my question is, how to use external confirmation? No, that is not. Why should I use? Should I use this method or not? What factors I will consider? See, although external confirmation provide audit evidence, some assertions, they provide less relevant evidence. External confirmation provide less relevant evidence relating to recovery of account balances than they do for their existence. What do you mean by this? As on 31st March, what is outstanding amount? If third party confirms, I only get that money. I only get that evidence. But just because third party confirmed that as on 31st March 10,50,000 that is outstanding, does it mean that he will pay later? Do we get evidence about recoverability of a balance through external confirmation? No. We only get about existence. We only get evidence about the existence of transaction. External confirmation generally we get only for proving existence or occurrence of a transaction rather than valuation aspect. Able to understand? Then another example, confirmation request for bank balance often include request for information related to other financial statement decision. Like the auditor may determine external confirmation procedures for one purpose performed for one purpose, provide an opportunity to obtain evidence about the other matter. Like this is like, through external confirmation, based on the information given by third party, sometimes at very rare cases, we may get some additional information as well from the third party. We may very rare cases get additional information. Example, when we are communicating with one of the vendors like suppliers staff, the supplier staff may give us some additional inputs like that so-and-so employees involving in collusion, some sort of thing. Getting it? So if at all this kind of benefit is high, auditor may decide to use external confirmation. And confirming party's knowledge of the subject matter. Suppose to the third party whom I want to send confirmation, if I feel he is knowledgeable on the subject matter, what I am asking, okay, send a confirmation. Suppose the third party, whoever is about to confirm me, he doesn't have any idea on this, don't use this external confirmation because this is not an effective audit procedure. So when to use is also very important. The ability or willingness of the confirming party, that is another factor. How far the confirming party is willing to respond. Like generally, third parties, they will not respond to auditor directly. No sir, we are confidential, we have to maintain confidentiality. You might have faced the situation. No sir, we are auditors of this company, we don't leak this data. No, he's still not be willing. So because he don't want to accept responsibility, or he may consider too much of time to respond. And because of the potential legal liability resulting from confidentiality breach, all these doubts, getting it? And may account for transaction in different currencies. Maybe the transactions are in different currencies. In that case also, external confirmation will be little difficult to resolve. Getting it? The other party, if at all he doesn't have any idea about foreign currency transaction, and my client's third party is somewhere in foreign country. So these kind of issues will come. Then may operate in an environment where responding to confirmation is not significant aspect of day-to-day operations, or his environment do not support responding. Or confirming party may not respond, or may respond in a casual manner, or may attempt to restrict reliance placed on the response. So like you can't believe the response because they don't want to respond. The objectivity of the intending confirming party, how far the intending confirming party is independent in replying the information which I am asking for. All these factors plays an important role. Whether should I use external confirmation or not. 1. Reliability, independence of the confirming party. Willingness of the confirming party. Confirming party's knowledge of the subject matter. And how far external confirmation provide an opportunity to obtain evidence about other matters. Not only account balances. What about other matters? And how far external confirmation provide relevant evidence. Getting it? Only if I am asking about external confirmation regarding existence of account balance, then that is fine. I want to know recoverability. External confirmation may not be a suitable option. Getting it? So this is also a question that can be asked, and this is important topic also. Which is not given in CA final material. This is there in the application material, but since it is not given, see, for all this, institute book of CA final is asking you to refer CA inter book. Getting it? In CA inter book only all this was discussed in depth. It's not discussed in final book also. Even if you look at pronouncement main standard, this is not there. Only in the application material this content is there. Are you getting the point? If possible, what I'll give an advice is for everyone, better for these standards go follow CA inter book, because for final book do not have all this. Final book do not have entire this discussion. If possible, give a single reading at least, so that you will not feel something new when the question paper when you look at the question paper. These standards 501, 505, 510 and 560 also, 580. For these, please follow my CA inter book. Getting it? For these 5 standards, obviously these 5 are important. If possible, 250 also look at CA inter book once. So CA inter book, I told right where to download the material. There itself you will find November, applicable for November attempt book is there. So you will find the book in 3 parts. Part 1, Part 2, Part 3. Part 3 book will contain standards. Getting it? So there the standard is comprehensively given. At CA final, main standard, if you see, you will not find anything. Pronouncement inside that, some contents were important which are covered in CA inter, and there is a high chance that will be tested. Are you all clear? That's it. So with this, external confirmation is done. Next. Then initial audit engagement and opening balances. The next one is initial audit engagement and opening balances. Initial audit engagement and opening balance. I'll directly open this. Now, SA 510, initial audit engagement and opening balances. There are two important aspects. Totally three aspects are covered. In this standard, three aspects are covered. One, it is talking about predecessor audit report. One aspect is it is talking about predecessor audit report. Another aspect it is talking about is accounting policies. Another aspect it is talking about is opening balances. Opening balances. There are three aspects it is talking about. One, predecessor auditor. What opinion predecessor auditor gave in the previous year? Getting it? Previously, who is a predecessor auditor? Is an auditor appointed for conducting audit of prior period whom you replaced in the current year. You have replaced him. Last year he did audit. This year you are doing audit. So we call him as predecessor auditor. Now what is your duty here? Predecessor auditor might have given some opinion, right? Suppose if predecessor auditor has given a modified opinion, if he has given a modified opinion, look at the reason why he gave modified opinion. Look at the reason why he gave modified opinion and check the circumstances because of which he gave modified opinion. Those circumstances present in the current period as well. They are present in the current period as well. If so, are they material in the current period? Are they relevant in the current period? Are they affecting the financial statements of the current period? If so, give modified opinion. What is it? Give modified opinion. Further, in other matter paragraph, mention that previous year audit was performed by predecessor auditor and he gave modified opinion. What is the date of audit report? Just mention in the other matter paragraph. Clear? All of you. This is a requirement even as per SA 710. This is a requirement even as per SA 710. If previous year financials were audited by another auditor, we have to give that information in other matter paragraph. Are you all getting it? Next, accounting policies. What auditor has to check? Auditor has to check only one thing. Whether the accounting policy is reflecting in the opening balances. Whether the accounting policy is reflecting in the previous year. Were they consistently applied in the current year? Check it out. If not, if there are changes, how the changes were accounted? Are they accounted as per applicable financial reporting framework or not? You have to check it out. Suppose if the accounting policies are not consistently applied and the changes were not appropriately accounted and disclosed, auditors shall give modified opinion. Then, opening balances. Auditors shall obtain sufficient appropriate evidence that the opening balances are free from material misstatements. And you need to perform audit procedures in the current year, right? On the same ledgers, where there is opening balance is there, you will do some audit procedure. Did you got an evidence which contradicts with the opening balance? Did you got any evidence that contradicts with the opening balance? Means you got some evidence in the current year that reflects, that mentions, that indirectly gives you an idea that opening balance was materially misstated. Suppose opening balance of debtor, a particular customer account shows 10 lakh. But in the current year, we only received 8 lakh. In the April month, our subsequent payment was only 8 lakhs. When we inquired management why 2 lakhs was not received, when we inquired the third party customer, he only said 8 lakhs is correct, sir, not 10 lakhs. When we upon investigated, we discovered a material misstatement in our books of accounts in the last year, which was not identified by either us or maybe previous auditor. Now opening balance contains a material misstatement. What should we do? We should account it as a prior period item in the current year and rectify that. If at all the prior period item rectification and all was not performed by the company, we will give modified opinion. Getting the point? So we'll look at the theory. So first of all, what is an initial audit engagement? It is an audit engagement where prior period financials were not audited at all, or where the prior period financials are audited by previous auditor. Then it is called as initial audit engagement. In initial audit engagement, you are even more concerned about opening balances. Why? Because you are taking charge of the audit for that company now only. So in that case, opening balances is extremely important. At least last time you are the one who is doing audit. Current year you are also doing audit. You need not worry much about opening balances. Able to understand? So what is the opening balance? There is a definition for opening balance. Understand? Opening balance consists of, opening balances are nothing but the account balances which exist at the opening date, beginning. Opening balances are nothing but closing balances of prior period. They reflect transactions and events of prior period and accounting policies applied in prior period. Opening balances also include matters that require disclosure, nothing but whatever we disclosed as contingent liabilities in the balance sheet of profit and loss account or notes in the last year, they will also be treated as opening balances. Not only balance sheet item, even notes to accounts, whatever disclosures we are giving, that will also form part of definition of opening balance. Getting it? Now what is the audit procedure for opening balance? First, obtain whether opening balances contain material misstatements. How do you check this? Prior period closing balances will be there. No. Whether are they correctly brought forwarded or not, you have to check. And wherever adjustments were made, if at all, see whether they were shown as prior period item. And also see whether opening balance reflect application of accounting policies in the last year. Nothing but same accounting policies followed in the current year or not, check it out. And perform one or more of the following. This is sub point 1, this is sub point 2. After see, this is sub point. See whether audit procedures you are performing in current period. Are they giving any evidence relating to opening balance? What is meant by audit procedure performed during the year? That's what. Trade receivable, 10 lakhs balance is there in our books of accounts. Current year, we are verifying some sales purchases. We are also obtaining confirmation for trade receivables at the closing. Opening 10, closing 10 only there. What is a, why, what happened? You need to inquire. You may find it's a fictitious sale. Getting the point? Next, perform specific audit procedure to get an evidence on this. Like opening trial balance will compare with previous year balance sheet. Many of you would have done opening balance verification. You would have taken audited balance sheet and cross verified like this. Yes or no? That's what. And auditors should check consistency of accounting policies, see whether they are consistently applied. Now, what is the conclusion? If you conclude opening balance contain materially misstated and effect of the misstatement is not properly accounted or presented or disclosed, give a qualified or adverse opinion depending upon the severity. Or if you are unable to get evidence for opening balance, give disclaimer of opinion. Generally, when prior period financial statements were not audited, getting it, and it is creating highest, utmost difficulty on the part of the auditor to conduct audit, the auditor can withdraw from the engagement. If withdrawal is not possible, auditor will give disclaimer of opinion. And regarding consistency of accounting policies, suppose if the accounting policies are not consistently applied, no problem. However, changes in the accounting policies are not adequately presented, then give qualified or adverse opinion. What if predecessor auditor report contains a modified opinion? What is the reason? Just check it out. If the reason is relevant and material for current period, you also give modified opinion as per SA 705. That's it, SA 510. Clear? All of you. Next. Related, 1 minute. Related part, I'll come to that later. Yeah, please. No, if it is pervasive, the balances, obviously, when opening balances evidence is not there, if previous year audit is not conducted and people are asking us to conduct audit, it is better not to go with qualified option. It is better to go with the disclaimer. Or we should insist on the management that we will conduct audit from last year. First, close the last year audit, ensure that the opening balances are free from material misstatements, then continue with the current period audit. Getting it? We clearly mention. Sorry? Which one? See, that's what. If at all, opening balances were not audited, if prior period financials were not audited, if you decided to give a disclaimer of opinion, you directly give disclaimer, other matter paragraph and all will not come into picture. When auditor is giving disclaimer, he will not be using emphasis of matter para, other matter para, nothing. When you are not giving opinion, what is the use of any other para? What happened? Getting it? When we decided to give disclaimer of opinion, there is no point at all. Other matter para, emphasis of matter para, nothing we use. E-audit matter also we don't use. That's it. Only when you decided to give qualified opinion, then other matter para might come. See, other matter paragraph is given for flexibility purpose. It is not driving force. Getting it? That's it. Understood. Next, 550, I'll come back to that later. We will use 550 and 402 from notes. We will discuss it from the notes. I have a handwritten notes that we will discuss. I simplified the content of 550 and 402 as much as possible without missing the terminology. Next, 560, which is subsequent events. Which is subsequent events. The standard is not so popular because the circumstances given by this standard are extremely rare. First, we'll look at the definition of subsequent event as per auditing standard. Look, the subsequent event definition as per auditing standard, the subsequent events occurring after reporting period 10, India is 10, events occurring after reporting period 10, or accounting standard 4. Getting it? Events occurring after reporting date. Actually, India is 10 is what? Events occurring after the reporting period. They call it as reporting period. Whereas accounting standard 4 clearly says events occurring after balance sheet date. Now, according to the both, the definition of subsequent event is slightly different. Getting it? Now, what is India AS 10 or accounting standard 4 says regarding subsequent event? By the way, you're able to follow, all of you. Right. Because of the light, I couldn't see you all. Or else you can come and sit. Your choice. People can come and sit here, no issue. Yeah, you're flexible. Okay, your convenience. Now, accounting standard 4, nothing but accounting standard. What it says? Any events occurring after the balance sheet date, but on or before approval of financial statements. On or before approval of financial statements. Any events occurring after balance sheet date, let us assume balance sheet date is 31st March 2022, and on or before approval of the financial statements, on or before approval of financial statements, which is somewhere around 10th June 2022. So 10th June 2022, listed companies within 60 days, or else 10th May we will put. Listed companies within 60 days, they should approve and release the financials and file with SEBI. So let us assume 10th May. So any events happening between this, yes or no? Any events happening between this period, intervening period, we call it as subsequent event. And the accounting standard classifies this subsequent events into two types. Those for which conditions exist on the balance sheet date and those otherwise. Getting it? Where conditions do not exist. If conditions exist on balance sheet date, we call it as adjusting event. Otherwise, we call it as non-adjusting event. And you might have seen all that stuff in NDAs. Now look at auditing standard definition. Here they use the word balance sheet and here they use the word approval of financials. Now you see audit report, SA 560. Events occurring after date of financial statements. They use the word after the date of financial statements, but on or before date of auditor's report, and the definition is not yet over, and this is very important, this is the main part of the definition, and the fact came to the knowledge of auditor after date of auditor's report. The fact came to the knowledge of auditor after the date of auditor's report. This is the main problem. Getting it? This is the main issue. Now, what is date of financial statements? Nothing but the date on which the balance sheet is signed. Getting it? Nothing but the end of the reporting period. Actual definition, if you see, end of the reporting period, which is 31st March 2022. Now, date on or before date of auditor's report, they said. Now, what is the auditor's report date? What is the approval of financial statements date? In reality, we maintain the same dates. In reality, we maintain the same dates to avoid conflicts. What is the same date? 10th May 2022 only we will keep. Now, what is the date of audit report? Generally, as per the law, on or after approval. It can be on the date of approval of the financial statements or later date only we can use. We cannot use approval before date, because only when the financials are approved, on that only I should give audit report. But we, for the sake of convenience, for the sake of avoiding conflict, we keep the same date. Generally, we keep the same date. Now, here in the SA 560 also, subsequent event happened when after the date of audit balance sheet, but on or before the date of audit report, nothing but approval. Same date only happened. But what if regarding that event, auditor don't know at the time of doing audit, he doesn't know anything at the time of signing the audit report. After he signed and hand over the audit report, now he suddenly came to know about one subsequent event. Getting it? Let us assume here 10 events happened. Here 10 events happened. Getting it? Some 10 events happened. Out of which 8 events are adjusting events, or 8 events are adjusting and 2 are non-adjusting events. Getting it? Now, out of 8, 7 rectified by management already. On or before approval of financials, 7 adjusting events identified, accounted, properly presented and disclosed by management. One item they didn't discover. And even when I am doing audit also, I too did not discover that one item. But after I did the audit, now I discovered. What should I do? That is the question. And for this reason only this standard has came. Now, what if auditor identified any subsequent event which require adjustment in the financial statements but was not identified at the time of signing the audit report but was identified after signing the audit report? What auditor has to do? This is the question. Now, what the standard says? Okay, you have mentioned the date of audit report already and now suddenly you got to know. Now the standard is asking this question: is the audit report still with you? Is the audit report still with you? Yes. Which means the audit report is not hand over to the management. Generally what happens, I will hand over the audit report to the management and they will prepare annual report and distribute to all the people. They will distribute to all the people. Getting it? So if the audit report is still with me, what will I do? First I'll go and ask management, dear management, there's an adjusting event I found. You adjust on only 7, not 8. This is the 8th event adjusting. You didn't adjust the financials. Kindly adjust now. Management said, okay sir, true and fair view. That is what our ultimate priority. They adjusted everything. They prepared revised financial statements again. And they finally once again approved it. New date they mentioned, 20th May. Getting it? Revised approval. And I also give a new audit report. Old financials, my old audit report. Tear it and then close it. Throw it away. Not required. No need to document also. Are you getting the point? So I will give a new audit report with a new date. Are you clear? Suppose audit report is not with me. Audit report is already handed over to the management. And luckily, they have not distributed to public. They have not distributed to people. Date of issue of financial statements. What is it called as? Date of issue of financial statements. Suppose if I came to know about this subsequent event not adjusted after audit report, but before the financial statements are issued, then again I'll go to management. First I will explain the situation, discuss the management, see whether it requires adjustment, and if so, how management is going to address this issue. If management again same, positively responded, let's rectify everything, then take back your audit report, give a new audit report with a new date. Understood. Suppose the financial statements are already issued to the public. Suppose if the financial statements are already issued to the public, your audit report is also given to the public. You gave unmodified opinion. Financial statements contains a material misstatement because of ignoring a adjusting event. So because of that, financial statements contains a material misstatement. What you will do? First again, discuss with audit committee, discuss with those charged with governance, ask them how they are going to address this issue to all the people who are already received the existing financials and audit report which contains a material misstatement. Getting it? And see how are they going to address. Are they giving supplementary financial statements or supplementary information? Ask them. If at all management is not responding anything, people come for AGM. You also come for AGM. Read out at the AGM what happened exactly, the mistake. Actually, the standard will not give guidance on this. Standard will say the auditor shall take appropriate action. The standard actually says what? The auditor will take appropriate action. Suppose if management do not cooperate you, getting it, then also the standard says take appropriate action in the scenario. They don't actually give you the process. Maybe the application material might contain the process. In examination point of view, this much is not required. Are you clear? All of you, that's it. External event, this subsequent event definition is over. Now you see the definitions here. What is subsequent event? Whatever I have underlined here, that is most important in this. Next, what is the date of financials? It is the end of the latest period or reporting period. What is date of approval? Those who are having authority have asserted that they have taken responsibility for the financials. What is date of audit report? The date the auditor mentions in the report. And what is the date on which financials are issued? Date of issue of financial statements. It is the date that audit report and audited financials, everything are made available to third parties. Nothing but date of issue of annual report. Next. How do you auditor identify subsequent events? Generally, this is a general answer, which is not specific answer after audit report. Generally, how do auditor identify subsequent events? This is important question. Write about audit procedure for subsequent event. How do auditor identifies? Very simple. We first inquire the management. First, auditor shall identify subsequent event, which includes the following. These are actually sub-points. First, understand how management is identifying. Inquire management and top management. What are all the events they know? Look at new commitments, new borrowings. Look at any new assets, big transactions, and see whether any developments happened regarding contingencies for which condition already existed on balance sheet date. See any unusual accounting adjustments were made after the reporting period, and look at the minutes of the meetings. Look at the latest interim financials if at all already submitted. Already interim financials also came. Look at the interim financials. What not? You ask management, you talk to accountant. Getting it? Whatever 31st March balance sheet items were there, we will try to establish later evidences. How the trade payables were there. Are they subsequently paid? Trade receivables were there. Are they subsequently received? We will check until audit report date. Whatever information we have to check, we should check all that. So this is the audit procedure for subsequent event. Now, two cases. Facts came to the auditor after the date of audit report, but before the financials are issued. What is the procedure I just told? Facts became to the facts known to the auditor after the date of financial statements are issued. What procedure? They simply say auditor will take appropriate action. That's it. So with this, SA 560 is also over. Clear? All of you? Next, written representation. Written representation. I think I told for all these standards, please refer CA Inter book only. Better refer CA Inter. You need not refer pronouncements for them. No need at all. Getting it? One or two additional concepts might be there beyond what you studied. But believe me, they are very structured. You can understand very clearly when you're reading it with an idea of whatever I'm giving it to you now. Now, written representation. So what is the written representation? So can I take just 5 minutes? Yes. So let's continue with the next standard, that is written representation. What is this? Written representation. So first of all, what is a written representation? It is nothing but a written information or confirmation obtained by auditor from management. It's a written confirmation or additional information obtained by auditor from management to support his audit procedures, to support the evidence which he got. See, like suppose sales, whatever sales were made by the organization, are they accounted properly or not? I have gone through the entire selling process, billing process, accounting methodology, the controls, authorizations, some samples I have selected, vouchers I have verified, delivery challans I have seen, GST, e-way bills, everything I have gone through. But, and I conclude that, yeah, sales are reasonably accounted. Now I want a confirmation from the management explicitly that, generally, no, we will ask for some acknowledgement, no. Suppose I'm asking you while taking class, have you understood? And you are orally saying that yes. If I ask you to give me a written confirmation, then that's nothing but written representation. Getting it? Auditor, as part of audit, will naturally involve in so many discussions with management. Will naturally discuss so many important things with management. Wherever you feel it is important, there get a written representation, because that is also acting as an audit evidence. That is also an audit evidence. But remember, that cannot be treated as sufficient appropriate evidence. That is not sufficient. Why? Management is the one which prepared financials. They are the one who prepared entire books of accounts. Getting it? If at all you get management declaration and says everything is true and fair because management said it, what is the point of audit? What you are doing? So written representation can never be a substitute for audit procedure. Written representation can never be a substitute for sufficient appropriate audit evidence. Written representation is only corroborative in nature. It is only supportive in nature. It cannot replace main evidence. Able to understand? And when do we should get written representation? What is the requirement? When some other standard requires to you to obtain representation, get it. Example, we have seen today itself, SA 501. Completeness of pending litigations. At the last point, obtain written representation that the management has disclosed all the now pending litigations. SA 501 is asking you to get a representation, so you are getting. SA 570 is asking you to get a representation regarding management future plan of action and feasibility of those plans. Yes or no? So there are many standards which is asking you to, SA 550 is asking you to get a written representation that all the related party relationships and transactions were appropriately accounted and disclosed by the management. So when a standard is requiring, you have to take a representation, or wherever you feel necessary, you feel significant, you feel it is required, take a written representation. Are you getting it? Now in exam, how they can ask as a question? Written representation is treated as sufficient appropriate audit evidence. They'll give you a correct or incorrect question. Written representation definitely gives necessary information which auditor wants. However, they do not provide sufficient appropriate evidence on their own. Getting it? They're only supportive in nature. Like how you get response when you inquire the management, when you're asking questions, when you're talking to them, same way written representations are also similar to response, similar to audit evidence. Next, what should be the date and period covered by these representations? There is no point when you take representation after the date of audit report. You have to take representation, you have to get evidence before the date of audit report. We have seen written representation is also audit evidence, but it is not main evidence. It is only supportive. And we have seen in audit report SA 700, date of audit report concept. The auditor shall not date the report earlier than the date on which is obtaining sufficient appropriate evidence, which means written representation, which is also treated as audit evidence, shall be obtained on or before audit report date, but not later than that. Getting it? So written representation shall be for all the financial statements and period referred in the audit report, and it should not be later than the date of auditor's report. Getting it? Next, from whom you should get written representation. This is, this question can be asked. As part of audit, the auditor can get written representation when it is required by a standard, or when auditor requires it is necessary. Enumerate the circumstances or explain from whom the auditor can obtain written representation. This is an important question that can be asked. Written representation, the auditor shall require representation from management who are having responsibility for the financial statements and knowledge of the matter concerned. According to you, whom you think as part of management know that information, have that knowledge of the information, who is responsible for preparation of financial statements. From them only we generally get written representation. Those individuals may vary depending upon the governing structure of the entity. In some organization, board of directors, you may get written representation. In some organization, you may get a representation from finance manager on some issues. Getting it? So written representations therefore generally be received from CEO, CFO or other equivalent person in the entities that do not, or other equivalent persons like managing director, because in a company if MD is there, CEO will not be there if you check. If MD is there, CEO will not be there. Both are more or less similar designations. So a CEO need not be a director. MD means obviously a director. In some other situations, other parties, such as those charged with governance, nothing but audit committee, are also responsible for preparation. In that case, you will get written representation from audit committee. If there is no audit committee, then you will get written representation from board of directors. If there is a CEO, CFO like that, you will get written representation from them. Getting it? This is little advanced, it's not required also. This is not required also. Suppose if you are having doubts about reliability of representation, if you are having doubts about reliability of written representation, like you are unable to trust, getting it, then auditor should try to get evidence alternatively. If at all, if auditor completely concludes there is no alternative evidence, and the representations given by management are not at all reliable and they are giving wrong information, false information, you can give a modified opinion as per SA 705. See, when written representation is not reliable means management is not giving you proper audit information, When they are not giving you required information, it's a limitation on audit evidence. Limitation on audit evidence means SA 705, non-availability of sufficient appropriate evidence. So, modified opinion. Suppose management is not providing the requested information. Check once again the integrity of the management. Discuss why they are not providing. If possible, discuss with next level higher authority and take appropriate action as per SA 705. We generally give disclaimer of opinion when written representations are not provided. Next. Here there is one question like the auditor could not conclude that management has provided the auditor with relevant information agreed in terms of audit engagement without asking it whether and receiving such information has been provided. Comment. The auditor could not conclude that management has provided the auditor with all relevant information agreed in terms of audit engagement without asking it whether and receiving confirmation that such information has been provided. Like probably the sentence is trying to communicate the requested information is not provided. The requested information is not provided, or it will come under requested information is provided, but it is doubtful. Let's look at the answer. The auditor shall request management to report representation that it has fulfilled responsibility for preparation of financials. Audit evidence obtained during the audit that management had full responsibilities is not sufficient without obtaining confirmation from management about the same. Like what are they saying here is, SA 210 if you look at, there are something called responsibilities of management, or SA 200 is also talking about responsibilities of management. What are the management responsibilities? Management is responsible for preparation and presentation of financial statements. Management is responsible for design implementation of internal controls. Management is responsible to provide the auditor with whatever information asked for. Now, did they fulfill all these responsibilities? Only by asking them you can get it. Only by asking them, you can get it. Here, can auditor assume without asking for it that management fulfilled all the responsibilities? No, you can't assume like that. In order to know, in order to establish evidence that management has fulfilled their responsibilities, ask them whether they fulfilled responsibilities. Ask them to give written representation. So that is what this answer is. Getting it? Next. What are the circumstances where auditor will ask the management to reconfirm its acknowledgement and understanding of those responsibilities in written representation? This is the important keyword. This is important question, not the first one. This is important. What is this like? Suppose they gave written representation. They gave representation. You have gone through it. You are asking to reconfirm once again. In which scenario you will ask them to reconfirm once again? Generally, when we are doubtful about it, we will ask them to reconfirm. Or in significant risky areas, we will ask them to reconfirm. Look at those who signed the terms of audit engagement no longer have relevant responsibilities. Originally, when I am appointing as an auditor, the people who were part of audit committee were different. Later, by the time I am completing the audit, getting it, the people who are there as part of audit committee is different. So, in the entire financial reporting process, multiple people involved. Originally, I took a confirmation. Originally, I took a representation that audit committee fulfilled all the responsibility. Now, these are the new people who are there for the next 2 or 3 years. Now, whether do they fulfill all the responsibilities or not? Do they fulfill everything or not? Because people have changed. Once again, I will ask them to reconfirm. Getting it? Next, the terms of audit engagement were prepared in previous year. So maybe terms of engagement were changed. I can say here, how can I interpret this? Terms of engagement were changed. Or there is any indication that management misunderstood their responsibilities, then once again I'll ask them to reconfirm. This is similar answer for SEA 210. SEA 210, able to recollect? In SEA 210, we have when and all engagement letter should be issued once again. Similar answer you can write. Similar answer was there in SEA 210. And changes in circumstances making it appropriate to do so. Here simultaneously you should also issue engagement letter once again so that management is not under confusion. Same situation were given in SEA 210. Yes or no? That's it. So with this, representation standard is over. So we have completed in the second session of this, like what are all we completed? 510, 505, 510, 560 and 580. That's it. For these standards, please refer this CA interval because this is covering comprehensively the discussion. Next, 550. Next, I'll discuss 550. Here, handwritten notes is given for you. .550 and 400 I'll discuss from this. You can download this in same application. In the same application you can download. Okay, handwritten notes like that clearly mentioned. Now 550 you see, actually this 550 in our original class we discussed directly from pronouncement book. We directly discussed from pronouncement book. I have even given para numbers of the pronouncement book here for your reference. In these notes, I have even given para numbers for your reference. So, okay, for revision, this note is enough. Even for in examination also, this note is enough. Getting it? Now, first of all, what is this SA 550 talking about? Related parties. Now, what is the standard objective? There are two objectives under this standard. First of all, what this standard exactly talks about? SA 550, what it is asking you to, what is the requirement of the standard from the auditor? One requirement is whether the financial statements are in compliance with applicable financial reporting framework in relation to identification of related party relationships and transactions. RPRT means what? Related party relationships and transactions. Whether are you identifying all the related parties? Are you accounting all the transactions with related parties? Are you giving proper disclosure related to related parties? This is what accounting standard requirement also. But in audit, that is not the only requirement we check. We need to mainly focus on fraud risk factors. What we need to mainly focus on? Fraud risk factors to recognize whether any fraud risk factors may cause a risk of material misstatement in related party relationships and transactions. In CA Into in 240, fraudulent financial reporting opportunities. In fraudulent financial reporting, what are the opportunities that are there for the organization to do manipulation of accounts? One of these sources is related party transactions. Related party transactions. By entering into complex related party transactions, company can manipulate their financial performance and financial position. That's how many companies are doing and obtaining loans. They are showing a manipulative figure. They are showing higher sales, but the sale is made to their allied entity, their associate or subsidiary company. Getting it? That company sells to somebody. This company sells to somebody. Getting it? Binami companies will be there. Like there is no holding subsidiary, but this company only will fund them. Getting it? To create a pile of transactions, to create a pool of transactions and show to the bankers and financial institutions and get huge amount of loans. Auditor has to identify whether the related parties, relationships and transactions is used as a medium for doing fraud. So exclusively from fraud reporting point of view, we will check and conclude whether the financial statements are true and fair in relation to related party relationships and transactions. Now first of all, we understood the objective. Now first of all, what do you mean by a related party? What is meant by related party as per standard on auditing 550? Take the definition given in the applicable framework. Suppose you are following Ind AS. If Ind AS is having a definition for related parties, if there is a separate standard and given a definition, take the definition. You are following accounting standard, 18 is there, take the definition. Getting the point? Suppose if the financial reporting framework contains minimal requirement or no requirement, this is a very rare case. This kind of frameworks were not there anywhere. If at all framework is silent about related parties, then take the auditing standard definition. The auditing standard definition of related parties applicable when the financial reporting framework is silent about related parties. Is there any framework which is silent in India? Ind AS is having related party discussion very much in depth. Previous accounting standard is having very much in depth. Even international accounting standards are having in depth discussion. IFRS is having in depth discussion on related party. There is no framework, to best of my knowledge, that is silent about related parties. If at all framework is silent, then related party relationship transaction means what? The following persons are treated as related. Those who are having controls over my client. Reporting entity means what? My client. Those who are having control, those who are having significant influence on my client, or my client having control or significant influence on anybody else. Which means nothing but somebody is investing in my company, they are related party. I am investing in another company, they are related party to me. Able to understand? And entities that are under common control, me and another company have common parent company, then we are treated as related party. And important note, exception to common control, there is one exception. Entities which are under common control of state, they are not treated as related party unless significant transactions and resources are exchanged. Unless significant transactions and resources are exchanged between them. What is meant by this? You see, Bharat Petroleum Corporation, Indian Oil Corporation, HPCL, ITC, ONGC, Coal India Limited, BHEL, BSNL, MTNL, many government companies, who is the owner? Central government. Now all these companies are under common control, right? Now, does every government company, we have seen in the previous compliance audit report, 680 central public sector enterprises. How many? 680 plus were there. Round figure 700. There are 700 central government owned public companies. Now, each public company should show about the remaining 699 companies as related party just because they are under common control of central government? No. That is what this point. This question has been asked as correct or incorrect. Entities that are under common control of a state are treated as related parties. Incorrect. Getting it? Generally, as per the related party, if applicable financial reporting framework establishes a very minimum framework on related party or no discussion on related party, then related party refers to the entities that are under common control. However, the entities which are under common control of a state, what do you mean by state? State refers to government, state government or union territory. If at all they are under common control of a state, getting it? They are not treated as related parties. This is a very important definition for true or false. Now, first of all, then, see, generally, why do we verify related party transactions? In order to check whether the transactions are happening at arm's length price. What is an arm's length price? A price at which transaction is conducted between willing seller, willing buyer who are unrelated, independent, both are aiming for their own personal interest. Getting it? Then that is called as arm's length price. Remember, arm's length price is different from MRP. Arm's length price is different from market price. Getting it? Arm's length price refers to if I buy one shampoo packet, I may get it at 2 rupees as per the MRP. If I buy 10 shampoo packets, 20 rupees is MRP, but I will be sold at 19 rupees. But if I buy 100 shampoo packets, MRP total is 200 rupees, but I will be sold at 180 rupees. If I buy 1000 shampoo packet, MRP is 2000 rupees, but I will be sold at 1500 only. In first case, when I buy one packet, the packet unit price is 2 rupees. Second time when I buy, 1 rupee 90 paise. Third time when I buy, 1 rupee 80 paise unit price. Fourth time when I buy for 1000 quantity, unit paise is 1 rupee 50 paise. Now which is right market price? All of them are right. They are at arm's length price. They are taking into account the commercial size of the transaction. Arm's length price is something that considers commercial size of the transaction. I hope you might have done transfer pricing works. In transfer pricing work, you will compare similar company means same size of operations. You will not compare a small company, you will not compare higher company. A higher company is offering selling at so and so price. Why you are selling at higher price? Price is different. Is there any such kind of thing? No. Next, what audit procedure? First, you have to understand who are all the related parties. What are all the transactions that the company did? Like first, who are the related parties identified by the organization? And what are the changes compared to the last year? What are the changes compared to the last year? Now, what is the nature of relationship, holding, subsidiary, associate, what? And any transactions entered? If so, what is the type of the transaction, loan given, purpose of them? Getting what is the purpose of the transaction? All that. Next. Now, auditor must be alert when documenting, when reviewing records. You especially have to record investment register of the company, share capital register of the company, members registers to identify related party. Inspect the following: bank, legal, third party confirmation, minutes, various other records. Getting it? So inspect the following to identify previously not identified by the management of what? Related party. So you need to, whatever management give a declaration, management give representation that these are the related parties, these are the transactions. Don't directly take it as final. Maybe management has not identified some related parties. Management has not disclosed some transactions. Who knows? Management itself sometimes doesn't know. Are you getting it? Next. If auditor identified any transactions outside normal course, if at all there is a transaction that happened at a significantly higher price or significantly lower price, or the transaction happened at a significantly different quantity, then what is the nature of transaction? With whom? Is related party involved? Check it out. If any unusual, non-recurring, exceptional transactions was carried out, check whether related parties involved. This is the audit procedure, ma. This is audit procedure. They may ask you, write about audit procedures for understanding related party relationships and transactions. You see, I have given everywhere the paragraph reference. Objective is discussed in paragraph 9. Getting it? Now, whatever audit procedure is discussed in paragraph 13 of the standard, this is there in paragraph 15 and 16 of the standard. Then, suppose if you identify in the process of doing that audit procedure, you are going through bank statements, you are going through payments, you are going through confirmations, you suddenly identified some previously unidentified related parties, you identified some new relations, you identified some new transaction. What you have to do? Communicate to the other members of the engagement team. Request management to identify all. Dear management, your internal control is not proper. Your systems have not identified all the related parties. Once again, do an investigation of all the related parties and why management failed to identify the related party which I identified. And perform substantive procedures on newly identified related party, like what transactions happened with them, vouch it, and ask the management to disclose them in financials. Suppose if you find any related party transaction outside normal course of business, nothing but other than at arm's length price. If related party transaction was conducted at not at arm's length price, but unusually the transaction took place. Getting it? If what is the business rationale? What is the necessity to do the transaction? And what are the terms of the transaction? And have they disclosed them as per applicable framework? Finally, get a written representation. That's it. Getting it? So this is the entire standard. This is the entire standard. Entire 550 has been produced here. So let's start with the analytical procedures. What is this analytical procedure exactly? First of all, this analytical procedure you will come across at two places. In the audit subject, you will come across mainly the analytical procedure introduction at two places. First of all, what are broad audit procedures? Risk assessment procedure, further audit procedure. You see, we have another question on what are various audit procedures through which you can obtain evidence. Inquiry, inspection, observation, confirmation, recalculation, reperformance, analytical, all these are cumulatively applied, not one is to, like, it's not, they are not substitutes, understand. There also they use the same word audit procedure, here also they use the same word audit procedure. What are various audit procedures to obtain sufficient and appropriate audit evidence? If the question is regarding evidence context, then you need to write that inquiry, observation, inspection, all that. Getting the point? What are the broad audit procedures? Getting it? Generally, this question they will not ask. They may either ask risk assessment procedure, or they may either ask write about test of controls, nature of test of controls, timing of test of controls, extent of test of controls. Can we use evidence obtained in previous audit related to test of controls? Like this they'll ask. Or they'll ask you about write about substantive procedures, write about substantive procedures related to financial statements closing process, write about substantive procedure as a response to a significant risk. Like this they'll ask a question. Getting it? They will not ask you to write what are all full audit procedures. They'll not ask. Understood or not? All of you? But this context can be tested in correct or incorrect questions. There when you are reading the question itself, you will understand it is about this, not about inquiry inspection. Or if at all they tested correct or incorrect portion in that context, you will clearly understand. Able to understand. Now, what risk assessment procedure includes? What risk assessment procedure includes? What is risk assessment procedure? Definition is different. So here I'll give you risk assessment chapter overview. So what is risk assessment? I told you about an example. You are identifying the risk. And not only identifying the risk, you are quantifying it. You are assessing the risk. Is it a high risk or medium risk or low risk? Is it a significant risk or insignificant risk? You are assessing the risk. You are identifying and assessing what risk? Risk of. Which risk you are worried about? My risk is, if the financials are materially misstated and I have not discovered them, my opinion will go wrong. So this risk only you are concerned with. You are not concerned with any other business risk. You are not concerned with operational risk. You are not concerned with regulatory risk. Correct? So we are concerned with which type of risk? Only the risk of MMS. So identifying and assessing risk of possibilities for material misstatements through understanding the entity and its environment, including internal control. This is the definition of risk assessment procedure. And auditor shall identify risk at two levels. One is financial statement level, another one is assertion level. Now, when I'm looking at the entire company control environment, I'm looking at the entire company governance. There if I find some problems, there if I find some lapses, the top management of the company do not have integrity. The top management of the company do not have commitment towards proper maintenance of records. This indicates risk not only in one or two aspects, but this indicates risk in every aspect. Suppose if production manager is not a good person, is having malified intention. Production manager is he's having so many pressures on him, so he might do a fraud. Now that will affect what? Maximum production records. That's a risk of production record. Company CEO himself is having this kind. Now where he will do fraud? Everywhere. Able to understand? Top management, those charged with governance integrity, that's a financial statement level risk. In fact, this is also called as pervasive level risk. What is this is also called as? Pervasive level risk. Suppose a production department there is some problem, or inventory there is some issue, cashier there is some issue. Getting it? Sales team there is some issue. In vendors we have some issue. These risks are what? Assertion level risk. Because if something goes wrong there, only that particular assertion will affect. Only that inventory will affect. Only the debtor balance will affect. Correct? Sometimes multiple assertions risk together will evolve into financial statement level risk. So, see here, auditor will not identify risk at two levels. Whatever risk I identified, I will classify them at two levels. You know, when we find something called financial statement level risk, we will not continue with audit. What we will do? We will withdraw. Getting it? We will withdraw. When auditor finds financial statement level risk, he will definitely cannot continue the audit, because when the risk is at entire financial statements, how can I proceed with audit? Because the management, the accounting records completely become unreliable. The moment financial statement level risk is there, the financial statements prepared by management itself will become questionable. So naturally, I cannot be doing audit. I cannot do audit with that kind of mindset. You know, skepticism, auditor need not doubt the management. But when he find a circumstance, be alert. That is what skepticism says. Skepticism means what? Be alert. Maintain that alertness. Be cautious. Be careful. Act diligently, carefully. But it is not saying question everything, whatever management is doing. Be doubtful about the management. Don't trust the management. They are dishonest people. No. With this attitude, don't start the audit. But if you discover such a kind of attitude, if you discover that the management may manipulate every record, obviously with that kind of doubt, you cannot do the audit. Understood? So most of the risk that we find in our real life is assertion level risk. Assertion level risk means what? We discussed risk assessment example. Laborers, casual laborers. So here in employee wages payment, they may do a fraud. Assertion level risk. In inventory, scrap related fraud they can do. Assertion level risk. Now we need to design our audit procedures. We need to, design and implement, or we need to plan our nature, timing, extent of audit procedure to address these risks. Able to understand? This is called response to the risk. Are you getting the point? Now they may ask you, what is the auditor's response to a significant risk? That's a question given in the, SA 330. How auditor will respond in case if we identified significant risk. You see in the documentation evidence chapter part 3 you will find. That is the controls related discussion, audit procedures. So auditor should generally get external confirmation. Whenever there is a significant risk, wherever possible, auditor should get external confirmation. That's what the main agenda. Are you clear? So this is what there in the risk assessment process. Now how do you identify the risk? Including internal control. You will test the control. I clearly explain how test of controls happen. How test of controls will happen, I clearly explain. And so when an auditor will be testing the control, remember, controls means what? It means a process. It means a process. At the end of the day, the door will be closed. At the end of the day, campus main entrance door will be closed and locked. It's a process. It's a control. Why? To protect these assets. Safeguarding of assets. Have you seen that objective? Internal control, what are the objectives? 5 objectives. Protect the safeguarding of assets. Increasing efficiency and effectiveness of operations. Why we are fixing timings? In order to increase efficiency and effectiveness of the ultimate operations that we are taking up. Able to understand? Ensuring that the financial statements are reliable. And by implementing all this, you are preventing frauds and errors. Or by installing the CCTV cameras, whatever, you are able to detect if any frauds went wrong. Correct? Huh? And any process that you design in order to comply with law and regulation, those are also form part of internal control objectives. 5 objectives. Yes or no? Reliability of financial statements or reliability of financial reporting. Prevention and detection of fraud and error. Efficiency and effectiveness of operations. Then safeguarding of assets. Compliance with laws and regulations. These are the objectives of internal controls. Now you have these internal controls 3 types. Internal controls based on where they were implemented, how they were implemented, 3 types. Operating controls, compliance controls, financial controls. We don't have discussion much in depth on operating controls and compliance controls. That's again a very big subject. We have a discussion on financial controls. What are IFC? What are objectives of ISC? Now here we discussed 5 objectives. No? In that, efficiency, effectiveness of operations is there. No, remove that. Because operations will be taken care by which controls? Remaining all 4 objectives will come under financial control objectives. That's why you see financial controls will have 4 items only, which are part of IEC objective. Understood or not? All of you. Now, internal control based on nature, they are again 3 types. Preventive control, detective control, corrective control. Controls, there are processes which will prevent first fraud. If any fraud happened, management would have implemented some process to detect the frauds. Once the fraud is detected, how to correct it? They'll have a corrective mechanism. Like, complaining with policies and recovery actions, all this. These are all corrective controls. Understood. Now, these controls, even though management is implementing, ultimately, these processes are something who will implement? Human beings. They may prone to mistakes. Even though the control is highly effective, the humans will do. Who will implement the control may do a mistake. Yes or no? Human judgment is involved. These are all limitations in the control. Which means no matter how organization implemented the control, there are some inherent limitations. Internal controls will only give reasonable assurance about the objectives of the entity. Not only auditor, even management has implemented so many processes, right? Those processes will only give reasonable assurance about achievement of entity's objective. Understood? This is what there in that entire chapter. So how we do risk assessment? What is risk assessment? What are all the factors to be considered? What is significant risk? Getting the point? Now what is internal control? What are limitations in the control? What are the components of internal control? Components of internal control, the topic is there even in your information technology. There are five components. It's a COSO model. Yes or no? Exactly the same model is what followed in audit. COSO model. In final, we have a chapter called risk assessment. There we will discuss COSO model, COBIT model, COCO model. There are various other models. Able to understand? So this is regarding the risk assessment and internal control chapter, which exactly deals with. But I'm telling you sincerely, don't always try to study 100%. At least keep 20% buffer. Ignore. Keep it at last. Only if you study rest 80%, 100% perfectly. Yes, I am the best in this entire 80%. Then only go to the remaining 20%. Rather than attempting 100, 110 marks, averagely and securing 20, it is better to attempt for 70 and secure 50. And easy also. Attempting for 70 and securing 50 is quite easy. That's called efficiency. Getting it? Nowadays you see, hey, it's okay, let me write one answer. Something I'll write, at least half mark they'll put. They'll not. Getting it? They'll see the suggested answer or they'll see scheme of valuation instructions and they'll check your answer and he will clearly identify that you put some story. Getting it? So this is not a university exam where if you fill the paper, you will get the mark. Are you clear? Now, so once again, analytical procedure we are discussing. Okay. So what is there in the analytical procedure? What are various audit procedure? Risk assessment procedure, further audit procedure. Now what is risk assessment procedure? Risk assessment chapter is what clearly explaining. Now I just told you brief. Now what this risk assessment procedure includes? It includes inquiry and inspection, observation, analytical procedure. These 3. Risk assessment procedure includes what? They'll ask you this question. What is risk assessment procedure? Definition. What risk assessment procedure includes? It includes inquiry and inspection. The matter is different. You will find this matter in risk assessment. You inquire management, you inquire audit committee, you inquire internal auditors, you inquire so and so, you inspect minutes of the meetings. Through this you will understand what are all the risks the company is facing. Observation. Look at the process, how everything is happening. Look at the inventory go down. Look at the factory. Next, analytical procedure. Apply logics. Now I told you yesterday, in the previous session also, when we visited the warehouse, when I saw in one of the big room, scrap is kept. Immediately I got a logical doubt. what registers in respect of scrap they are maintaining. And management replied, for every sale we are recording. What about input? What about inflow? Sorry sir, we don't maintain any record for generation. Record for generation, inward, no records were there. Only sale related records were there. Now, I found the risk, no? How did I find the risk here? By analytically thinking about scrap. Able to understand. Immediately, I applied analytical calculation. I roughly brought production records. Okay. How much inflow totally during the year? Production. Multiplied by what is the normal loss percentage or abnormal loss percentage? Applied. This much is the total scrap generated during the year. I applied ratio analysis technique. This much scrap is what generated during the year. And this much you are mentioning as sold. And how much is there inside the godown? Check it out. Sales value plus closing stock value is equal to generated stock value. Correct? I saw it is not matching. Now, I did analytical calculation, right? That will come under substantive analytical procedure. Right now, whatever I did will come under substantive analytical procedure. Substantive analytical procedure means I will take actual data, on that I will apply analytical calculations. Understood or not? So the word analytical procedure is very broad. Analytical procedure in the context of risk is different from the analytical procedure in the context of substantive procedure is different. That's why if you see here, the word clearly used is substantive analytical procedure. Many will ask me, what's the difference between analytical procedure, substantive analytical? Not this. If at all student ask me this, I will be very happy. My God, student is thinking very good. But student will ask me difference between these two. What is the difference between substantive procedure, substantive analytical? This doubt, who will ask, who did not understand anything about audit? Now what I feel, when I get this kind of doubt, I will not clarify, because if I clarify them, they'll ask another doubt. Substantive procedure means it's completely actual transactions, details and analytical. That's what I'll test. Now immediate second question. Sir, what do you mean by actual transaction testing? If I tell them purchases, loss, P&L, all the testing, again they'll ask one more doubt. So that understanding as a whole is important. Now you understood this, the gap. So analytical procedure word will come as part of risk assessment. The word will come as part of substantive. But under substantive procedure, we will not simply call it as analytical. We will call it as substantive analytical procedure. First what I will do, scrap related sales verification I will do. Scrap sales I will do. Test of details. I will verify that. Getting it? Then I discovered, see whatever records are available related to scrap sales, test of details. I did that. That is also substantive procedure only, correct? But is it analytical procedure? Scrap sales were there, invoices were given, sale invoices were given, GST calculations, everything was there. How much was sold, how much was delivered, what is the amount mentioned in GST returns, all that I verified. This is what actual details I am testing. That is called as what? Test of details. But when I saw ultimately after testing all this, I got this doubt. What about input production records? That is not there. Now how much you sold? How much you generated? There might be some fraud. Yes or no? Then I applied logical calculations based on actual records. That is called substantive analytical. Substantive means reality. Getting the point? Underlying substance. Getting it? On that actual data, if I apply analytical procedure, and that is called as substantive analytical procedure. Analytical procedure as part of risk assessment is something that we generally do as beginning of the audit. Generally we do risk assessment at beginning. But remember, risk assessment is not one-time process. It's a continuous process. You have to be continuously alerted to identify new risk. It is not one-time activity. Today I will do risk assessment. Or tomorrow even if I find new risk, no. Yesterday it's over. Can I say that? So it's a risk assessment is a continuous process. Audit planning is a continuous process. Have you seen like this the sentence? Audit planning is a continuous process. It is not a discrete phase of an audit. Rather a continuous and iterative process. You might have seen. Iterative means what? Repetitive. Are you clear? Next. So this is where we generally come across analytical procedure. Now what exactly in analytical procedure I will do. You know, if we did risk assessment, no? That is something similar to analytical only. That is something similar to analytical procedure only. Fine, anyhow, let me take even more better example. Scrap example I told just. How do I find total scrap generated? Records not there. Okay, let it be. But production records there, no? How much raw material entered into the production, that is there, no? Correct? You may get it out. Sir, what if company did not maintain that as well? That means cost records they didn't maintain properly. You will qualify in CARO report. Are you getting the point? Okay. So, production records will be there. Take production inflow of raw material multiplied by normal loss percentage, abnormal loss percentage, scrap generated during the year. Now, what is the value applied? You will get some value. 15 crore is the value of the scrap generated. How much is sold? 10 crore. So, in the godown 5 crores there, no? We went and physically verified. Only 2 crore is there. What happened to 3 crore? I will have to investigate. Okay. I will have to investigate about what happened to 3 crores. I will immediately talk to the top management. Sir, based on our analytical procedure, we discovered 3 crore deficit in the stock. So what is your explanation? He asked me what is my basis. You are saying 3 crore difference, sir. I agree. Okay. On what basis you are saying 3 crore? I showed my normal loss workings, all that. Then the director replied me, the company main director replied me, sir, normal loss is not that percentage, sir. It's lower percentage. We have implemented new machineries and all very recently. The normal loss percent has substantially came down. So now it is not that much. You might have given a wrong data by our production manager. He is not familiar with all this. He is only good at production, not good at records. Then I asked him, what is the proof for what you are saying? He showed me all the proofs. Then again I took revised values and I discovered that the total value is 12 crore 50 lakhs. Now what is visible? 10 crore is sold, 2 crore stock is visible, 50 lakhs difference is there, which is an estimation difference. In estimate, some difference might come now up to 5-10% difference is acceptable. Correct? If it is more than that, it is unusual difference. It is something unusual difference. If it is unusual difference, what I did right now? Investigated. Now look at the analytical procedure definition. Analytical procedure means what? Analytical procedure means evaluation of financial information through analysis of relationships among both financial and non-financial data. And what is the purpose of analytical procedure? There is a question here. What is the purpose of analytical procedure? Analytical procedures may help identify unusual transactions, unusual events, unusual amounts, unusual ratios that might indicate matters that have audit implications. What is this? Now, what I exactly did here, since they are saying records were not maintained, I did analytical procedure. I analytically calculated what is the stock generated. Correct? Based on that, how much is sold, how much is lying, I eliminated. I found 3 crores difference, which is not usual, which is unusual. Able to understand. When I find 3 crore difference, what I do? When auditor finds difference in analytical procedure, how do auditor investigate? We have a question on that. Investigating analytical procedure. If auditor identifies fluctuations that are inconsistent with the expected value, I expected totally 15 crore. Company showed only 12 crore. 3 crore is difference. Expected value, there is a difference of how much? 3 crore by significant amount. Then auditor shall investigate by inquiring management. I inquired management in our example. I went to director and asked him why 3 crore difference. There is a fraud. Immediately what director replied? No sir, some percentage has been changed. You have taken some wrong percentage. Something he replied. Whatever he replied, did I keep quiet? I asked him proof. I verified that additional proofs. Yes or no? Performing additional audit procedures. This question itself has been asked for 4 marks previously. Write about investigation of analytical procedures. Investigating results of analytical procedure. Understood or not? All of you. So analytical procedure means nothing but we always have some estimation. Analytically, logically we will see. For a debtor, some particular account, very simple. You know how we do analytical procedure. You might have understood previous year, current year analysis, comparative analysis, yes or no? I am looking at balance sheet P&L. I am looking at balance sheet P&L. So there are some sales. So 10 crore, last year 8 crore. Some other income, current year 2 crore, last year 1.5 crore. So this is the totals. Then expenditure, last year 9 crore, current year 9 crore, last year 7 crore. Getting it? Operating expenses, last year 5 crore, current year 12 crore. So likewise I am finding. Now tell me, between all this, which you feel unusual? Between these amounts, current year, last year, where you felt the difference is too heavy? Exactly. Now this is called unusual difference. Now say, okay, this is in a pattern. Okay, generally sales have been increased, other income is increased, purchases also increased because there is an increase in sales. So naturally production would have been increased. I understand. But why operating expenses increased so almost more than double? Suppose last year if it is 5 crore and current year if it is 7 crore, I may be not having any doubt. But last year 5, current year it is 12. Unusual difference. Yes or no? Now when I find this, I investigated. Okay, what is this 12 crore consist of? They gave me breakup. Okay, like auditors remuneration, electricity expenses, fuel expenses, telephone expenses, repairs and maintenance expenditure. Now repairs and maintenance expenditure, last year it was 1 crore, current year it was 7 crore. Remaining all are more or less similar. Remaining are more or less 20-30% similar. But this is huge. 500% difference. Last year 1 crore, now current year 7 crore. How come? So now again I verified what is the breakup for 7 crore. What is the breakup for 7 crore? So what is the breakup for 7 crore? I verified. Okay, like for January, April month, May month, June month, July month, August, likewise month wise breakup I asked. In all the months it is 10 lakhs, 15 lakhs, 12 lakhs, likewise. But somewhere in September month, it was around 5.5 crore. Which means, which month I will pick out? September month. Something is wrong with September month. I opened it. And I saw date wise. On one particular date, September 14th, example. Getting it? Some 5 crore was debited. What is this 5 crore I saw? It's actually a spare part has been purchased. For a machine, a spare part has been purchased. What is this spare part accounting treatment? If it is integral part of the asset, it has more than 1 year life, or it has minimum life of the asset. We will have to capitalize and depreciate. Or if spare part has a separate useful life, and that can be used even without the asset, then we will separately mention it. Correct? So this is actually a capital expenditure. But how the company charge it to? Where they have charged it to? P&L account they charge it to. Now how I found the difference? By doing inter-period analysis. Getting it? Nothing but analytical procedure. Suppose, traditionally what I will do, I will take 100 samples. Expenses also I will take 100 samples. If this error came in my sample, I will discover. But if my sample does not cover this item, this expenditure item I did not see in the sample, I will feel every expenditure processed, signature is there, payment made correctly, TDS deducted, GST, everything is correctly accounted, super. But only when I apply logical analysis to the amounts, I will discover something is wrong. And this is most important procedure in audit. What is most important in audit is not everyone that we discuss. This is most important in audit. You need to look at the amounts logically. Getting it? There is a movie, Tani or One. Read between the lines. Have you seen that? Yes or no? So you must read between the amounts. So why that there is a difference? Last year this much, current year this much. Why? Sales are this much. Why purchases was low? Why employee cost was high? Last year employee cost was some 15 crore. Current year employee cost was 25 crore. Last year income 100 crore. Current year income 120 crore. Turnover. There is only 20% increase in turnover, but why employee cost has increased almost by 60%? Understood my question? Company operations have increased only by 20%. But why employee cost was increased by almost 60%? On 15, if I apply 60%, 9 crore. 9 plus 15 approximately 24 to 25. Correct? Last year turnover is this much. Current year is only by 20% increase. But why suddenly employee cost increased? Some fraud might have been there in the HR. Some money laundering transaction might be there. So what happened? I asked management, sir, last year, current year, we have declared 50% increment, sir, for every employee. Because of which there is a huge hike in the salary when the increment was declared. Is it declared at the beginning of the year? Is it declared at the end of the year? If it is declared at the end of the year, how come salary will increase? It will increase in the next year, not in the current year. I will question in all these logical dimensions. Every question I want logical, every amount in the balance sheet, every amount in the P&L, I want to understand logically is it correct or not. Okay, vouchers were there, amounts was paid, that is okay, fine. But logically, are they seeming correct or not? Only when I apply analytical procedure, I will discover frauds. If we do not apply analytical procedure, we will not identify unusual transactions. Understood or not? All of you? That's it. So with this introduction, we can start with analytical procedure. So analytical procedures encompass means what? Covers investigation that is necessary for fluctuations, relationships that are inconsistent. What do you mean by relationships that is inconsistent? Turnover increased only by 20%. Why employee cost increased by 70%? Understood or not? The relationship between turnover and employee cost is similar, no? Especially in a service industry, employee cost will directly reflect turnover. Able to understand? With other information, or it is differing from expected value by a significant amount. If auditor identified fluctuations or relationships which are inconsistent with other relevant information, or the relationship is differing, the fluctuation is differing from expected value by a significant amount. Understood? For each term, the example I gave. Clear? Now, what is the objective of audit procedure? Ultimately, we want to obtain evidence through analytical procedure. So, we will design and perform near the end of the audit, which help the auditor when forming overall conclusion as to whether financial statements are consistent with the auditor's understanding of the entity. Now I look at logically how to understand this organization, whether whatever amounts I verified are the matching with logicality of my understanding. So that is what the objective of analytical. Remember, we will not only do at the end of the audit, we will be doing throughout the audit, analytical procedure. Now, what in analytical procedure we will check? We will compare prior period data. We will also compare the existing data with anticipated data. We will compare with similar company data. Yes or no? So what are all the examples of analytical procedures having consideration of relationships? Like they have given few examples. Like non-financial information, financial information. Like number of employees, payroll cost to turnover. That is one relationship. Okay. So among elements of financial that would be expected to conform to a predictable pattern based on entity's experience, such as gross margin percentage. Like every year you can predict how much company will grow. Getting it? So that is expected value. Now actual growth rate is actual sales value have not grown by expected values. So I will naturally focus on that differences. Understood or not? Next. So thus analytical procedures may be segregated into client and industry data comparison, prior period data comparison, client versus actual versus budgeted comparison, an auditor determined expected results. Client data with auditor expectations, and client data with expected results using non-financial data. So this can be asked. What analytical procedure includes? What kinds of comparisons analytical procedures we will do? You need to write all these points. 4 marks question. Understood or not? What is the purpose of analytical procedure? We want to use comparisons. We use relationships to assess whether account balance, other data appear reasonable. I used a comparison of last year, current year. I found repairs and maintenance appears not reasonable. Are last year 1 crore, why this year 7 crore? It's unreasonable. Yes or no? These helpful in detection of unusual affairs and mistakes in the accounts. Correct? Through that repairs and maintenance example, I discovered how I discovered a capital expenditure is debited to P&L. Next. Like examples I've given, establishing relationship that exists between certain balances included in balance sheet and statement of P&L and comparing them with those existed in the previous year. Repairs and maintenance I compared with last year. Reconciling physical balance of assets with relevant data. Obtaining statements from banks, debtors, payout, creditors and reconciling with relevant balances. I will cross verify. These are all analytical calculations. Confirmations for outstanding incomes and expenses by preparing reconciliation statements, and they have given various other examples. Now, when we do analytical procedure, we may do at planning phase, we may do while doing the audit, that is called testing phase, or we may do at completion phase. Mainly at planning stage, analytical procedure we do as part of risk assessment procedure. At planning stage we do analytical, right? As part of risk assessment procedures we will do this. Yes or no? Why I do at planning stage? We want to identify areas of potential risk. Yes or no? By indicating aspects of and developments in the entity's business which is previously unaware. We don't know this kind of relationship. We don't know until we apply analytical. We never get a doubt. The information will assist the auditor in determining nature, timing, extent of his audit procedure. The moment I went to go down, the moment that they told me that scrap registers were not available, I immediately get a doubt. I will put in my audit plan, scrap, senior article will verify. I will also verify because there is a inadequate records, which is a fraud risk factor. Able to understand? Analytical procedures will use both financial data and non-financial. Do analytical procedures depend only on financial data? Do they depend only on non-financial? Both. We compare non-financial to financial. You might have done in FM ratio analysis. That is entirely analytical procedure. That is entirely analytical procedure. One example I'll give you from the ratio analysis. Debtors turnover ratio is there, right? Last year debtors turnover ratio was 5. Current year debtors turnover ratio was 6. Getting it? Now 360 by 5, you get some approximately how much more? 72. Correct? Whereas 360 by 6, 60. Correct? Last year debtors turnover ratio 72 days worth of credit sales were outstanding. Whereas current year 60 days worth of credit sale was only outstanding. First of all, what is the actual credit period policy? 40 days. Then why this much worth of debtors were outstanding? Why this much worth of debtors were outstanding last year? Okay, forget last year, some other auditor. Current year I am the auditor, right? When the company, debtors is, when the company credit period is 40 days, out of total sales, divided by 6, if, debtors turnover, how I calculated turnover ratio, turnover divided by trade receivables is equal to 6 it came. 360 divided by 6 is equal to debtors holding period came. So debtors credit period is actually how much? In the order 60 days. But management is saying me 40 days. Then why for me logically 60 days coming? What happened? Sir, huge credit sale was made in the last year, last month, sir. Okay, then if that is the case, okay, fine. Ratio might have given a different result. But sales every month even. Every month sales are even, more or less same. Then why this much variation? Some long outstanding debtors might be there. Some long outstanding debtors. What do you mean by long outstanding debtors? They were liable to pay from long ago. Is it indicating provision for doubtful debts? Whether entity created a provision, cross verify, not created, you discovered mistake by this. This is called aging analysis as well. Understood or not? FM ratio analysis is used for this only. Ratio analysis is not for, like this thing. This is for understanding and interpreting the results. Understood? By using how much fixed assets, I generated this much turnover. Fixed asset turnover ratio. I compare with another company. Another company fixed asset turnover ratio 10. My company fixed asset turnover ratio is 6. Which means I am underutilizing my assets. which means I am underutilizing my assets. That company with the same investment, 10 times turnover they generated. Even I invested same amount, but I generated only 5 times turnover. Understood or not? Fixed asset turnover ratio means what? That is how we understand. Every ratio has a meaning. Are you getting it? IRR is a ratio, right? Internal rate of return. My company IRR is 17%. Another company IRR is 25%. Shareholder is questioning me. I will move to that company because I am getting better return. Understood? So these are all various understandings. Next, what is substantive analytical procedure? Substantive procedures includes test of details and analytical procedure. Getting it? And therefore, analytical procedures which are one part of substantive audit procedures are also called as what? Substantive analytical procedure. Now, when will you use this analytical procedure? It is based on auditor's judgment. Ultimately, what is the objective of using this analytical? To reduce audit risk. Ultimately, my opinion should be right. My opinion should not go wrong. The auditor may inquire management regarding availability and reliability of the information in order to apply substantive analytical and result of that analytical procedure. The auditor should consider the following factors for substantive analytical procedure. This question has been asked in the last attempt, I think. So last or that before attempt. For 4 marks they have asked. For 4 or 5 marks. What are the factors the auditor should consider? What are the factors the auditor should consider for substantive procedures? First, in order to apply analytical procedure, first I must need some background data. Yes or no? And remember, I can apply analytical procedure only if I can disaggregate the data into multiple parts. Example, you see, first in the P&L I found operating expenses huge variation. Then I asked breakup. Then they gave me breakup for each operating expenditure, repairs and maintenance. That alone is not sufficient. I want breakup month wise. Now tell me, originally between 2 items I found difference. Then this is aggregate data. Now I disaggregated or not? I split it. Again I split it into months. This is called disaggregation. The more disaggregation that you can do, the better result you can get. Understood or not? The more micro level you can go inside, you can understand the problem that, strongly. That's what. So the degree of disaggregation available that directly affect degree of usefulness of detecting material misstatement. So account type, this is little lengthy point, not required. Source. Some class of transaction tend to be more predictable because they are numerous similar transactions, whereas some transactions which are non-routine and estimation involving significant class of transactions, these items may not be predictable over time. And predictability. How far you can predict a particular transaction? Will it move in a particular pattern? Suppose, can I predict cases against the company? Legal cases. Last year 10 cases, current year 12 will come. Can I say that? Exactly. So where you need to apply analytical, where you should not apply analytical, you must have, understanding, the judgment. And remember, analytical procedure will give evidence for whether everything is accounted completely. Is the value reasonable or not? Will analytical procedure give me idea about ownership? If I apply logically, can I understand building who is owner? I'm not astrologer. Correct? So in analytical procedure, we do continuously what? What can go wrong analysis. Same risk analysis principles we apply. Understood or not? So what are the techniques? Trend analysis, ratio analysis, reasonableness test, structural modeling. What is trend analysis? In the last exam, this was asked. The analytical procedure implies analyzing fluctuations by comparing current year to prior data. What is this technique is called as? Briefly explain. 4 marks question, last attempt exactly. Yes or no? They asked about trend analysis. Trend analysis is commonly used technique. It is nothing but comparison of current data with the prior balances or with the trend in 2 or more prior periods. Here, the auditor evaluates whether current balance is in line with the trend established in the previous. Whatever past trend is there, current same trend continued or not. Generally, trend analysis I can apply on rental expenditure, salary expenditure. Even turnover I may not apply always. Sometimes I can apply. If the industry situations are normal, I can apply. Suppose between 2019 and 2020, can I apply trend analysis? Because of the COVID situation. So I can't trend, I can't estimate the trend. Yes or no? For medical industry, the trend is extremely high. For remaining industry, the trend is extremely low. Able to understand? Ratio analysis. Ratio analysis means what? Ratio analysis is useful for analyzing assets and liabilities, revenue expenditure account. An individual balance sheet account is difficult to predict on its own, but its relationship with another account is more often predictable. What is that sentence meaning? Yeah. So what is that exact meaning? See, this is Reliance company. Tell me what is plant and machinery? How much? Can you predict on its own? You can't. But if I give you turnover of the machine is this much, asset turnover ratio is this much. Can you predict the third item? Example. So an individual balance sheet item or individual P&L item cannot be predictable on its own, but its relationship with others is often more predictable. Ratios can also be compared to the ratios of different entities or prior period. For example, auditor can review GP ratio for the current year. The auditor can compare the GP ratio with the earlier years or GP ratio with other company, why this company is performing low, where the company is lacking exactly, maybe there might be some frauds in that area. Understood? Simple, you want to identify something unusual, where this company is not going right. I just want to figure out where it is going wrong and why it is going wrong. I want to figure out. If it is because of some fraud or error, material misstatement, that is concerned for me. Are you getting the point? Then reasonableness test. Reasonableness test means we applied no repairs and maintenance. Last year it was 1 crore, current year it was 5 crore. How come? Unreasonable. Are you getting the point? It is not only trend. I felt 5 crore repair is unreasonable. What 5 crore worth of repair on a single day? It's unreasonable amount. I investigated and I found it's a spare part and I found it's a capital expenditure wrongly debited to P&L. So this is not something trend analysis. We do not rely upon past period, but we rely upon non-financial data. Getting it? By using non-financial data. Example, turnover 20% increased. Salary cost 70% increased. It feels something unreasonable. Able to understand? So is it reasonable or not? Next. These tests are generally more applicable to income statement items and certain accrual and prepayment accounts. In other words, these tests made by reviewing relationship of certain account balances to other balances in order to identify reasonableness of the amount. Interest expenditure against interest bearing obligations, like how much I borrowed, how much I'm giving. Next, raw material consumption to production. Raw material consumption to production is also a technique of ratio analysis, but this here the main objective is it appearing reasonable or not? Management is telling me 10 crore worth of inventory was sold, 2 crore worth lying. How much is generated? Totally they are saying 12 crore. Is it reasonable? Is it correct? I want to check it out. So that is called reasonableness test. Structural modeling is a statistical tool, so nobody is using structural modeling in audit. Even in reality also, nobody will be using this. This structural modeling technique might be useful in non-financial fields, probably. Not in financial fields. Can I use only analytical procedure as a single substantive audit procedure? I will not do test of details. Can I use this only analytical procedure as a pure audit procedure, substantive procedure? If test of controls are highly effective, you can apply just analytical procedure, logically check everything seems right. Controls are fine, no, which means actual transaction will be done well. Just see logically everything appears fine. If logically everything appears fine, process is correctly followed, why you have to check internally again, go? It's waste of time, focus on some other area. Are you getting it? Analytical procedures will be applied either alone or in combination with test of details. So, determining suitability of particular analytical procedure for given assertion, what is the assessed risk of MMS? All this you need to take into account. If the risk of MMS is low, controls are operating effectively, generally we can just apply on only substantive analytical procedure. Further, if you want to apply only analytical procedure, how far the data is reliable? If the data is very accurate and reliable, based on analytical procedure, whatever decision you are taking will also be reliable. If the data is moderate, then better don't apply this alone. Actual transactions also you have to test. Now develop an expectation of recorded amount. Some scrap value totally recorded 12 lakhs. What is expectation? 15 crore. And evaluate whether expectation is enough to identify a misstatement that individually or when aggregated with other mistakes may cause financials to be materially misstated. So develop an estimate, develop an expectation and compare with the actual and see how far it is detecting a material misstatement. Have you seen all this? I feel like you have never gone through all this. In sampling also your faces are similar. In documentation evidence chapter also same expression. Now, suitability of a particular analytical procedure. This question also asked many times. Which method of analytical procedure is suitable? Like trend analysis suitable, ratio analysis suitable, reasonableness suitable. Which method of analytical procedure is suitable for a given assertion? I want to check employee cost, whether it is reasonable or not. Should I apply reasonableness test? Should I apply trend analysis? Should I apply ratio analysis? It depends on what? Auditor's professional judgment of how a method will discover a material misstatement. If a particular method discovers mistake, remaining methods are not discovering mistakes. Which is suitable method? The method which detects misstatement is a suitable method. Sometimes an unsophisticated method. Sometimes an unsophisticated method may be a most reasonable, suitable method. Example, I called one employee. I told him, close your eyes. I opened chits, purchases, sales and all. Pick one chit. He picked sales. I investigated sales. Fraud was discovered. Is it analytical, intellectual? Nothing. Exactly. So, substantive analytical procedures are, first of all, generally more applicable to large volume of transactions that tend to be predictable over time. Comment. They'll ask you the question. You need to write this answer. Analytical procedures are generally more applicable to large volume of transactions that tend to be predictable over time. Comment. 4 marks question. You need to write the below continuation. The suitability of a particular procedure will depend upon how effective it will be in identifying a misstatement that causes financial statements to be materially misstated. Sometimes even an unsophisticated model may be effective when discovering a material misstatement. Different types of analytical procedure provide different levels of assurance. Which method is suitable for the given assertion is a matter of professional judgment. Okay, that's enough. Now, what factors you will consider on reliability of data? Now, you see, what are the factors to apply analytical procedure? First point we discussed is availability of reliable data. One of the factor is only if the data background is available correctly, then I can only apply analytical procedure and happily proceed. Now, how to say whether data is reliable or not? How to say whether data is reliable or not? From source, from where the data is obtained. If the data is obtained from independent sources, generally it is more reliable. How far the data is helpful for comparability. How far the data is relevant for this assertion. What are the controls over preparation of the data? This is the most important thing. What are the controls over preparation of data? This itself can be asked as a 3 marks question. One of the factor for ensuring reliability of background data for applying analytical procedure is controls over preparation of the data. What are the points you will consider? Only this point that can be asked. Able to understand? If accounting records, employee payroll records are 100% accurate because they were completely automized, they were completely electronic, now nobody can change, means controls are effective. Now I will take that data and apply my logical analysis to it. Then my result of analytical procedure will be more accurate. Understood or not? So like that we need to discuss. This is actually 5-6 hours chapter approximately. This paragraph is not required. Investigating results we understood. How analytical procedure helps in drawing overall conclusions. How analytical procedures will help auditor in concluding overall. The conclusions drawn from the results of analytical procedures are intended to corroborate conclusions formed during the audit of individual components. When I originally verified purchases, controls I saw, everything is effective. I took 100 samples, then everything was completely rightly processed. So that originally I felt when I conducted audit, normal substantive procedure and normal compliance procedure, I felt purchases, everything is true and fair. Now I apply logically everything. Now both should match. No, logically also I should feel yes, they are completely reliable. Actual verification also should be completely reliable. So this analytical procedure helps to draw reasonable conclusions on which he will base audit opinion. Because of analytical procedures, no, you will identify previously unidentified risk. Correct? Normally when I apply controls evaluation, normally when I check actual transaction, vouchers and all sample, I may not identify any problem in that. But when I logically think why this account is unusual variation, then only I discovered. Correct? In such circumstance, whenever auditor is identifying previously unidentified fluctuation or risk, please revise your auditor's assessment of risk and modify further audit procedures accordingly. This can be asked as a true or false statement. This can be asked as a correct or incorrect statement. When auditor has performed analytical procedure, the auditor may come across previously unidentified or unrecognized risk of MMS. Even though the auditor need not revise his further audit procedure or risk assessment procedure, incorrect. As per SA 520 analytical procedure, because of the result of analytical procedure, if auditor is aware of previously unidentified risk of MMS, the auditor shall revise the auditor's assessment of risk and modify further audit procedures accordingly. Understood or not? Now consideration specific to public sector entity while applying. In public sector, when you are applying analytical, you will apply propriety principle as well. Whether the expenditure incurred is reasonable expenditure or not, government audit propriety principle is there. That also you should keep in mind. That is what this entire point is saying. Clear? That's it. So that's regarding analytical procedure. Almost all the topics we have covered. If at all you think analytical procedure is having 3 or 4 topics, come out of it. Every chapter I am seeing, like many of you don't have that much connection with 100% syllabus. Hardly you are smiling for 40% syllabus and crying for 60% syllabus. Which means you focused only on 40%, which is easy. Getting it? Like I'm telling no. See, why all these things are happening is very simple. 4 or 5 years before, whoever teachers were there, they were only continuing even today. And there's nothing wrong. But as long as they don't update, they should not continue. 3-4 years ago, I can say 5 attempts before, May 2019 before, the auditing paper was 1 or 2 papers. Quite easy. Getting it? They used to ask straight question. They never test a question from analytical procedure and sampling, Previously, we never seen. We don't even know that these chapters were there, When we are writing exam at final, we don't know that these chapters were there. Inter also, we don't know that these chapters were there. All we know is company audit, documentation chapter, standards, different types of entities, government audit. We have vouching and verification. You have items of financials, we have vouching and verification. That's it. We only know that chapters and we only read from that and we secure 50-55. But if you read only those chapters, you will secure 25 for sure. Getting it? But we require 50 plus? No. Minimum. In order to secure 50 plus, you need to have comment on audit report, documentation, sampling, fraud. We don't even know that there is a chapter called fraud, earlier. First of all, in audit, misstatements means fraud, error. We don't know that. That's the level of coaching that time. Getting it? So people are not updating themselves. Still, many are in the old assumption. Like, okay, auditing means, kuch bhi nahi. It's very easy. No, not. Just check last attempt paper, that last attempt, last 5 attempts papers you check. Any paper you take of your choice. The questions are very, very clever. The questions are very in-depth. They don't ask you, hey, tell me what are the methods in analytical procedure. No. They'll give you a sentence. What is this method? Briefly explain about the method. That's how the question is. So, I just opened you entire syllabus before you. What is there exactly? Now it is your turn to prepare. Getting it? And I gave you for every chapter a clear-cut idea how it works. How the chapter works, I clearly gave you an idea. Because we don't have, it's not a regular video, we have time restrictions. Moreover, your exam is near. It's not possible for us to discuss 100% in depth. Getting it? So with this, analytical procedure chapter is over. So, government audit. So first of all, from this chapter again, the level of expertise from us is again below moderate. Because in government audit, we chartered accountants don't involve at all. Getting it? No, not about C&AG. Only in government companies, CS will involve and do audit. But rest of the entire governmental departments audits are not given generally to chartered accountants. They are completely taken care by C&AG audit department. There is an audit department called IAAD, Indian Accounts and Audit Department, which is headed by IAAS officers, Group 1 cadre, IAAS officers. So, Indian Audit and Accounts Services, like Indian Administrative Services is there, no? Similarly, here there is another service, which is through UPSC exams only. So, these people will head this department. This department is answerable to C&AG. This department is answerable to C&AG. In government, we will have 3 wings. First of all, executive wing, legislative wing, judiciary. There are totally 3 wings in the government. Legislative wing means parliament. Executive means ministers. Like entire prime minister and his cabinet, entire together we call them as executive council. Judiciary to monitor all these affairs. Getting it? Now, the supreme audit institution in India is C&AG. For government, the supreme audit authority is what? C&AG. And this C&AG will be appointed by the President of India. He can only be removed by President of India. Through this, C&AG was given independence that he cannot be influenced by any other executive ministers or any other legislative members. Only President will interfere with respect to C&AG powers, duties, everything. Now, for C&AG, there is an act called C&AG Act. So, through this, he has been given certain powers, all that. Now, so this is the actual working methodology of, C&AG. So, they will be heading the department of the government called IAAD. In that department inside, they'll have IAS officers. Below them, some audit boards will be there. That and all you will get at final level. In final also, we have something called PSU audit. Government audit or PSU audit, both are actually same. Both are similar. Getting it? Next. So, here we are discussing brief principles of government audit. What are the principles of government audit we are discussing? Just you can observe C&AG. So there is a website for C&AG. So there is a C&AG website, and here so this is C&AG website. There are many audit reports. There are many audit reports in C&AG website. You will see here audit reports. You might have heard, no? Performance audit, propriety audit. Yes or no? Only these two terms you heard. Actually, propriety audit is not a type of audit. Propriety audit is a principle in audit. Performance audit is a type of audit. Performance audit is a type of audit. Where in performance audit, what we focus on? We focus on operational aspects. And we will try to find out improvements in that. We will find out what are all the defects in that system. What are all the improvements that we can take up. That is what the objective of performance audit. Efficiency, effectiveness and economy. These three principles only focused. Are you getting the point? So here you see performance audit of air pollution control by Government of Gujarat. Audit report on PSU of Government of Assam. This is compliance audit. The C&AG will do three types of audits. Financial audit, compliance audit, performance audit, or combination. Or it is called as a combination. In our syllabus, we only have slight introduction on performance audit, a slight introduction on compliance audit. You might have seen in this government audit chapter, audit against rules and regulations. What is that? Compliance audit. Nothing but compliance audit. So compliance audit means what? You see here. Audit report on Assam. State finance audit report, Government of Assam. You will find here government type, central government, department, civil department, commercial department. These are the departments of government. Railways. Getting it? Suppose railways I took. In that railways, report type, which one you want? Financial audit report I want. Year of report I don't select. Directly I'll select search. So you will find all union government railways financial audit reports. Suppose 2021 financial audit report is there. We'll see. We'll download and see what is exactly covered. So this is, government's audit report, central government audit report. The audit was performed by C&AG on railways. They'll give you brief overview. First, summary is given, executive summary. What is the ultimate audit findings in this? What the C&AG has found in this government, in this union. You see here, this is actually the summary. First of all, what is Indian Railways? Is a departmental commercial undertaking. You might have seen what government audit comprises. Government department audit, government companies audit. Have you seen? Government corporations. Have you seen that word? So, whereas railways is what? It's a department. Getting it? It's a department. So here we focus on performance of the Indian Railways with reference to last year. There is another chapter which focuses on financial overview of the financial performance of railway PSUs. The railway department has a certain companies again. Okay, Indian Railway Financial Corporation, like that there are some institutions. So conclusions. Audit observed during 1920, total receipts decreased by 8.3% because of the COVID issues, whatever. Okay, compared to 6.47% as increase in 1819. And here there was a heavy dependence on coal transportation, which constituted 48% of the total freight earnings. They are giving entire observations here. What is the surplus? What is the target of the, what is the targeted revenue? Targeted expenditure. So they have given complete their analysis, what they observed in audit. What they observed in audit. See, what the C&AG has recommended to the Ministry of Railways. They need to take steps to diversify their freight basket to enhance freight earnings. You see, in a normal audit, until now whatever we discussed, traditional audit, normal whatever audit that we discussed, we only focus on regularity aspect. We do not focus on where company can increase the revenue. Do we focus on that? Whereas C&AG will do all that. C&AG will not only verify books of accounts. In fact, first of all, understand these entities may or may not prepare financial statements. Getting the point? They prepare accounts for every income, for every expenditure, they maintain accounts. These accounts will be audited. And C&AG not only audit from detection point of view, they also audit how to increase the organization, how to help the organization, which we statutory auditors in case of company will not do. It is not our duty. Whereas C&AG objective is to give government various advisors. Able to understand? You see, government auditing definition, you see. Government auditing is an objective, systematic, professional, independent verification of financial, administrative, other operations of a public entity made subsequently to their execution for the purpose of evaluating and verifying them and presenting a report containing comments, recommendations for future actions by responsible officials. Whereas in audit definition, you see, it is to give opinion. There's a basic difference between audit and government audit. In government audit, we not only concerned about giving opinion on the affairs. We give opinion on, we give recommendations for further improvements, all that. Yes or no? So, they need to take steps to augment their internal revenue so the dependencies on so and so is contained. They need to revisit the passenger and other coaching tariffs as to recover the cost of operations. Nothing but C&AG is recommending to increase railway fare, charges and all. Getting it? Need to ensure that surplus and operating ratio presents true picture of the performance. Need to address backlog of renewal old age assets for safe running of trains. Almost in all parameters they covered audit. They covered the audit in operating parameters. They covered the audit in revenue parameters. They covered audit in compliance parameters. So many. Understood. Financial audit conducted by C&AG comprises everything. They consider performance aspects, efficiency, effectiveness, economy. They check bylaws. They check with compliance with rules and regulations, compliance. And as a whole, they check propriety. That is called financial audit. In government, financial audit is also termed as comprehensive audit. Financial audit is also termed as comprehensive audit. Able to understand? Next. So, what is the objective? Accounting for public funds. One of the objective of government audit is, government audit serves as a mechanism or process for public accounting of government funds. Appraisal of government policies. We question how far government policies are useful for the public. Appraisal means what? Questioning, evaluating. And this government audit is based for taking corrective actions. The objective of the government audit is a combination of ensuring accountability of administration to the legislature and functioning as an aid to administration. In India, the function of government audit is discharged by independent state authority called C&AG through agency department called Indian Accounts and Audit Department. Understood or not? So what C&AG do? C&AG do audit expenses. How we do audit of expenses? We first see whether the expenditure was incurred as per rules and order. Any expenditure incurred by public official, government official, is it incurred? First of all, there is a rule for that or not? First of all, is permitted or not, we will check. Not only rule, we will also check propriety. Okay, as per rule he spent. Did he spend reasonably or carelessly he spent? That also we will check. Able to understand? So that is called propriety audit. Now performance audit. Whenever he is incurring expenditure on procuring resources, do they procure at best price? And are they using the resources efficiently? After construction of a particular project, is that project ultimately useful to the public effectively? That is called performance audit. We check sanctions. Who sanctioned the expenditure? Okay, you are incurring as per the rule, but somebody should sanction. Who has sanctioned? Is he having authority or not? And before the sanction, we need to first budget it. We need to allocate the funds for that provision, for that particular purpose. Are you getting it? Suppose if provisioning of funds was not there for certain expenditure, who sanctioned that? Able to understand? See, generally how it happens is, budget is there, no? union level budget, state level budget, municipality level budget. We are only familiar with central budget and state level budget. State level budget is what? Assembly discussions and all. State level budgets. But we are mainly concerned about central level budget. That especially CS students concerned only regarding amendments, which we will clarify. But students out of hurry, they'll ask it first. Getting it? Suddenly if an amendment came, student comes and asks me, sir, is it applicable for me? You don't worry. It will not apply. If it apply, we will tell you first. Getting it? For all of you, I am giving instruction. Many faculties will be receiving this kind of stupid queries. For you, amendments before exam, 6 months before. 6 months before exams. Whatever amendments were there, they will only apply for you. 1st May is the criteria for you. May, June, July, August, September, October. Exactly 6 months. After that, your exam. May 1st. 1st May before, whatever amendments were there, they will apply for you. Otherwise, they won't apply. Are you getting the point? Suppose yesterday government passed a notification regarding some companies act or whatever. Don't come and ask again immediately, sir, is it applicable to me? No, not applicable. Institute is not expecting you to be that much dynamic. Okay. If you are moderately dynamic, that's enough. Next. So what is this propriety audit? What is this propriety audit? Propriety audit means what? Propriety means what? Ownership. In government, we should not only check whether the authority has spent expenditure as per the rule, as per the sanction. We should also check how much quantum is required, how much is spent. Is it necessary, first of all, incurring that money? That we need to question. In a normal private sector, the big listed companies, private sector, there we generally don't focus on propriety. It's not our duty also. Why, Mr. Mukesh Ambani, you are traveling on chartered flight every day, you are wasting so many shareholders' funds? What he'll reply? That's a power given to me by shareholder, you shut mouth and do your duty. Correct? Huh? You can't question. But if it is done by a public sector undertaking director, if at all he is using chartered flights for, official trips, whatever it may be, we can question. Because here it is public money, there it is private people money. Understand? Public money means government money. So here we need to check propriety principle. Is it necessary? We will ask this question. Okay, you spent. You have given the power to spend. There is a rule. You spent as per the rule. I'm not talking about all that. Is it necessary, first of all, to spend? This is a question which we have to ask. Are you getting it? So, regularity audit alone was not sufficient to protect properly the public interest. Correct? Even though expenditure has been incurred in conformity with the rules. Even though expenditure is incurred with the rules, auditor should look into financial propriety in respect of reasonableness, faithfulness, economy. Auditor has to check how far this expenditure is required. Can we avoid this expenditure? Is it improper? You need to try to identify this kind of incidents in, C&H report identifies all this. There is a huge wastage of expenditure on so and so. Companies unnecessarily paying, the railways is unnecessarily incurring on so and so, where the output is ultimately zero. So what are the principles on propriety? First of all, what is reasonable, what is not reasonable? We can't give precise guidelines. It is common sense. Yes or no? It is something common sense. How do we check whether it is propriety or not? Whether the particular government department official incurring money, spending government money, public money, is it required or not? How do we check? See that expenditure is not more than occasion demands. Every public officer is expected to exercise same prudence. Like how he would exercise when he is spending his own money. When I am spending my own money out of my pocket, what kind of care, diligence I take? When I am spending my own money, we will go to 2 or 3 shops now before you buy some particular article. You check where you are getting the best quality, where you are getting at the best possible price, yes or no? Same way, government official, when he is spending money, will it be useful for long term? Will it be helpful for me? All the points you have to check, yes or no? No authority should pass an order for sanctioning expenditure for their own advantage. All these points you will find violations in government departments. And I told you, these points not only there in government. Corruption is not just there in government. It's there in private sector as well. Corruption means what? Anything illicitly you are getting. Unauthorizedly if you are getting something, that is called as corruption. You are not eligible for that, but you are getting it. So that's called corruption. Corruption is there everywhere, not just government. What we see is only government. What is happening in this private sector, listed companies and all, nobody knows. Because doctrine of indoor management. What is happening inside the company, nobody is aware of. Correct? Next. Public money should not be used for the benefit of a particular person or section of a society. However, if it is very small amount or if it is because of a recognized policy or custom, getting it, so then you can spend. Or if it is something that can be enforceable in a law, then that can be spent. Suppose we have some reservations where we spend some particular money for reservations, people and all, that is enforced, given, that's a power given under constitution, that can be done, no problem. Next. The expenditure ultimately should pass down to the beneficiary. It should bring optimum benefits instead of mere spending public money on day-to-day needs. Very simple. Some road was damaged, a road was laid on that. 10 times in this 1 year itself on the same road repair was made. Instead of repairing, if they give a quality to, if they give to a contractor who will qualitatively lay the road, the cost of laying the road is less than the repair cost. If that is the kind of situation, you need to comment it. Government officials are spending waste public money. Yes or no? 10 times, 15 times road was repaired. Instead of that, they can relay the road once again freshly. Able to understand? The expenditure should not exceed benefit derived therefrom. Cost benefit analysis you must do. And it should not become profit. It is only compensatory in nature. What is that like that? Example, government officials, no? Suppose I'm an RTA inspector, road transport inspector. What I can do is, as an inspector, I can inspect vehicles that are going on the road, whether they are having proper documentation, all that. So every day I will go to one area and I will inspect. Now government rule, no. What is the rule? No, inside for me. Every day whenever I am going, 1000 rupees per day allowance they are giving me. 1000 rupees per day travel allowance they are giving me. And I am always using government car. Now what is the use of the traveling expenses? Tell me, allowance. Are you getting it? For every visit 1000. Daily I will just take the car and go for 5 visits. Some chumma, like no objective. Every day I will be getting 5000 rupees allowance. Is it becoming a source of profit for him? How the allowance should be compensatory? It should not be profit. Are you getting it? Auditor has to check all this. I'm telling you, this audit we will not do. These types of audits were completely done by C&AG. You know, C&AG has their own auditing standards. They don't follow our standards on auditing 700 series, 800, 500 series. No, they don't follow. C&AG auditing principles, auditing standards are completely different. Entire audit is governed by C&AG rules. Understood or not? In a path. Have you all read this? Now, what is performance audit? Performance audit is what? It's an audit of various programs that government is taking up. It's an audit of various projects. Suppose Tamil Nadu government is implementing some midday meals program. Yes or no? Midday meals program. In Telugu, Madhyana Bhojana Padakam. In Tamil also it is scheme means Padakama. Another scheme means what in Tamil? Sorry? Madhya? Apdiya. Okay, fine. Sorry. Okay. So, that kind of scheme is their midday meals program. Now I will do a performance audit of how that scheme is performing. Getting it? First I will check. Now in order to deliver this food to all the people, how the raw material is procured. The rice bags, the dal, whatever. It's all the ingredients for making sambar, chutney, whatever. First we will see how far that, this equipment, this entire raw material, the ingredients are procured for. Okay, they are procuring 100 tons in one particular school in a year. Now, how many were there inside the school? First of all, analytical procedure I will apply. How much they will eat in a year I will check. I will see input-output ratio, that's called efficiency. First of all, how many students were there inside that? By procuring 100 tons, how many were fed? There are hardly 50 students. 50 students, will they eat 100 tons in a year? Definitely not. Correct? Huh? So, effectiveness is completely gone. It's useless. Able to understand? Or the food quality was very poor. It is not eatable. It is not at all edible. So, if that is the case, how effective is this project? So, midday meal scheme, whatever program, that can be audited. Remember, here in government audit, no, it is not about financial statements. It is not about giving opinion. It's not about the government audit has a wider coverage. Suppose in this particular temple nearby, they laid a big road, cement road, or some tar road they laid. On that I will do audit. That's a performance audit. Or on that I will do a financial audit. On that I will do compliance audit. For government audit, what is the scope of government audit? We can't define precisely. Understood? If I open Tamil Nadu itself, you see, I'll select Tamil Nadu state, and here I'll see, social infrastructure, performance audit report I'll see. So I selected Tamil Nadu government related. Okay, just a minute. I think let me not select anything here. All sector I'll select. Performance audit report. Okay, so here it is regarding Tamil Nadu Generation and Distribution Corporation Limited. This is regarding electricity. This is regarding PSU audit report of C&AG of India, Government of Tamil Nadu. This is regarding some constitutional amendment related one. This is regarding general and social sector of Government of Tamil Nadu. Revenue sector, Government of Tamil Nadu. Almost similar reports are only, appearing. So almost we are going to 2017. General and social sector, we'll see once. What is there in that? Here they have given overview. Even you can download municipality level audit reports. You see, here it is regarding government lands. So they have many sub reports inside this. Understood? So here audit is not not precisely like how we discussed in the other chapters. In other chapters, we do audit of general purpose financial statements in order to give opinion. This chapter alone is completely different. This is not general discussion like any other chapter. Are you clear? So first you need to understand how this chapter will work. Now what performance audit we focus on? We focus on efficiency. Efficiency means nothing but usage of resources. Economy is nothing but procurement of resources. Effectiveness, outcome of the project. How far it is useful. So the procedure is identification of the topic, preliminary study, planning and execution, and reporting. So some topic they'll identify. Road laid at so and so locality. Preliminary study. Plan the audit and execute the audit. And finally report. Now same way how we do audit of expenses, we do audit of receipts as well. So in audit of receipts, what we will cover? Whether there is a proper assessment and realization. Is government assessing properly and taking measures to recover the revenue? What are the rules and procedures for recovering the revenue, like property taxes, municipal taxes, SGST, state level GST, and see whether there are proper controls. Getting it? Like sometimes we collect and refund. There is a possibility of double refunds. See that there is a proper control. See that all the rules and regulations are actually implemented. And municipal taxes, SGST, in all these cases, if somebody is not paying well or not paying properly, we will select sample cases and pass an assessment order. We see how the assessment orders were passed. Now whether the orders were passed by department officer, is it on a valid basis or not, we will check. Then government, they will have some stores, inventories in their government godowns, government warehouses. So what are the aspects to be covered in audit of stores and inventories? This itself can be asked as a separate question. Example, Food Corporation of India. They have godowns across India. Getting it? In India, it is said that approximately next 5 years, 8 years, even if we don't do agricultural activity, we have enough food. Food safety, we have enough food. Wheat and all will have long gestation period. Rice, wheat. So in the government godowns, we have food, this is called food reserves. Ahara nilvalu in Telugu. Getting it? So we have so much of reserve which can feed approximately 5 years even without doing any activity. So that much food is there in India. Getting it? All this happened after Green Revolution. Getting it? Now we are all in data revolution. Next. So aspects to be covered in stores. Look at the regulations which are related to purchases, receiving the food, issue of food, custody of food, and sale and inventory for stores. So whether controls are properly implemented, whether prices paid for procuring these food items, inventory, whatever, are in agreement with those shown in the contract. Is there any uneconomical purchase of stores and losses attributed because of defective or inferior quality? Whatever stores, it may be food stuff, it may be medical equipment, it may be medicines, whatever. Next. Receipts, issues, balances are checked regarding accuracy, completeness and reasonableness. Any idle inventory shall be specifically mentioned in the report. Periodical inventory verification is done or not, we need to check, and valuation has to be seen carefully. Adjustment to profit or loss due to revaluation, everything shall be taken into verification. Any 4 points. They'll ask you straight question. What are the write about audit of stores and inventories in the context of government audit. They'll ask you. Now, audit of commercial accounts. Like government will be doing activities through 3 entities: departmental entities, statutory corporations, government entities. Departmental entities, the audit will be directly done by C&AG. Statutory corporation, audit will be conducted by the person as per the statute. LIC Act may say CA may do audit or some other may do audit. Government companies Act says only CA shall do. That's why who will appoint the CA? C&AG will appoint. But only CA will do ultimately the government company audit. All the aforesaid entities have to maintain accounts on commercial basis, nothing but accrual basis. Understood or not? The audit of departmental entities is done like any other government departments by C&AG. Statutory or corporation audit depends upon the statute. In respect of government companies, provisions are given under Companies Act. The last year straight question, write about audit of commercial accounts. Are you all clear? Now, what are the powers of C&AG? Important question. Inspect any accounts of any central government or state government department. It may require any accounts books, as to be sent to C&AG places. They may ask so many questions and observations as he may consider necessary for the person in charge of the department. Or he may do, instead of detailed audit, he may dispense detailed audit and go by test checking. That is his power. Whether he will do full audit or sampling audit, that is his choice, C&AG's choice. These are the powers of C&AG. MCQs might come. Next, what are the duties? First of all, he is the one who is responsible to compile, prepare accounts of central and state. In case of central, he will present to president. State, he will present to governor. UT president, he will present to administrator. He is also responsible to provide any additional information asked by them. And he is responsible for audit. He has to audit all expenditure, all the transactions related to consolidated fund and contingency fund. Able to understand? What is consolidated fund? What is contingency fund? Suppose Prime Minister National Relief Fund. It may be a contingency fund. Prime Minister Cares Fund. It may be contingency fund or consolidated fund. Simply speaking, you are paying taxes, no? You are paying direct taxes. You are paying GST. Yes or no? Government is recovering so many other. All this will go to different funds. That is entirely a consolidated from where government will spend for the project. Are you getting the point? Various public schemes. C&AG has to do audit of receipts and expenditure. whenever government is giving any grant to somebody, whenever government is giving any loan to somebody, CNDG will do audit. Audit of central government and state government they'll do. Audit of stores and inventory they'll check. Audit of government companies and corporations, CNDG will participate. These are the duties of CNDG. They'll ask you a straight question. What are the duties of CNDG? Write any 4 duties, 4 marks. Clear? What is the role played by CNDG in government companies under Companies Act? Simple. They are the one who are appointing the auditor. After auditor is appointed, after he do the audit, they will do supplementary audit. Supplementary audit means what? In addition to whatever you did, I will also come and verify some additional aspects. If needed, I will also do test audit. Test audit is not supplementary audit. Supplementary audit will happen almost in every case of government company, but test audit will not happen frequently. Test audit can be conducted by CNDG, separate person. Getting the point? He need not be chartered accountant. Clear? So write about supplementary audit. This can be asked as a question. The CNDG within 60 days of receiving the original audit report has a right to conduct supplementary audit of financial statements of the company by any person authorized by him. He can ask additional information. Now CNDG can comment on supplementary audit report, and if any comments given by CNDG upon or supplementary audit report shall be sent by the company to every person entitled, like every member, every trustee, or persons other than members but are entitled to receive the notice of general meeting. And the comments made by CNDG on supplementary audit shall be placed in the general meeting. Supplementary audit is not a separate audit but an extension to original audit carried out. This is a note given by me. Understood or not? Test audit means what? If at all it may consider necessary, by order conduct a test audit. So how to do test audit? CNDG rules will apply. It is not done as per company audit, CNDG Act. Performance audit they may do. Propriety audit they may do. Compliance audit they may do. Test audit means what? Performance audit, compliance audit, test audit. Like many a times CPSC, Central Public Sector Enterprises. What is this? Central Public Sector Enterprises. Compliance audit will be done by CNDG. What is compliance audit? There are in India approximately 500 plus central public sector enterprises. Means 500 plus government owned entities were there. Out of which 40 plus were listed on stock market. BPCL, HPCL, IOCL, ITC. Yes or no? All these are what? Government companies listed on stock market. For all these companies, they do governance audit. Governance audit means what? Are they complying with CSR rules? Are they complying with audit committee provisions? Are they complying with SEBI provisions? CNDG will check all laws and regulations compliances. That's called compliance audit. That is nothing but test audit. Are you getting the point? So that's a power given under Companies Act. So through this test audit, Companies Act is giving power to CNDG to conduct 2-layer audit. One by stat auditor and supplementary audit. 2 test audit if required. Clear? So that's it. Then how to do audit against rules and orders. How to do audit against rules and orders. Little bit detailed information is given. With this, the chapter is over. Almost every topic I touched. I didn't ignore even a single topic in government audit. So understood now an idea about what government audit is mainly aimed at. It is not about giving opinion on financial statements. Government audit is completely what government audit comprises. In that, government company audit is only a very small limited element. Understood? So the audit of government is completely different context. And that is not something performed by chartered accountants. That is something performed by IAS officers and their team members, audit boards. You know, once audit report of governments is completed, this report will be submitted in the parliament. And there will be financial standing committees in the parliament. Like Committee on Estimates Committee, Committee on Public Undertakings, Public Accountants Committee. Like this, 3 committees were there in financial standing committees. These committees will consist of member of parliaments from Lok Sabha and Rajya Sabha. These people will evaluate CNDG reports and give recommendations to CNDG what plan of action they have to take. So this is the next process after audit of CNDG. This you have in CA final slightly. So there you can discuss, there you can understand little more in depth. Understood or not? Easy. That's it. So almost we spent 40 minutes on government audit. I hope you might have got a different idea on what this exactly the chapter deals with. That's it.